Hi everyone, hope you're doing well. Kartik Sir here. We are presenting to you the CA Inter Audit Marathon. In this, we have covered all the chapters in order in a very smooth manner. What you need to do is see a chapter, open our notes and the textbook, and just go through it in a proper manner so that you are very sure about that chapter. Do that with each chapter, and I can promise you that you will score excellent marks in the examination. Also, my dear students, please ensure that whenever you are seeing the chapter, if you like the video and you like the way the things have been presented, please comment in the comment section below and also like the video. Also, if you have any query regarding any matter, feel free to message me on Instagram on my Insta ID, that is ca.kartik.iyer, ca.kartik.iyer. All your queries will get solved there. Okay. Score very well in audit. I always believe audit is an extremely scoring subject. One of my students in the last exam scored 91 marks in audit. So you can understand it's a highly scoring subject. Okay, I don't believe the fact that the world tells audit is difficult, audit is this, that, whatever. They abuse the subject in a way. But I can be sure that if you do audit in a very organized, clear-cut manner without leaving a single concept or area in option, you will score extremely good marks. Also, for many of the areas, we have provided an extra benefit where we are providing our video lecture link also, where what you can do is, I have told in the video, please see this, where some extra probable questions in the exam I have put as a separate video in the link below. So you can see that with this video when you watch the marathon. I wish you all the very best. Study very, very well. Score your best marks in auditing. Take care. Bye-bye. Okay, everyone, we are now going to start with the basic concepts of auditing revision of this area. Let's start. We have done something called as BD1A, base diagram 1A. What did we see in this? First, the auditor starts his journey at 0%. Auditor's dream is to reach 100%. You know this very well. It is called as the absolute assurance level. But this is the level that the auditor may not reach. Why cannot reach? Because it is very impractical. It is very impractical. So the auditor has to understand that there are a lot of inherent limitations in auditing. Because of this, the auditor compromises and tries to reach a level which is called as the RA level, reasonable assurance level. Okay. Now, what are the various inherent limitations of auditing we had done in the class? That was the fraud uncle story. Let's revise the story quickly. Tell me first is in relation to fraud uncle story, that first you are studying financial reporting in the night, and the financial reporting, after studying, you pick up the next subject, which is audit. When you take up auditing, are you done with completing auditing studies? The answer is no. So what do? You then go to sleep. And then when you sleep at night 2 a.m., the doorbell rings. The doorbell rings, you first look at the time. The time is 3 a.m. So you slowly come out of the room and open the door. When the door you open, you see that there is an uncle who you know. The uncle is about to get into the house. The door hits the suitcase falls down, and the suitcase opens. In that you can see cash. You ask uncle, what is this? Uncle tells, I have done fraud, police is investigating. So now you have to hide the uncle inside the house. So you put him inside the washing machine and you tell, see, right now it is 2 o'clock. I'll open the door at 8 o'clock in the morning. Let's connect the story with the points. Go for it, tell me. First, you study financial reporting. So the first point is nature of financial reporting is such that it involves management, judgment. Second, you do your audit studies. So nature of audit procedure is such that auditor does not test all the transaction. You don't complete your studies, but you go to sleep. That is, complete information is not available. Ding tong, you look at the timeliness of financial reporting. Then after that, the door hits the suitcase falls down, and you can see cash. Cash will connect with cost benefit analysis. Then uncle says, I have done fraud. Police is investigating. And you tell the uncle, you hide inside the washing machine. I'll open the door at 8 a.m. in the morning. This is called future events and conditions. Are you guys there with me? Yes or no? Comfortable? Next, after that, we are done understanding the entity and its environment, that which we call it as UEE. When the auditor is at 0%, my dear students, we'll do UEE and we'll also do UAE. These two things we do. Okay. What is UEE? We had done a code called a reoffense. Let's go for it one by one. Complete focus on the screen. First, A. A is called AFRF. AFRF means Applicable Financial Reporting Framework, which nothing but means the current financial statement format. In India, the format is normally Schedule 3 plus AS. AS is applicable to all companies doing business in India, but Schedule 3 is applicable to all companies except bingo. Banking companies, insurance companies, companies in the business of generation or supply of electricity, and other companies as may be specified. Are you there with me, yes or no? Now you understand that AFRF is the first thing that the auditor will check. Second is RNI. RNI is regulatory and industry factors. So inside that, what all things you will check? What are the examples of that? Go for it. Tell me. That is your TREC. Technological development, regulations, energy supply and cost, competitive environment in which you will check product, price, demand, capacity, cyclical and seasonal activity, customer supplier relationship will mainly check the contract. After that, we have done your objectives and strategies. In that, what all will the auditor check? Business expansion, industry development, new products. Business expansion, that is what the management is thinking. Auditor will think negatively that there can be a risk of demand not properly estimated. Management is talking about industry development. Auditor will think from lack of personnel and expertise. Management is thinking from new products and services. Auditor will think negatively from the angle that it can lead to product liability. Let's go to the next area, that is called financial performance. In that we see KBC finance, key performance indicators, budgets or forecast, credit rating agency reports, and financial performance analysis. Okay. After that, we're looking at N. N is nothing but nature of the entity. Two parts, that is types and examples. In types, we have suit in structure and the way it is financed, operations, ownership, types of investments. And then after that, we have examples. That is nothing but do the action. Tell me, financing, business operations, financial reporting. Inside that, we have investments. Perfect. From S, we have selection and application of accounting policies. Perfect to understand this area. After that, we go into the next area, that is UAE, that is understanding the automated environment. We are done in the class 3+3+3. Information system purpose, version, location, architecture, interface, in-house versus packaged, outsourced, key person, CIO, CISO. CIO is Chief Information Officer. CISO is Chief Information Security Officer. Simple. After that, we went into the next area, that is called as internal control. We did two examples in the class regarding internal control regarding salary and inventory. We have done this. In this first area, what is the definition of internal control? It is a process that is designed, implemented, maintained by the TCWG management employees to obtain a reasonable assurance about FOLA, financial reporting reliability, operations effectiveness and efficiency, legal compliance, asset safeguarding. Are you there with me, yes or no? Next, how will you understand the internal controls given by the management? So this is the answer at the top. This is, you will evaluate the design of controls, you will trace the transaction, you will do observation, inquiry, inspection, and operating effectiveness. If you do this, anything that you understand in life, you will get the benefits of it. So if you understand internal controls, you will get the benefits of understanding internal controls. How do you understand? What are the benefits of understanding internal controls? Tell me. You'll identify the potential misstatements, identify the chance of big accounting mistakes happening, that is the risk of material misstatement factors, and you will design the nature, timing, extent of further audit procedure. Sir, are internal controls foolproof or do they also have limitations? The answer is yes, they do have limitations. What are the limitations in internal control? Let's go for it. Tell me. Internal control can only provide you reasonable assurance, not absolute assurance. Lack of understanding, if it is there, the internal control is a big problem. Then human judgment, management judgment can go wrong. Then small entities problem is less number of employees will be working in the small entities. So one employee will be handling the entire process, hence chance of fraud becomes more. And in big entities, many employees can come together, do collusion and do fraud. This is what we had seen yesterday. Yes or no? Comfortable? That completes this part here. This is regarding limitations of internal control. Comfortable till here? Okay. That completes this part. This completes your BD1A. The center answer which is there, this will get covered later when I teach you chapter number 3. This will be covered later. Okay. So let's go further. Let's start. Let's see this. Now let's go to BD1B. In that, what did you do? The basics stay the same, but I'll repeat the basics always because basics form the core of the subject. Let's start please here. Auditor starts his journey at 0%. Auditor's dream is to reach 100%. 100% is called as the absolute assurance level. Auditor, because of inherent limitations, will not be able to check few things. We already saw fraud uncle story. Hence, the auditor compromises to reach a level which is called RA level. Now, only after reaching this level, the auditor will give his audit report. So basically, auditing is nothing but a journey where the auditor starts gathering sufficient appropriate audit evidence so that he can reach the RA level. And after reaching the RA level, the auditor will give the audit report. That is basically what we are seeing. When the auditor is at 0%, he will do UEE, that is reoffense. We have already seen this. Auditor will do UAE, that is understanding of the automated environment. Already we have seen this. This is 3 plus 3 plus 3. Auditor, now when he's at 0%, he will see whether the management has controls in place or not. So the management of the company will provide the internal controls. The auditor will check the internal controls to see whether they are working properly or not. Checking of the internal controls work that the auditor does, that is called as test of controls. I again repeat, internal controls are set by the management, they are checked by the auditor. Internal controls are set by the management, they are checked by the auditor. So auditor will do test of controls. One more term for that is called compliance procedures. Compliance procedures. Next. The auditor will reach some level of satisfaction after doing test of controls. Now, after that, the hard work that the auditor himself does is called substantive procedures. Substantive procedures are divided into two parts. When you do shortcuts, that is called substantive analytical procedures. This involves checking ratios and trends or any kind of shortcut, which we'll focus next in chapter number 4 when you do 4.2. That time we'll discuss this in more detail. Okay. Second is we have something called as TOD, that is called test of details. Test of details is the genuine hard work that the auditor does. Examples, invoice checking, observing the inventory count, reading the land agreements, all this come under test of details. Whether you do test of details, whether you do substantive analytical procedures, whether you do both, in the end, the auditor has to gather sufficient appropriate audit evidence regarding transaction account balances disclosure so that he can reach the R level. I repeat, auditor has to gather sufficient appropriate audit evidence regarding transaction account balance disclosure so that he can reach the RA level. What are transactions? They are nothing but details in relation, they are nothing but profit and loss account. So what are the assertions? Means what are the details regarding transaction that the auditor should check? Auditor should check the following things. Let's go for it. Tell me. Occurrence, completeness, cutoff, classification, accuracy. What are the assertions about account balances? Go for it. Tell me. Existence, rights and obligations, completeness, valuation. What are the assertions about disclosures? Go for it. Occurrence, completeness, classification, accuracy. All these information the auditor will take. With this, the auditor will hope that he reaches which level here? He reaches the RA level. Are you there with me? Yes or no? Let's go further. Let's go to BD1C. Again, basics stay the same. I'll repeat it always because they form the core. Let's start. Auditor starts his journey at 0%. 100% is the absolute assurance level. Inherent limitations are some information that the auditor may not get. Hence, the auditor compromises at the RA level. Auditor has to gather sufficient appropriate audit evidence to reach the RA level. When the auditor is at 0%, auditor will do UEE, that is reoffense. Auditor will also do UAE, that is 3 plus 3 plus 3. Auditor will then do Management will then give the internal controls. The testing of the controls that the auditor does is called a test of controls and also called as compliance procedures. With that, the auditor will derive some satisfaction regarding internal controls, which we had done in the class as college A and college B example we had done. Okay. Now, the work that the auditor himself does is called substantive procedures. Substantive procedures is the work that auditor himself does. Two parts, we already discussed this: substantive analytical procedure, test of details. Sometimes substantive analytical procedures, with that also the auditor may not reach the RA level. If the auditor does not reach the RA level, in that case the auditor just cannot give up the audit work and just go away. The auditor has to try to do alternative audit procedures. See, when the no information is going to come from the company anymore, you have to now do something creative to get the information. That is when you do alternative audit procedures. Alternate audit procedures may work, may not work. In class, we did two our basic classy examples. First was in relation to flood in Chennai, that example, and second was the Kashmir go down example, in which we thought what are the various alternative audit procedures we can do. This may work, may not work. If it works, we will reach the RA level. If it does not work, then in that case, we will see BD1E. Okay, so that we'll see it. Okay, this is your BD1E, this diagram. Okay. Let's go to the next diagram, that is BD1D, important one according to me, very, very important. Everything stays the same, 0%. Dream is to reach the AA level because of internal limitation. We'll only dream of we'll only reach the R level. Auditor, when it's at 0%, he'll do UEE, then he'll do UAE, you know the drill. Auditor will do the test of controls, he'll do the compliance procedures. Now the fun starts regarding your PD1D. Let's start. Now look here, see. Auditor, in this case, after reaching certain level of satisfaction from the test of controls, auditor is now doing the substantive procedures. In that, the auditor will gather the audit evidence one by one, and there is a possibility that the auditor feels stuck. If the auditor gets stuck, it means there is some misstatement there. If some misstatement is there, then the auditor has to get to the root cause of the matter. So auditor will first take out a paper and write down all the misstatement that he can identify. That is called identifying and assessing the risk of material misstatement. This is the process that he does under a standard called, very important standard called 315. If you ask me, which is the most important standard in the entire syllabus, I have two in mind, 315 and 570. 315 you will learn in depth in final. 570 is there in inter only. Chapter 7 it will come. Very good standard. To understand, in this case, you have the line goes up as 315. That is SA 315, identifying and assessing risk of material misstatement. When I make the list, I'll give it to the management to correct it. When I ask them to evaluate the misstatement and correct it, that is your SA 450. And after that, when they correct the misstatements and then when they give it to me, when I do the procedures on that or based on the risk, I do more extra work. That is called as SA 330. That is called response to risk or further audit procedure. Further audit procedures. This is when we say in layman terms, in our example, that line comes down. Line comes down. So line goes up is SA 315, identify and assessing risk of material misstatement. SA 450 is evaluation of misstatements, and SA 330 is response to risk, which we can call it as also the extra work that the auditor does. That is called additional audit procedures. Okay. Now, when the auditor gets the reply from the management, in our example, we had done that in TDS if 200 misstatements had been given. Suppose in this case, the management has corrected, let's say 190 and they have not corrected 10. Management corrects 190, not corrects 10, then the auditor will first ask the question, are there any uncorrected misstatements remaining? If uncorrected misstatements are there, the next question the auditor will ask is, are those 10 misstatements which are uncorrected, are they material or not? If they are if these misstatements in aggregate are crossing the materiality benchmark, then they are material misstatements. If they are not crossing the materiality benchmark, they are immaterial misstatements. So suppose if they are not material, then in that case you understand there is only misstatement. And suppose if they are material, then it is material misstatement. Material misstatement, MM. Like that, the auditor will gather the evidence. Again, some issue comes. Again, line goes up and line comes down. Auditor will gather the evidence and will finally reach the RA level. RA level is when the auditor will stand and in our diagrammatic example, auditor will look back at the journey and see in that journey does material misstatement remain or not. Various possibilities are there. Let's start. If material misstatement is not there, in that case, the auditor will, it's a good thing. Auditor will give a clean report or unqualified report or unmodified report. If material misstatements are there, but if they are there and it is not pervasive means regarding few of the areas we can pinpoint saying, oh, this is the problem, this is the problem. So everything is good except one or two areas we can pinpoint here. In that case, you understand here, if it is not pervasive, the auditor will give a qualified report. And if material misstatements are there and it is affecting a substantial proportion of the financial statement, in our layman terms, we'll say problem is spread across. Problem is there everywhere. In that case, you understand it is pervasive. In that case, we'll give adverse report or negative report. Very clear here? Okay, this is your BD1D. BD1E, the last of the main core charts, base diagrams. Let's see this. In this, everything remains the same. But we continue from that Chennai flood situation. Regarding sales, because of floods in Chennai, our sales invoices are not available from the company's side. The auditor is stuck in that line which I have marked in blue. He's stuck there. So the auditor, when he's stuck, no, he'll try to do alternative audit procedures which may work, may not work. If it works, the auditor will reach the R level and then he'll give the report after reaching the R level, the way we saw in the previous diagram. But if the auditor tries to do alternative audit procedures and if those procedures don't work, then in that case, we get locked here only. And there is this big blue circle which comes. If there's a big blue circle, then the auditor will ask the question, is there any possibility of material misstatement regarding the area about which I don't have the information? Normally the answer will be yes, because anything about which you don't know, you will always think negatively and you will feel, oh, something may be wrong there. So possibility of material misstatement, the auditor may get the answer as yes. The auditor will then think, am I only not getting the information about sales and one or two areas? It means I have received all the information except regarding sales and, let's say, electricity cost. I don't have some information. In that case, the auditor can pinpoint and say, everything I know except these two information I don't have. In that case, the matter is not pervasive. In that case, the auditor will give a qualified report. But if that big blue circle is there, the next question is possibility of material misstatement is there or not. Mostly it will be yes. Then the next question is that big blue circle getting formed in almost all the areas in the financial statement? Example, regarding sales, you can see big blue circle getting formed here. Similarly, regarding purchases here, regarding rental income, let's say electricity, let's say dividend income, let's say rental income, let's say printing stationery. Many matters, the big blue circle is there. In that case, the auditor will say that so many areas I don't know, I'm not in a position only to give an opinion. So because the matter is pervasive, the auditor will say that the auditor will not give an opinion. It's called disclaimer of opinion. One more term for that is called no opinion report. This is how the base diagrams will work. Whenever the auditor gives, look here, qualified opinion or adverse opinion as per the previous chart. Here, the star is here, see, star is here, star is here. In that case, this gets covered in SS 705 modified opinion. In this chart, whenever the auditor gives a qualified opinion, see another star is here, qualified opinion, or a disclaimer of opinion if he gives, then in that case, these four reports, if the auditor gives any one report out of these four reports, we say that the auditor is giving a report as per SS 705, that is called modified report or modified opinion. This is how the base diagrams work. Comfortable till here? Yeah, I complete this. Okay, everyone, let's start with chapter number 1 revision. That is basically nature, objective, and scope of auditing. Let's start. This area has 13 plus 5, that is in total, there are 18 questions here. Let's start with question number 1. Question number 1 is the meaning of the term audit. Audit is what? Audit is an independent examination of any entity, whether that entity is profit oriented or not, with an objective to express an opinion. In that case, you have to remember that auditor has to be an independent person. He cannot be dependent on the company. Only if he is independent, he'll be able to give the right opinion. You have to do you can do the audit of any entity, be it profit oriented or not. Why not? Because even for not for profit entities, because money is involved, if you get the audit done, it is better. Okay. And finally, auditor's main goal is to express an opinion. You know it very well. Auditor's main goal is to reach the R level, and after reaching there, to give an opinion of his in the audit report. Easy. This question number 1 for us, meaning of audit. Where has audit originated from? So auditing can be traced back to Kautilya's Arthashastra in the 4th century BC. This can come in MCQs, be careful. Auditor originates, again, one more thing, see, from the Latin word audire. Again, it can come in MCQs, meaning to hear. Audire means to hear. To hear means in medieval times, the auditor used to hear the accounts read out to him. So this is medieval times. Can we clear to understand this part here? Okay. Tell me whether auditing is mandatory or voluntary. So look, let's see this. Audit is mandatory for all companies. For companies, auditing can be mandatory for non-corporates under tax laws if their income is crossing a certain threshold limit. So this comes under the category of 44AB of Income Tax Act, that is tax audit. Audit may be required for schools, colleges if they need any kind of grants from the government. Government will not give them the grant directly only. They have to prove that they deserve that grant. Okay, so for that they have to get it audited. Next, many organizations may voluntarily get their accounts audited for receiving the benefits of auditing the accounts. Example, one of the most common benefits is that if you get the accounts audited, then the bank will easily give you the loan. That is one of the advantages here. Your controls will be more in place. That is again an advantage here. Okay, that is basically this part. These are question number 1, 2, 3. Tell me the first 3 questions first, then we'll go to the 4th one. The first question is what? Meaning of audit. Question number 2 is whether it is question number 3 is mandatory or voluntary. Question number 2 is origination of auditing. Okay. Let's go to question number 4. That is qualities of an auditor. Qualities of an auditor, you can see here Trick C, D, E, F, G, J, P. Tell me, T is what? Tact. R is auditor should have reliability, he should have integrity, he should have caution, he should have clear-headedness, discretion, firmness, good temper, judgment, patience. Trick C, D, E, F, G, J, P. Auditor should have qualities of a good businessman. Auditor should have the thought, that is culture of attaining the heights, culture of attaining good heights. Auditor should have IITNT, that is basically your integrity, independence, trust, and training, means he should keep himself updated. And last, auditors, accounting knowledge of the auditor is sine qua non. Sine qua non means extremely necessary. Okay, and we go ahead now. This is question number 4 for us. Let's do question number 5. Very simple. Who appoints the auditor? So in the case of companies, that is non-government companies, members in the AGM appoint the auditor. In the case of government companies, C and AG appoints the auditor. In partnership firm and LLP, partners appoint the auditor, and as per any law, the government may appoint the auditor if the law permits. Easy to understand this part here. This is question number 5. Let's go to question number 6. Let's do this. To whom is the auditor's report submitted to? In the case of companies, you report to the members. In the case of partnership firm and LLP, you report to the partners. Comfortable till here? Okay. Let's go to the next area, that is in relation to relationship of auditing with other disciplines. Auditing has relationship with disciplines. Very simple for us. Tell me, foundation subjects, stats and maths, accounting, law, economics. In CA Inter, you come across FM, that is financial management. Then during articleship, I told you will meet weird people who will have different behaviors. So behavioral science. Then after that, you become a CA after clearing CA final. Then after that, you work in the finance department of a data processing company. And of course, you remember the point of production. Okay, so don't write that our meaning in the examination. Go for it, tell me. Auditing has relationship with what? With stats and maths, accounts, law, economics, financial management, behavioral science, data processing, and production. Are you there with me, yes or no? This for us, my dear students, question number 7. Let's till here which questions are there. Go for it. Question number 1, meaning. Question number 2, tell me. That is basically in relation, tell me. Origination of auditing, that is 4th century Kautilya's Arthashastra, that part. Question number 3, mandatory or voluntary. Question number 4, qualities of an auditor. Question number 5, who appoints the auditor. Question number 6, to whom is the auditor report submitted to. And question number 7 is relationship. Easy. Question number 8, our favorite dear question is inherent limitation. Inherent limitation, that is fraud uncle story. Go for it, tell me. First, nature of financial reporting is such that it involves management judgment. Nature of audit process is such that auditor does not test all the transactions. So those two are covered here. As you can see, auditor does not test all the transactions. Point number 3, then in that case we saw complete information may not be available. Then ting tong, timeliness of financial reporting is covered here. You can see timeliness of financial reporting. Then the door hits the suitcase falls down, and the suitcase opens. So in that case we have the cost benefit analysis, which is covered here. Cost of obtaining it. Easy to understand. Then uncle says, I have done fraud, police is investigating. So you have fraud and police is investigating. And finally you have future events and conditions. Future events and conditions. Easy to understand this part here. Can we go with the story? Tell me, what is the story? Please tell me. First, you are studying at night. With subject financial reporting. Are you in that case you see the management judgments, and after that you study audit. And audit, are you able to complete it? The answer is no. So complete information is not available. Do you go to sleep? Yes. At what time? 2 o'clock in the night. Ting tong, who is there? Uncle? No. But before that you look at the timeliness of financial reporting. You slowly come out of the room, open the door, and outside the door you see it is an uncle. Uncle means this uncle you know. You allow the uncle to come inside, the door hits the suitcase falls down, and you can see cash. Cash will connect with cost benefit analysis. Uncle says, I have done fraud. Police is investigating. You put uncle inside the washing machine, and from outside you do 8 o'clock. 8 o'clock is what? Future events and conditions. Comfortable to understand this part here? Easy. Can we go ahead now? Question number 9. What are the objectives of audit? What are the objectives of audit? Very simple. Auditor's main objective is to reach the reasonable assurance level, which is a high level of assurance. And after reaching that level, to report as per the standards on auditing. This is question number 9. As simple as that. Easy. Question number 10. Scope of audit includes what? Question number 11. Scope of audit does not include what? First, let's do it includes what? Let's see this. Sir, financial statements cover all aspects of auditing. Should cover all aspects of auditing. Auditing should cover all aspects of the financial statement. So we should check all the major areas of the financial statement properly. We should check, the auditor should check whether financial statements has reliability and sufficiency with the underlying data. Underlying data is called as the books of account. Next. Financial statement should have proper disclosure regarding something which we did in the class called Masum Stat. Masum Stat. M is something called management judgment. A is accounting policy. A is adequate. SUM is summarized. Let's summarize. I gave you that example of me and my friend Presti writing example in school. He played a prank on me. And last is status or statutory requirements. Statutory requirements. Are we there together? Yes or no? That completes this part here. Okay. So this is basically scope of audit includes what? This is question number 10 for us. Let's go to question number 11. Scope of audit does not include what? So in this what we had seen, sir, scope of audit does not include anything that is out of the auditor's competence that the auditor is not expected to perform in his duties. I give you the example that a building's life, a real life of the building, the auditor will never be able to say that. For that, you need a civil engineer. We are not competent to give the real life of the building. Are you guys there with me? Yes or no? Next, the auditor is not an expert in authentication of document. I told Gandhiji has hair or doesn't have hair in the notes. It is not our job to say whether note is real or not real. Correct? No. You understand here that these documents, whether they're original or not, that is not my job to check. Okay. Last, auditing is not an official investigation. Tell me, why auditing is not an investigation? Please tell me why. In investigation, you try to reach the AA level. In auditing, you reach the R level. Why you can only reach the R level? Because in auditing, you have less time. In investigation, you have time. Lot of time is there, so you can investigate till the 100% assurance level. So auditing, you only obtain RA level. Investigation, you do critical examination with a special purpose. This for us, my dear students, is question number 11. Okay. Let's go to question number 12. Very, very simple question for us. Sir, auditor has to satisfy himself regarding which matters. First, whether books of account proper entries are passed or not, whether books of accounts are providing sufficient appropriate audit evidence, and there should be no omission in the books of accounts. First three. Next, financial statement should give a true and fair view of the state of the affairs of the company. Financial statement should be clear and without confusion, which is called as unambiguous. Financial statement should be clear and unambiguous. And financial statement should comply with the accounting standards, have conformity with the accounting standards. Are you there with me? Yes or no? Simple. 3 points on books of accounts, 3 points on financial state. Comfortable? Let's go further. We are now doing question number 13. Question number 13, you know very well. I know very well. Let's start. We are doing now what are the benefits of auditing. Let's sing the song. Let's start. 1, 2, 3, start. Safeguard financial interest. Detects fraud or errors relied by banks for credit decisions. High quality information. Gives confidence to users, controls, moral check on employees, determining tax liabilities. तेरी बाहों में मर जाए हम. So, meaning is, first benefit of auditing is that it is safeguarding the shareholders' financial interest. Shareholders' money is protected. Auditor is telling the truth regarding how the company is using the money. It helps to detect fraud or error in accounts. It helps the bank can rely on the auditing work done by the auditor for whatever loan related decisions that they are taking. The bank wants to give a loan. One of the first conditions they put on the company is that it should be audited. Next, high quality information will be there in the financial statement, which will give confidence to users. So because of auditing, auditor will point out the mistakes, and because of which financial statements are better, they are giving high quality information, which gives confidence to the users, means the shareholders and others who are reading the company's financial statements. The controls in the company are better because the auditor is pointing out the mistakes in the controls. Moral check on employees. Moral check means any employees who is tempted to do any kind of fraud will stop himself and tell himself that if I do the fraud and if that comes in the auditor's sample checking, then that employee's career is gone. So you understand it? That's called moral check on the employees. And finally, it helps to determine the tax liabilities. If in audit, you come to know the correct profit figure. Because of the profit only, the tax amount will be correct. So it helps to determine the tax liability. And of course, you should not write in the exam, "Teri baahon mein mar jaye hum." You should not write. Correct? No. Okay. That completes our question number 13. Question number 13. Let's take a look till here. 13 questions. Go for it. Tell me. Question number 1, the meaning of audit. Question number 2, origination of auditing. Question number 3, auditing is mandatory or voluntary. Question number 4, qualities of an auditor. Question number 5, who appoints auditor? Question number 6, to whom is auditor report submitted to? Correct. That is question number 6. Question number 7, relationship. Question number 8, inherent limitation. Question number 9, overall objectives. Question number 10, scope of audit includes what? Question number 11, scope of audit excludes what? Or scope of audit does not include what? Question number 12, auditor has to satisfy himself regarding which matters. Question number 13, benefits of auditing, which is our song. First 13 questions done. Next 5. We always tell the chapter as 13 plus 5. Break it into 2 parts. Next, what is the meaning of assurance engagements? This is what we had done. So meaning of assurance engagements. Assurance engagement means basically we are providing assurance by doing evaluation, mainly by taking the subject matter and checking with the criteria, which we had seen. Okay. Next, we are done in this. What are the elements of an assurance engagement? We have done this diagram, if you remember. So there are 3 parties to it: responsible party, practitioner, and the intended user. Responsible party will give the subject matter, that is the financial statements, to the practitioner. Practitioner will check this subject matter against a criteria. In normally for financial statement, we check with AFRF. If it is in relation to controls, it will be control operations is the subject matter, and we'll check with the design and implementation of the policy of controls. So you will take the subject matter from the responsible party and check it against the suitable criteria and see whether it is matching or not. For that, the practitioner will do what? He'll gather sufficient appropriate evidence, and he will give something called as a written assurance report in an appropriate form. This will be used by the intended users. This report will be used by the intended users to take out confident decisions. Are we there together? Yes or no? Tell me. Assurance engagement umbrella. Assurance engagement umbrella covers 3 things: audit, review, assurance. Tell me. Audit, review, assurance. Let's go one by one. Audit. In audit, you try to reach the RA level. After reaching the RA level, you give a report on the financial statements. For that, you are using something called as standards on auditing. Standards on the so you give the report here, audit report you give after reaching the RA level. In review, what you're doing is you're not trying to reach the RA level because time is not there. You'll try to reach the LA level, that is called limited assurance level. After that, you give something called as a review report, which is normally called as the examiner's report, basically. Give an examiner's report. After that, you have something called as assurance. In assurance, you try to do the work using standards on assurance engagements. And after that, you give something called as an assurance report. Whether you do audit, whether you do review, whether you do assurance, common is that there are always 3 parties. Party which gives the information, responsible party, party which checks the information, practitioner, party which uses the information, that is called as intended users. Are we there together? Yes or no? Simple, easy. Now these are the elements of assurance engagement. And then question number, this we completed, question number 14, 15. Let's go to question number 16. 16 is basically in relation to, please tell me. In relation to, you will have the audit versus review diagram that we have here. Okay. So what is audit? What is review? Let's go for it, please. Here. In audit, you try to reach RA level. In review, you try to reach the LA level. For reaching the RA level, you have to do a lot of work to reach here. So that is elaborate and extensive procedures that you do. And RA level is a high level of assurance. Okay. One of the examples here is that checking of the financial statement is what we do in auditing. When we reach RA level, we draw reasonable conclusions. Let's go to limited assurance piece here. For reaching LA level, in that case, it is a moderate level of assurance, not as good as RA level. And in this case, we do fewer procedures to reach this level. And after reaching this level, we draw limited conclusions. Example can be checking of the internal financial statements of the entity. Are we there together? Yes or no? Next question. Why are standards needed? Let's go for it. Tell me, why are standards needed? So standards are needed for which purpose? So we see here, let's see this. So we saw a code called Budapa. Okay, first is the standards help us to give us a benchmark. So benchmark is there in place. Second, it helps to create uniformity as audit of financial statement is carried out. Following these standards, all the auditors will follow the same approach. So it helps to develop uniformity in the professional sphere in which we work. Next is you have a D, that is users can make diligent, means proper decisions because the checking is done as per standards. Next, you have audit quality will be ensured because you are using good benchmarks here. And last is professional accountants with professional knowledge and skill will get professional knowledge and skill because they are using the standards here. It is the best practices that they are following. Okay. Last but not the least, question number 18 in this chapter. Last question. That is duties in relation to engagement and quality control standards. So in this case, what they have given, very simple area. Auditor should follow the standards normally, but if the auditor is going away from the standard, they've used a nice word here called departure. If the auditor is going away, is not following the standard, there can be a situation. The auditor has to ensure that the reason for departure is properly disclosed. Reason for departure is properly disclosed in his audit report. Easy. This completes your 18 questions here. Let's go 1 to 18 perfectly in order. Go for it. Tell me meaning of audit. Then second, please tell me that origination of auditing. Question number 3, mandatory or voluntary. Question number 4, qualities. Question number 5, who appoints the auditor. Question number 6, to whom is the auditor report submitted to. Question number 7, relationship of auditing with various disciplines. That was a sale diagram. Okay. Question number 8, inherent limitations. Question number 9, overall objectives of the auditor. Question number 10, scope of audit includes what? Question number 11, scope of audit does not include what? Question number 12, auditor has to satisfy himself regarding which matters. Question number 13 will be your benefits of auditing, our song. Question number 14, which is 13 plus 5. Now we're entering 14 now. Meaning of assurance engagement. Question number 15, elements of assurance engagement. So very easy to remember, no? 14, 15. Meaning of assurance engagement, elements of assurance engagement. Question number 16. 16 comes to audit versus review. Question number 17, why are standards needed? Budapa was a code. And question number 18 for us, my dear students, is duties in relation to engagement and quality control standard. Comfortable? That completes our revision in relation to chapter number 1, nature, scope, and objective. Okay, we are now going to start with chapter number 2, audit strategy, audit planning, audit program. Super simple, super scoring chapter, comes very often in the examination for good chunk of marks. Let's do it. This has very simple 8 plus 8. Audit strategy, audit planning, 8 questions. Audit program, 8 questions. You master 8 plus 8. This chapter is in your control, fully in your control. Okay, you will not lose a single mark in this chapter. Okay. So let's see this. Let's go for it. We are now doing question number 1, benefits of planning. Very simple. So planning helps us to focus on important areas, helps us to resolve potential problems. It helps us in selecting the correct kind of engagement team members, keeping in mind their competence and capability. That it helps us to coordinate between the various persons who we have to deal with, like experts, internal auditor. It can be our EQCR, engagement quality control reviewer. It can be various persons. Next is, if I have the plan in mind, it is easier for me to give direction, supervision, review to my juniors, and the work in general will be more organized and managed. Question number 1, we have wrapped up. Let's go to question number 2. Planning is a continuous and iterative process, because of which reasons we have a code called E-UMR. Sir, if experts are involved because the business is complex, and in that case, if expert changes the plan, we have to accordingly modify our plan. The legal and regulatory framework, we have to keep an eye on that also. If law changes, maybe the way in which we do the audit may also change. So materiality, we have to always keep an eye there, because sir, if line goes up, then in that case 315 happens. We have to bring it down 330. In that case, performance materiality will also go down. So the amount of work that we have to do will also increase. Okay. Next, analytical procedures, you know very well. Analytical procedures can be done at the planning phase, testing phase, completion phase. Wherever we feel that things are not proper, we may have to do extra work, which is indicated. Things may not be proper because it is indicated by ratios, trends, pie charts, graphs, or any kind of other analytical procedures. Last, risk assessment procedures will include your favorite answer in the world, understanding of the entity and its environment, that is REOFINS, not REOFINS, AFRF, regulatory industry factors, object design strategies, financial performance, nature of the entity, selection and application of accounting policies. This is your BD1A for us, base diagram 1A. And finally, we have internal control. Internal control. Next area. Involvement of engagement partner and other key members in planning should be there, so that they will share their insights and experience. Thereby, it will enhance the effectiveness and efficiency of the planning process. You are planning your further studies. In that case, you will have a word with your parents so that they can share their perspective to you. Next is, you will discuss the elements of your planning with the management of the company, so that they can give you again some advice regarding how you can complete the audit in a better manner. Okay. This is question number 2. Question number 3, the big elephant of chapter number 2 is this. Okay. Let's start. Planning process. Planning process. Preliminary activity, planning activity. Preliminary activity has 3 points. First is acceptance and continuance of client relationship, ethical requirements including independence and engagement letter. Planning activities has it's an ocean. So first we do in that 2 areas. First is your establishing overall audit strategy, establishing the audit plan. In establishing overall audit strategy, again 2, overall audit strategy and factors to be kept in mind while establishing overall audit strategy. Factors to be kept in mind has 5 points within that. First is preliminary engagement activities in relation to audit strategy. Second is professional judgment. Third is ascertaining the resources. Preliminary engagement, characteristics of the engagement, professional judgment, ascertaining the resources, and the 5th one will be reporting objectives. This is how we cover it. Okay, big area. Let's start with it one by one. We enter preliminary engagement activity in that 3. Acceptance and continuance of client relationship. In that, we obtain information before accepting and continuing the engagement. We check the client's integrity of the principal owners and key management. And also we check the implication of matters that have arisen in the current or in the previous audits. We look at the competence of our team and we communicate with the predecessor auditor. Predecessor auditor, you will also see when you come to CA final, you will be doing clause 8 part 1 first schedule. Any CA who takes any audit work, he has to first communicate with the predecessor auditor as per clause 8 part 1 first schedule of the CA Act 1949. Let's go further. Evaluate compliance of ethical requirements, including independence. In this, the partner has to remain alert by observing and inquiring if there is any non-compliance with ethical requirements by the members. Non-compliance can be because of any threats to independence, any breach of the firm's independence policy, and he has to apply the safeguards or withdraw if appropriate. Whenever it comes to a decision, he has to always consult with others and take appropriate action. This is what we have done. Okay. Area number three in preliminary engagement activities was engagement letter. Very simple. If a contract is there, it is useful because an engagement letter or the contract between the auditor and the client will help avoid any kind of misunderstanding, and there will be absolutely no confusion regarding the fees to be paid, work to be done, what is the AFRF. All things will be very, very clear. Okay. We go to the next area, the ocean. The ocean is what? The planning process. So now we get into planning process. So we had planning activities. So we had planning process, preliminary engagement activities, planning activities. Planning activities has this chart. In that we have first establishing overall audit strategy and developing an audit plan. In establishing overall strategy, as I told you, overall audit strategy and factors to be kept in mind regarding the audit strategy. These are the two areas. Overall audit strategy, we did a very nice one, very simple area. First is, sir, how many people to take in our team, amount of resources, what areas they will check, specific audit areas, when they will check, when to deploy, how as a senior we will do. Mahendra Singh Dhoni, if you remember, was managed, supervised, directed, MSD, managed, supervised, directed. Next was factors to be taken into consideration by auditor for establishing audit strategy was a preliminary engagement activity. First, whatever knowledge we have gained till now in our audit work, the partner will use that. You look at the previous audit results of the client. You look at the client's internal controls, operating effectiveness, deficiency, and any actions to be taken by the management. And finally, the partner needs to have a questioning mind. So he should have professional skepticism quality inside him. Professional skepticism, you know very well, is quack. Questioning mind, alert to conditions in relation to error or fraud, and critical assessment of the audit evidence. Let's go further. Categories of engagement, we had ABS, APS, AFRF, business segments, audit evidence obtained in previous audits, and specific reporting requirements. With that, we'll define our scope, and hence we'll have the audit strategy with us. Next one, professional judgments. Let's do this. So regarding which matter will the auditor have professional judgment? Very, very simple. We'll look at the volume of transaction to be checked, but we'll decide that keeping in mind the internal controls. Auditor will look at three significant things: significant industry development, significant recent development, and significant changes in FR, financial reporting framework. You'll ascertain the nature, time, and extent of resources. So if RMM is high, we'll appoint more experienced team members and we'll give them more time to check. Finally, we have reporting objectives. I told you, 4 in relation to management and 2 in relation to the team members. First, we'll do the 2 in relation to team members. Communication with team members regarding what work is to be done, when it is to be done, nature and timing of the team meetings and reviews we'll take. Okay. To give the work, team meetings. To check whether the work is done properly, reviews. Next is with the management, we'll have reporting objectives which are 4. Management will be concerned and they will discuss the audit work with us to know the nature, time, and extent, and the status, how much is pending, how much is done. And timetable for reporting and type of reporting is also very, very important. What type of report is expected when? Because a person may be doing quarterly review also and at the year-end audit also. So both becomes very, very important to give a timetable about that. Okay. Finally, we have developing an audit plan. The second area, risk assessment procedures, nature, time, and extent, further audit procedures, nature, time, and extent, and other audit procedures complying with the standards on auditing. This is what the auditor will check. This completes our entire area number, question number 3, planning process. I'll repeat again. Look here, see, planning process, preliminary engagement activities, planning activities. Preliminary activities, 3, acceptance and continuance of client relationship, ethical requirements, including independence and engagement letter. Planning activities, 2, establishing overall strategy, establishing audit plan. Establishing overall strategy has 2 areas: overall strategy and factors to be kept in mind while establishing the overall strategy. Factors to be kept in mind has 5: preliminary engagement, characteristics of engagement, professional judgment, ascertaining the resources, and reporting objectives. Okay, you should know this flow. Only then in the examination, if a question comes, you'll be able to answer. And we have worked hard on this in the class properly. I've done this repetition maybe 10, 20 times in the class itself while teaching. Okay, let's go for it. Let's go further. Please here. Now we enter into the next area, that is relationship between audit strategy and audit plan. I told you like this: audit strategy and audit plan are not sequential or discrete. They are not separate. They are in fact closely interconnected with each other. Changes in one leads to changes in the other. Okay. This was question number 4 for us. Question number 5, we did this. Very simple. Audit strategy and audit plan will be the auditor's responsibility. Same thing. Okay. So we have just put this into one question only, but you don't forget. It's question number 5. Question number 6, changes to planning decision. Ucha. In this we saw changes to planning decision can happen because of Ucha. Ucha is nothing but unexpected events, changes in conditions, and audit evidence obtained in audit procedures. Okay, no, simple. In Mumbai, when I teach, they don't know Ucha, so I tell them Uncha. Uncha means height. And here, when in Bangalore, I change the code to Ucha. So it is modified for my teaching purpose. Okay, next. We do question number 7. Question number 7 is the direction, supervision, review that the auditor gives to his engagement team members depends on which factors. I don't know whether you remember, we had done a nice example in this small boy, small girl example I had given you. When the small girl goes with the mother to have soup in the restaurant, whatever instruction the mother gives, the girl will follow. But boys are not like that, they'll run here and there. So I told you who is easier to handle. The small girl is easier to handle. Small boy will be more naughty, will not be easier to handle. So the point was that if if the juniors are crazy, then these are the factors. First, competence and capability. If it is more, direction supervision review will be less. Risk compatibility statement, if it is more, DSR will be more. Area that we are checking, if it is more challenging, DSR will be more. If the entity whose audit we are doing is more having more size and complexity, the DSR will be more. That is what we had seen. Crazy. Okay. Competence, capability, risk, area, size. That was the answer. This question number 7. Last but not the least, documenting the audit plan. Super simple. You have what will you document in your own documentation? Essay 230, your audit documentation, own notes. We'll document the auditor's strategy. We'll document the audit plan. Any significant changes to audit plan or audit strategy, along with the reasons. Simple. That's simple. They have done. Look here. See. Look at the screen. I'll highlight with black so that it is easier for you to understand. Please here. From here to here, they have spoken about the audit strategy. From here to here, they have spoken about the audit plan. And from here to here, they're talking about that we can make the changes which is tailored as needed for the client. So they have just elaborated on those 3 points at the top below. Are you there with me, yes or no? Simple. This completes your question number 8. With that, we complete the first part of this chapter, audit strategy and audit planning. The next part, very, very simple, super easy. Let's start. Audit program. Next 8 questions. Let's go for it. First is the meaning. What is the audit program? It is a series of verification procedures to be applied to the financial statements. That is question number, you can take it as question number 9. Okay. Or you can, it's 1 or you can take it as 9. So if you look at this chapter as 8 plus 8, then you can take it as question number 9. Or if you're taking this part separately, you call it as 1. That is also okay. Okay. Sir, evolving one audit program is not practicable for all businesses. Why? Because of, I had to give you a code called web. Web was what? Some work which is suitable to one business may not be suitable to others. The efficiency and effectiveness of operation, internal controls will be different. And businesses vary in nature, size, and composition. Because of that, we cannot come up with one audit program. Very, very difficult. Okay. You will have to do some modification for each audit one. Question number 2. Question number 10 was this. Question number 11. An assistant to keep an open mind. You cannot go for the audit with a single program. Oh, this is only what I'll follow. You'll have to keep a flexible mind so that if anything you have to add, you can add. If anything you want to remove from the plan, from the program, you are able to remove it also. So they have said the same thing. We have to alter it to take care of the situation which was left out originally. And anything which is unnecessary or irrelevant may be dropped. We have to do that. Are you there? Next one, question number 4 in this is again similar. Question number 4 you call it, or you call it question number 12. Same thing. So let's see this periodic review of the audit program. In this periodic review, what are we seeing? We are looking at what? Periodic review basically means, sir, regularly we have to keep checking the program whether it is proper or not. If we don't do that, it means that changes in the client's entity we are not considering. So you understand here, if we don't update the program regularly, our program may become obsolete. And if the auditor follows an obsolete program, it means he is not doing the audit properly, and the auditor may be held guilty for negligence, and he may face legal consequences. This is what we saw. So while doing the audit, if you find anything excess that is redundant, remove it. If you find anything inadequate, lacking, add that element so that your audit is being done properly. Easy. Next, we enter our dear Scully story. Let's start with the Scully story first. Construction of audit program. Okay. So construction of audit program, let's go for it one by one. First is Scully. So let's see the diagram first. Let's see this. First, scope and limitation, coordinating the procedures. Giving the spiritual book was an error. So next year we want to correct our mistake. So we to put a reminder that is a written audit program. Then I told my wife that I want to give him a gift. Wife gives me instruction that you have to give Scully a Rappu gift, reasonably available and best, and steps and procedures which are useful. Okay. Next part of the story, you first call the newspaper guy to call for the newspapers, magazines to go through, children newspapers and magazines to decide which gift to give. That was our documentary examination. You go to the toy store, that is your physical examination. You obtain statement and explanations from Tommy. Tommy is third party's official management employees. Still you don't get any kind of evidence. You speak to the small girl's name is Erin. Erin was arithmetical calculation and interrelationship of various accounting data. She says, Scully school, miss you. We don't need Scully school, we need miss you. Memorandum and subsidiary records and minutes and subsequent action taken by the client. You'll have memorandum and subsidiary records, minutes and subsequent action taken by the client. And finally, you decide to give Scully an iPad. That is internal control, internal checks. Are you there with me? Yes or no? Very, very convenient. Okay, simple area. This was question number 14, or if you are taking 1 to 8 for audit program, it is question number 6. If you are taking overall for the chapter, question number 14. Okay. Let's go to the next one. We are now seeing what are the advantages of audit program. It gives you a total perspective. Selection of assistants is easier because you can choose the right assistants. Clear set of instructions can be given because you know the program properly. Mental plan should not be there. It should be a very well written audit program. In audit program, you make the juniors sign next to the work that they are supposed to do, so they accept the responsibilities. So it gives a good accountability factor there. Next is because your program there in place. If you are conducting various audits, you will know which work is happening where. That is called various audits. Any kind of negligence, if it is there, your audit program is, remember, part of your audit documentation, so you can show it in the court as a proof regarding the work that you have done. So any blame of negligence you can deal by showing your audit program. Finally, because this year you have made the program, it acts as a guide for succeeding years audit. This is what we see. Okay, very simple. That completes your advantages. Last area, my dear students, is your disadvantages. Even though the points are separate, we are connecting in our mind. I told you our audit program should be made in such a way that we are having flexibility. But if a person is there, a manager is there, audit manager is there, who is very strict with it, very Hitler like, I want to do the work this way only. In that case, there is rigid and inflexibility. That is a disadvantage. Second, if the senior is so strict with the audit program that juniors don't have any scope for creativity or doing the things as per their thought process also, then it kills the assistant's initiative. Don't forget the word initiative, otherwise the point becomes kills the assistant. So be very careful, because I've seen one paper where student have written kill the assistant only. How can that be disadvantage? Okay, so be careful. Next is no, if the person may do the work without any understanding of the object. And last is inefficient assistants may shield themselves behind the audit program. They may say, no, it is not my fault. See, audit program is wrong. They may do that. This is your question number 60 for the overall chapter, or in audit program, it is question number 8. Remember, audit strategy, audit planning, 8 questions. Audit program, 8 questions. Neat it is. 8 plus 8, 16 questions in chapter number 2. Able to understand this area? Okay, everyone, let's start with chapter number 3. We are entering into risk circuit, control circuit. That is how we did it. Okay. Now, in this, we did this risk chart basically, in which risk chart plus the other areas which were there, which basically looks like this in our chart book or in the charts. Okay. So, this is what we completed. One second. Yeah. So how does this flow? Let's start with this one by one. Completely focus on the screen, understand with me. Okay, see. The auditor has to understand three things: the entity and its environment, automate environment, and you will understand the entity on a continuous basis. What is entity and its environment? Our favorite answer, it is REOFINS. So REOFINS, what is the flow? Start. A is AFRF, RNI, regulatory and industry factors. Then you have inside that the examples are technological development, regulation, energy supply and cost, competitive environment. In that we are checking product price, demand, capacity, cyclical or seasonal activities, and customer supplier relationship. We are mainly checking the contract. O is objectives and strategies. In that we check business expansion, industry development, new products. Business expansion, there is a risk of not estimating the demand properly. Industry development, there is a risk of lack of personnel and expertise. And new products, there is a risk of product liability. FI is financial performance. In that we had KBC finance, key performance indicators, budgets and forecast, credit rating agency reports, and financial performance analysis. So that we had done N, that is nature of the entity, two areas. First is what are the activities or types, and the second is examples. Activities or types had suit in structure and the way it is financed, operations, ownership, types of investments, and the examples had finances, business operations, financial reporting, investments. And last is S, that is selection application of accounting policies. This is what we did. This is basically your understanding of the entity and its environment. Next, how do you understand the automated environment? We had done something called as 3 plus 3 plus 3. Information system purpose, version, location, architecture, interface, in-house versus packaged, outsourced, key person, CIO, CISO. Next, we did how do you understand the entity on a continuous basis? We had done our own rat and pull story. Okay, so for rat and pull story, we had the um, a girl in the class was walking by the road and she sees that there is a rat following her. That is risk of material misstatement. The rat size is not small, it is big. So materiality. She climbs up the electric pole. So accounting policies. Then her brother is having a nice special romantic walk with his wife. So that is your related party transaction or special audit consideration. Example is related party transaction, fraud, complex transactions. Wife's name is Sai. Sufficient, appropriate audit evidence evaluation of that. And finally, wife points out, isn't that your sister? So the brother goes towards the sister, asks her to climb down the electric pole. And the sister thanks the brother, says, thank you, Anna. Anna is analytical procedures, of course. Easy. It's the only Anna we know. Simple to understand this area. So we have your EUFINS 3 plus 3 plus 3. And of course, understanding the entity on its continuous basis. That is your rat and bull story. That completes our the yellow bit. Okay, let's go further. Now we go ahead into the risk part. So risk part gets covered on the right hand side of the chart. Let's do it one by one. First is what is misstatement? Very simple. How you are required to report as per AFRF and what you have actually reported. The difference in that is called misstatement. How you are required to report as per AFRF in relation to PACT. Right? We will see in your notes also. That is your presentation, amount, classification, disclosure. Again, presentation, amount, classification, disclosure. How it is required to be reported as per AFRF and how you have actually reported PACT. The difference in that is called as misstatement. That is basically written at the top here. So you can see it here. That is basically misstatement. Yeah. What are the examples of misstatement? You can see on the screen also. That is capital shown as revenue, revenue shown as capital. FS versus AFRF. Incorrect accounting policies or incorrect accounting estimates. After that, you have window dressing and secret reserve. Window dressing example can be fake debtors are shown. That is account receivables are shown in a fake manner. Inventory value, if you increase, profit will increase. Window dressing. Similarly, if inventory value is shown less, the profit will also become less. So that is secret reserve. Another example of secret reserve will be showing fake expenses, any kind of fake expenses, fake salary payment you are showing. Even that will get covered under this category. Are you there with me, yes or no? Let's go further, please here. We enter the dangerous area called as the risk chart. So let's go ahead with the risk chart. Let's do one by one in this category. Let's start. Look at the screen. So in this, how do we go about it? Start. Audit risk is equal to risk of material misstatement into detection risk. Risk of material misstatement is nothing but inherent risk into control risk. How do you think about it? Any risk which is not in your control is your inherent risk. Any risk which is in your control is called detection risk. Sorry, is called control risk. Inherent risk into control risk is called your risk of material misstatement. Simple to understand this part here. Okay. If inherent risk is high or control risk is high, or if both are high, then the RMM is high. The RMM is high. If the RMM is high, in your mind, the line should go. If the line goes up, you have to bring the line down. When you bring the line down, tell me, are you doing more hard work? The answer is yes. Are you checking or detecting more areas? The answer is yes. Is it a good thing or a bad thing? The answer is yes. It's a good thing. In that case, what they're saying is if you bring the line down, it means you're detecting more areas. If you detect more areas, the risk of not detecting something, the risk of not detecting something will be less. It's a good thing. So detection risk is the risk of not detecting something. So ideally, what does the auditor want? If the inherent risk is high or the control risk is high or if both are high, then the RMM is high. If the RMM is high, then the auditor will do the required hard work. So the detection risk will be low. If the detection risk is low, it means you are in a much better position to give your opinion. Your opinion will be more correct. Hence, the risk of giving an inappropriate audit opinion will be less. So the audit risk will also be less. This is what you're doing. Easy. So, inherent risk in simple layman language, how do you understand? When risk can only be asserted but cannot be mitigated, cannot be solved. You can only talk about it. Control risk is when controls fail to mitigate the risk. If you remember, we had done this in the class. If controls is your left hand, risk is your right hand. Regarding sales, if controls are there in place, control risk is low. And regarding, let's say, any item, inventory, if the controls are not there in place, the risk will be high. This is called control risk. This is called control risk. Simple to understand this part here. Okay. What is sampling risk? Sampling risk basically means if I take out samples and I have opinion, let's say I am giving a clean report. So I'm showing a thumbs up here which depicts clean report. But suppose if I had applied the same audit procedures on all the invoices, then I may have given a modified opinion. I would have given a modified opinion. So just because I'm checking using samples, I'm giving a clean report. But if I would have checked all the transactions, I would have given a modified opinion. This difference in opinion is called as sampling risk. This is called sampling risk. Okay, sampling risk. What is non-sampling risk? Non-sampling risk is any risk not connected with sampling. Example, management giving us the data in a erroneous manner. In that case, whether you do sampling or whether you take all transactions, your audit will not be proper. Your opinion will not be proper because the data itself is wrong. Second example, audit procedures itself are not proper. So you understand here, even if I check my samples, even if I check all transactions, in the end, my audit procedures are not all right. So my opinion will not be correct. Are you there with me, yes or no? That is how it flows. That is completes your sampling risk and non-sampling risk. Easy. Next, we have done, by the way, just to take you to the main chart, just so that your numbering is perfect. Here we did something called as, once again, here we did something called as question number 1A was misstatement definition, 1B was misstatement example. Inside the risk chart, we are doing question number 2, 3, and 4. This is question number 2, the basic theory. This is question number 3 at the top. This is question number 4. Anyone attending class will understand how the flow is very clearly. Okay. At what levels should RMM be identified? At the FS level, the RMM affecting the FS pervasively, and the assertion level, RMM affecting any TAD. TAD we know very well is transaction account balance disclosures with nothing but means P&L account, balance sheet, notes to accounts. Are we there together? Yes or no? That completes on this part. Next, question number 4. For the purpose of identifying and assessing RMM, the auditor shall do what? So in the class we had done SA 315, line goes. So for the when the line goes up, what is the procedure the auditor does? We had done a hand action, if you remember. Identify the risk at the FS level, at the assertion level. Then assess the risk. How do you assess the risk? By tracing transaction or analytical procedures, observation, inquiry, inspection, and offense. Then you ask yourself, what can go wrong? Multiple misstatement, material misstatements. Okay. So how did we do it? We see here, we identify the risk at the FS level, at the assertion level. We assess the risk. Then we ask ourselves, what can go wrong? And then after that, we had likelihood of material misstatement or multiple misstatement. When you assess the risk, you are doing this, you are using your brain, so we'll call it as analytical procedures. Near your eyes, we are doing observation. Near the mouth, we are doing inquiry. And finally, this is your inspection. So you're doing this. And finally, you can also do it by using offense, that is understanding of the entity and its environment. Simple. This completes your R1A, R1B, R2, R3, R4. That is what we complete. Okay. Let's go back to the main chart and do it quickly. Let's start. Now we go here. Let's understand whether risk is a significant risk. Kartik sir, how do we understand whether risk is a significant risk?
We are done in two ways. You can use any of the method that you want. First code is from core, and the second is the relative auntie story. Relative auntie story. First, tell me, the you are sleeping after putting that uncle into the washing machine. So now after that, at 4 a.m. someone rings the doorbell. So you come to check who it is. The light is not switched on, so you cannot see a person's face, but you see that there's a lady police officer. So she tells about fraud. So suddenly you put the light on, you see her face, and you are able to see that she is your mother's second cousin. So she is your related party. You tell auntie, why are you standing outside? Please come inside. With outside, we'll remember outside the normal course of business. That when auntie asks you about fraud, you make weird expressions. So she sees that your face measurement has changed. So that is measurement uncertainty. After that, she sees that one 500 rupee note is there and nobody's taking care of it. If you remember in that fraud uncle story, that suitcase had opened and 500 rupee note went there. So you ask auntie, what is this? So auntie tells you, auntie asks you, what is this? And you are not able to give a proper reply. So she sees there is a complex transaction. And finally, auntie goes to check in the room. You goes quickly to the washing machine and switch on the button, and uncle goes round and round. For uncle, everything is a recent development. I hope you remember the story clearly. Okay, good. That completes your next area. That is which risk is significant risk. You can also use the word from core. I'll take you through the code also. F is fraud. R is related party transaction. O is outside the normal course of business. M is measurement uncertainty. CO is complex transactions, and RE is recent developments. Simple. You can use either of them. Let's go further. Let's go to the next step, PCR. You have to identify significant risk and which is greater for non-routine transaction and greater for significant judgmental matters. We have a small diagram for that. We'll do it from there. So that is basically here. Let's do this. So significant risk is related to non-routine matters and judgmental matters. Let's do it. For non-routine matters, we had a code called M2C2. If you remember, we had a management intervention, manual intervention, complex calculation, and control not being effective. Control not being effective. That we had done something called as judgmental matters, where the judgment of the management and the auditor may go wrong. The auditor and the management have different opinions in this case. About the past, the way we interpret, the way they interpret any law or regulation can be different. That is called interpretation. And second is what you assume about the future. That is called as assumption. Called as assumption. Okay, simple. We had this question. This is also question number 6A and 6B. 6A and 6B. Finally, we had the next area called as documenting the risk. I'll show you the code. We had a code called Dusri Coco. Very easy area. So, sir, what all will you document regarding risk in our own audit documentation? First was discussions with the team members. Next is whatever decisions we took. Discussions, decisions. Understanding of the entity and its environment, whatever you understood, you will note it down. Next is source of the information. Where are we getting the information from? Risk assessment procedures that we did. That is basically, again, your analytical procedures, observation, inquiry, inspection. That is your risk assessment procedures. What are the components of internal controls that you checked? Internal control components you remember very well. Let's start. Go for it. Control environment, control activities, risk assessment, information and communication, and monitoring. This is what we have done. Excellent. Then as the 315 line goes up, and finally, what is the situation of controls in the organization? So the risk and the related controls and the related controls. We have done this area. Dusri Coco. With this, we complete the risk circuit, which is basically, let me just show you the main chart. Complete the main chart. So this is your risk circuit. We complete documenting the risk also. In terms of questions, I'll just put a tick mark 1A, 1B. Inside the risk chart, you had this as question number 2, question number 3, question number 4. This was question number 5, question number 6A, 6B, and this one is question number 7. So we had R1A to R7. Basically, that is the flow of your risk circuit. Are you there with me, Sano? Comfortable till here? Easy. Can you go ahead now? We go to control circuit now. Let's start. Control circuit is fun. Let's start. Controls meaning. What is internal control? Define. Start. Internal control is a process that is designed, implemented, maintained by the TCWG management employees to obtain a reasonable assurance about FOLA, financial reporting, reliability, operations effectiveness and efficiency, legal compliance, asset safeguarding. That is meaning. What is the purpose of internal controls? Very simple. Again, it is FOLA. Okay, so I'm not repeating it, or we'll repeat it. Financial reporting, reliability, operations, effectiveness and efficiency, legal compliance, asset safeguarding. Comfortable? Next is what are the limitations in controls? Go for it. Nice hand action. Start. Internal control can only provide you reasonable assurance, lack of understanding, human judgment, management judgment. Small boy comes running, small entities, collusion. Okay, you hug the boy. Next is, what are the components of internal control? We just did it. We'll do it once again. Tell me: control environment, control activities, risk assessment, correct? Information and communication monitoring. Comfortable till here? Okay. Let's go on to the nice chart now. Factors which are relevant to decide whether control is relevant. You cannot check all controls in the organization. So, which controls are relevant for which businesses? How will you decide that? Which factors will you keep in mind? So, that is this question number 5 in the control circuit. So, let's do this very simple area again. Let's do this part. This was basically in relation to this area. Let's start, please here. First is, we look at the business of the entity. We look at the size of the organization. That is the first two. Then we look at in the next two, complexity of systems, complexity of operations. How complex is the organization systems? How complex is their operation? Is it manual or automated? Next, we look at the internal controls, and if we look at the specific controls within that, that is specific controls. So 2 plus 2 plus 2. So that is business size, complexity of system, complexity of operations, internal controls, specific controls. Last three, that is risk, materiality, and legal and regulatory requirements. These are the areas that you see, that is 2 plus 2 plus 2 plus 3. And based on that, you decide which control is relevant, which control is not relevant for audit purpose. Easy. Then we go into a very beautiful flow. What was this flow? Look at the screen. Question number 5, we see business size, complexity of system, complexity of operations, internal controls, specific controls, risk, materiality, legal and regulatory requirements. We look at this. Based on that, we come to know the relevant controls. Now, relevant controls, what do we check? We understand the relevant controls. Kartik sir, how do we understand the relevant controls? Very simple. Evaluating the design of controls, tracing transaction, observation, inquiry, inspection, and operating effectiveness. Perfect. So we do the evaluating the design of controls, tracing transaction, observation, inquiry, inspection, operating effectiveness. This is what we check. Simple to understand this area. This was your question number 5, my dear students. This is question number 6. What are the benefits of understanding internal controls? Very simple. You will identify potential misstatements, you will identify risk of material misstatement factors, and you will design the nature, timing, extent of further audit procedures. If you have done page diagram 1A with me, you will understand that this from there. Okay. This completes that area here. Easy. So we have done this part. Next, we enter into the next part. Sir, now how will we get the data to check the controls? So we have done question number 6 here, understand. We have done benefits of understanding, question number 7. We enter question number 8, evaluation of internal controls by the auditor. Internal controls, for internal controls checking, I need the data to come to me. How will I gather the data? By doing something called as flown check, flow chart, narrative records, checklist, questionnaire. Tell me, which is the most concise way of providing the information? Flow chart. Which is the most commonly used method? Questionnaire. It is questionnaire, which provides information in graphical format. Flowchart, which is one of the most boring ways to give information, very exhaustive, too much. Narrative record. Narrative record. Okay. In which the auditor himself will take the information that, he will make his own list of questions and he'll write there yes, no, not applicable. That is called checklist. In which will the auditor give the questions to the client? The client will fill all the questions if required in detail and give it back to the auditor. That is questionnaire. Are you there with me? So this is what we have done. Flown check. Okay. Do it well. Huh? This I'm expecting. So do it well. Next, what are the benefits of evaluating internal controls? This is nothing but your Sare Jahan Se Acha song. Okay. Let's do this. This is basically this song. Let's do it. Let's see this. Sorry, let's go for it. Please hear. Benefits of evaluation of internal control to the auditor. Let's see. First is management is discharging its functions. Errors and frauds are to be located. Effective internal auditing. Adequate internal control system. Control is weak. Extent and depth of the examination. Reports, records, and the certificates. Administrative control has a bearing on his work. His work controls adequately safeguards the assets appropriate, audit technique and audit procedures, worthwhile, suggestion, सारे जहां से अच्छा, हिंदुस्तान हमारा हमारा. It goes in that flow. You will understand this area. Easy. So what have we completed till now? We have completed risk circuit, control circuit, because I told you these two questions, testing internal controls and formulating the audit program. This is the read area. You have to read the area because that concept was already covered while teaching. Okay. So chapter number 3 for us gets over here. So 3 gets wrapped up here. Okay. We move on to the next one. That is a very simple one, and that is 3.1. So let's do 3.1. Then we'll proceed ahead. Let's start. Just give me a second. Open the file, then we'll continue. Let's start. For us, we start with chapter number 3.1. 3.1, pretty simple, very, very easy area, very basic, something that can easily be completed in a quick flow. Let's start. Now, in this, what do we start? What are the 5 components of controls? Once again, third time we are doing today. Control environment, control activities, risk assessment, information and communication system. And of course, you have monitoring, checking the entire set of the other 4 components. Okay. Let's start with the first one, that is control environment. 2 areas are there. Questions can come from these 2 areas only in control environment. First is what is control environment. Second is elements of control environment. Let's do it. Let's look at the screen first. What is control environment? So you see here Mukesh Ambani ji diagram, a famous diagram here. Let's start. The TCWG, and the management, they with their attitude awareness action, they set the tone of the organization. They set the tone of the organization. That is the meaning you will write if they ask in the examination. Okay. Second, most important area, what are the elements of control environment? Let's start. Let's see this. First, TCWG is point number 1. In this, we see TCWG has to rise. Rise is what? They'll raise difficult questions on the management. They will should be involved as much as possible. Independence of TCWG from the management is very, very important. Their stature and experience should be there. Stature means reputation. If that is there, then people will listen to them very clearly. Ratan Tata ji, Mukesh Ambani ji come as shining examples in this matter. Okay, let's go further. Second is you have management's operating style. In that you have something called as BAF. In that first you have business risk. A is accounting and processing, and F is financial reporting. So the management operating style should cover BAF, business risk, accounting and processing, financial reporting. These 3 areas should be covered. Third, the TCLOG and the management should work with integrity and ethical values. So we have I and E, integrity and ethical values. They should have a team of people and they should themselves be competent. Competence should be there. In the organization, they should have a proper system of authority and responsibility, because any misbalance, if it is there, in that case, it can disturb the organization's working style. Next, human resource policies and procedures. We'll see what kind of HR policies are there. Of course, everybody wants a employee-friendly HR policy to be there. Okay. Last but not the least, we need the organization structure should be properly planned, executed, controlled, and reviewed. You must have written there PECR there, planned, executed, controlled, and reviewed. It should be there in place. Okay. This is what we see. This completes your elements of control environment. Again, I'll take you to the base answer. We just completed what is control environment, elements of control environment. Let's go to the next area. Auditors should obtain an understanding of risk assessment procedures for the following purposes. Or if you're doing the audit of a business, what are the businessman's risk? This is not auditor's own risk assessment procedures. This is the businessman's risk for running the business. You're trying to understand that. This area 3.1 internal control components is from businessman's angle. What kind of business are they running? You're thinking from that angle. So the businessman's risk, what risk is he taking? How will he understand the risk? How will the businessman understand the risk? That is what you're seeing here. If you are running a business, how will you understand your business risk? Let's go for it one by one. Look at the screen, please. Let's start. Please here. We'll identify the business risk. That is the first point. What all risks are there? All the risks will categorize into likelihood, how often it can occur, and we'll look at the significance. How big is the risk? How much damage it can do? So we'll look at the significance and the likelihood. Once we have categorized the risk properly, now we'll come up with our own actions to address the risk. So the actions to address the risk. How do you plan to address it? We'll come up with our risk assessment procedures, how to deal with it. And any procedure that you make, it can be your study procedure, risk assessment procedure, any procedure, you will only come to know whether it is proper or not only after implementing it. You implement it, doesn't work properly, again you will improve. Implement it, doesn't work properly, again you will improve. So you will come to know whether it is appropriate or not, whether it is appropriate or not only after implementing it. Are you there with me, yes or no? That completes your risk assessment. Easy. So where are we again in the main chart? We have just completed this area. So this is done, and the third one is done. We enter the next area. Very simple. Information and communication system. In that, what do we check? Very simple. We check how will you understand the information system in the organization. That is basically this here, information system. And what kind of communication is there? For that, we check this chart. We check this part here. Okay. So let's go to the main chart so you know the way it is presented. Let's understand information system here. Let's start, please, here. We'll check regarding transactions, journal entries, ledger. Very simple. You take admission in the classes. So in that case, you get a receipt. That is a transaction. The accounting person will do the journal entry. You will try to understand that. After that, there will be ledger posting. In the ledger, what will happen? These four things will happen. How the transaction is initiated, recorded, processed, corrected. Tell me, initiated, recorded, processed, corrected. Initiate means ledger posting is done, recorded at the right value. After all the ledger postings are done, when you do the totaling, that is when you find the balance of the ledger, that is called processing the ledger. And finally, when you pass the reverse entries, it is called as correcting the ledger. Initiating, recording, processing, correcting. Understand the meaning of every word. Next, you will check the accounting records. What are accounting records? Very simple. Fixed asset register, investment register, cash book also, all these, inventory register, all these will come under this category. Then you will have information system that captures the events, that is what kind of accounting software is the organization using. And finally, the financial reporting part. How is the financial reporting done? You are basically checking how the accounting is flowing from transaction to financial reporting, transaction to financial reporting. So that flow is basically what we call it as understanding. See this, understanding the information system, understanding the information system. In the exam also, in the question, they will tell you this, see, understanding of the information system. That is basically what we are doing here. Simple to understand this area. Next, how will you check the communication? For communication, they are given few areas. Let's do here. Let's see this. Let's start, please, here. Look at the screen, and communication part is covered here. Read me. Auditor shall obtain understanding of information system, and then how entity communicates the roles and responsibilities. How will I come to know whether information system is working smoothly in the organization? I will see whether each person knows their role clearly or not, whether they are able to do their role. In that case, how will the senior communicate the role to the junior? By giving something called as memo. Memo is the code. So you will see there manuals, email, management actions, or orally. They'll give a manual, procedural guidelines, step-by-step procedures they can give. They'll send by email, please do this work. They will do the action themselves and show, see, this is how it is done. And finally, they will maybe say verbally or orally how it is to be done. Okay, that is what we cover in this part. Easy, simple area, super simple. That completes your understanding of information and understanding of communication. Easy. Then go to the next part. Again, very, very easy area. Let's start with this. I'll just show you the slide here. This is basically the control activities. So regarding control activities, what all should the auditor check? So in that, control activities are what? Sir, the day-to-day control which are there in the organization are basically part of control activities. This is at the managerial level which happens. Okay, so let's see this. Managerial level means the departmental managerial level, not the top management. So let's start. First, we have a code here called, you can use a code called SPIN or you can use a code called SPAIN. Both are okay. I must have given any one of the codes to you. PAIN only we have given. Okay. So same thing. Let's go for it. First is segregation of duties. So process divided into various persons. SOD, segregation of duties. Second point is with P, we did physical controls. I don't know whether you remember the dog example. I had gone to Nagaland. There, a dog ran behind me. Not behind me means a German Shepherd was there. So now you remember. Audit, you don't remember. Dog example, all this nonsense. Everything is clear. Next is, let's go ahead. Next is performance reviews. What are performance reviews? Whether right people are promoted in the organization based on merit. That is what we're checking here. Next, you will have authorization, whether proper permission has been taken or not before doing any activity. And last is you will have something called as information processing, whether the IT systems are running properly or not. So you check something called as SPIN. Easy. These are the examples of specific control activities include those relating to the following, and that is the Spain code. Okay. Remember in the exam, specific control activities, examples, and you have to write these 5 points. That's it. So mark it as star because this you can forget. There is a tendency to forget this. Okay. Specific control activities. What are the examples? We have just completed this area. Okay. Now let's do the other few bits. So to understand this area, we do the next part of control activities. Look at that point which is written. Auditor shall obtain understanding of the following. First, control activities to assess the risk of material misstatement. A certain assertion of TAD, which auditor finds relevant. So only things which he finds relevant, auditor will check. Policies and procedures which are set by the management, he will check. And finally, activities of IT or manual system, the auditor will check. Okay. Sir, where is this part covered in our notes? Where is this part covered? This part is basically covered just above this area. So this is your D1, the Spain code, and this is your D2 basically, which is where this all parts are covered. This is what we did. Last one, last area, very simple. I show you here only monitoring of controls. So what is monitoring? Monitoring is nothing but a process to assess the effectiveness of anything. Process to assess the effectiveness of everything. Example, you guys are in your study leave right now. How do you come to know whether you're doing going as per the your timetable or not, or schedule or not? You will monitor it regularly. How much is the backlog? How much have I covered? How much I have to carry forward for the next week? You'll keep doing that. So you understand here, what are you doing? You're doing, you have a process to assess the effectiveness of your studies. So in the similar manner, what is monitoring of controls? It is nothing but, see this, process to assess the effectiveness of internal controls. Internal controls. Easy to understand this area. Monitoring can happen in two ways. First of all, for monitoring, I need information. Information can come from within me where I feel something has to be improved. I feel that. When will I feel that? When while doing the work I feel, or after doing the work I feel. While doing the work is called ongoing activities. After doing the work is called separate evaluation, or it can be a combination of the two, or it can be a combination of the two. Second, someone from outside tells me, oh, this is not the way to be done. It should be done. You're doing in the wrong manner. Example, as a student, a teacher tells you, or your parents tell you, see, you're not studying sincerely. That means somebody's complaining that you're not doing the work properly. That is basically, remember the two things. That is communication from external parties, or customer complaints are coming, or regulators' comments are there. So with this, you come to know that you need to improve. Whether you realize the mistake internally, or you come to know from outside parties, in both the cases you have to take remedial action on timely basis. Remedial action on timely basis. That is this remedial action on a timely basis. Timely basis. You have to do. Easy to understand this area. Comfortable. Where is this in our chart, sir? Sir, this is covered here. So this is covered here. Monitoring is done. That is what we covered. This completes your chapter number 3.1. So you have completed two things, 3 and 3.1. Comfortable? Now we are starting with chapter number 3.2 in our notes. We are doing something called as materiality. Okay, it's a part of chapter number 3 only. Let's start with this one by one. Okay, let's crack it down. Let's start. Let's go for it. Materiality. Let's start materiality. Materiality has in total 9 questions. Let's jot it down first. That is question number 1, question number 2, question number 3, question number 4, question number 5, question number 6, question number 7, question number 8, and question number 9. So this is basically your materiality flow. Okay. Let's start with each one of them one by one. Let's start. First, the big one. What is materiality and perform materiality? Now, you know very well, we had spent around 1.5 hours or 2 hours in the class just to understand this concept, materiality. For this one question, we had invested a lot of time. Now, let's start with materiality. What is materiality benchmark? Sir, the auditor can have a materiality benchmark for financial statement as a whole if in specific circumstances the auditor feels that a separate materiality benchmark is required for any specific transaction, account balance, or disclosures. In that case, the auditor can have a separate materiality benchmark there. Materiality for financial as a whole, in our example, if you remember, was 10 lakhs, and for sales, we had taken separate transaction, we had taken it as 5 lakhs. For any materiality benchmark that you take, you will not tolerate any mistake above that materiality benchmark, and that is why that level is your materiality level. Okay. Any accounting mistake above that level is called as material misstatement. Material misstatement. Simple. It's called as materiality. So materiality benchmark is nothing but the amount or amounts that the auditor has set, above which the auditor will not be able to tolerate any misstatement. And if the misstatement crosses that level, we call it as material misstatement. Okay. Then we did performance materiality. Performance materiality is what? Sir, the level up to which the auditor works and checks all transactions and hoping that below that level, the uncorrected and undetected misstatements in aggregate don't cross the materiality benchmark. That level up to which you work is called performance materiality. Now, materiality can be for, will 100% be there for financial statement as a whole. Materiality can be there for any specific transaction, account balance disclosure. Similarly, performance materiality also in the similar manner can be there for different types of transaction, but the auditor needs to understand how to control that matter. That is how it works. Okay. Let's go to the next part here. Let's start. Question number 2, your favorite one. I know this is your fan favorite question. Factors that affect materiality benchmark. We have our dear wo fun lie. Let's start. Volatility, ownership structure, and the way it is financed. Finance statement elements, users, attention, nature of the entity, life cycle, industry, economic environment. This is what we did. Question number 3, sir, how do we take the relevant data for choosing a benchmark? Sir, we can take the prior period data, we can take the period to date, we can take the budgets or forecast, we can look for the significant changes, or we can directly take a percentage applied. Okay, that is what we had seen. Okay, that is basically question number 3. Question number 4 is on the screen itself. Answer also. Concept of materiality in the context of preparation and presentation of financial statements. In this case, what do we see? Very simple. Anything which, if it is expected to influence the economic decisions of the users, the auditor will keep it into consideration. We will call this as users economic decision making. Second, the auditor will, for materiality, will look at the surrounding circumstances. That is why, if you remember, in understanding the entity and its environment, we take a reoffense. In that, R and I is nothing but regulatory and industry factors. Okay. After that, we see that we look at the needs of the users as a group. Needs of the user as a group. I'm not going to give individual materiality level for different users. For me, the needs of the users, I'll take it as a group, simple, as a whole. Next, judgments about misstatement provide for a basis for what? First is risk assessment procedures. Auditor will use his judgment and see what risk assessment procedures he has to do. So materiality comes very useful there. Second, to identify and assess the risk of a material misstatement, in which cases the line goes up for that materiality consideration is very important. Third, in which situations should we do further audit procedures? Again, the nature, action, and timing of further audit procedures with the risk assessment procedures we'll check. Okay. That is question number 4 for us. This is question number 4. Question number 5. Factors due to which misstatements of lesser amount can be material. We had done a small diagram. I'll show that to you so that it is easier for the students to recollect. In this case, maybe you don't have a code. You can write a code because this is a newly generated code. So write there, please. We have a code called Lara has a separate key. Tell me the code is Lara has a separate key. So if you're a cricket fan, then you know Brian Lara. If you're a fashion fan, you know Lara Datta, who is a former Miss Universe. I know you have no clue. You guys are what generation are you? Generation? Whatever. Look here, see. Look here, see. First is law regulation AFRF. Law regulation AFRF. So for that we have Lara. Lara. Lara has a separate key. Separate means separate disclosures, and key means key disclosures in the industry. Comfortable? Lara has a separate key. Okay, you can just write it there. I know you have the diagram with you. You are doing a revision right now. So diagram is there with you. You can just write it there. Okay. Lara has a separate key. This is what we have done. This is question number 5 for us. Okay. In which cases the misstatements of lesser amount can also be material? We have done this. Sir, if it is going against any law, regulation, AFRF, then even if the amount is less than the materiality benchmark, but the nature of transaction is such that it may affect the user's economic decision making. Hence, we should check as an auditor. Sir, if some key disclosures as per industry were required to be given, the auditor will check whether those disclosures are given or not, even though the amount may be less than materiality benchmark. Third, separate disclosures are required to be given, let's say as per accounting standards or any other matter. And if they don't do that, in that case, the auditor will still check it because it is important for the user's economic decision making. Easy to understand this area. Question number 5. Okay, let's do question number 6. Revision in materiality. Very simple. Are there changes, new changes? If there is any changes in circumstances, in that case, I can lower the materiality benchmark. New information that I get, let's say there is 7 directors in the company resigned together. Out of there were 10 directors, 7 of them resigned together. New information from for me. Suddenly I'll realize, oh my god, big thing has happened. The risk factor goes up, hence the materiality benchmark can get revised. Last is changes in the understanding of the entity and its environment. Any information regarding the entity. Let's say a big court case has been filed against the company. In that case, it will signal alarm bells in my mind. Risk factor goes up. Materiality benchmark may come down. Okay. Next. This you know very well. What you thought, anticipated. What you got, actual. You thought, what you got. What you thought, what you got. That difference is called exception. It is called as exception. So that is basically this. Basically this. Easy. And finally, we have performance materiality, as you know very well. Whenever line goes up, it means we have identified as a risk of material misstatement. We have to bring the line down. That is, we have to do more extra work. Whenever you do more extra work, performance materiality keeps going down. So if you remember our materiality example, we started with 5 lakhs, came to 1 lakh, came to 10,000. That is performance materiality, the nature, time, extent of further audit procedures. Are we there here? Yes or no? Comfortable? Okay. That completes this part here. Okay. Let's go to the next one. We go to the next area. Let's start documenting materiality. Very, very simple. Question number 7. Very easy answer. We look at the materiality of management as a whole. 10 lakhs was the example with which I taught you. Then, if applicable, any materiality level or levels for any particular class of transaction, account balance, or disclosures. We took the transaction of sales in which materiality benchmark was 5 lakhs in our example. Next, any the performance materiality. So, at what level did you come to check all the transactions below which you're hoping that the uncorrected, undetected misstatements don't cross the materiality benchmark? That is called performance materiality. And finally, any revision of A to say as the audit progressed. Any changes which they are there, you will note in your documentation. Remember, documentation is only for the auditor. He may share with someone, may not share with someone. Okay. Auditor will not disclose his materiality levels in the audit report for the shareholders. He will not. Okay, it is for his own purpose. Are you there with me, yes or no? That completes your question number 7. Question number 8, very, very simple, very basic area. Let's just read it quickly. Audit risk is the risk that the auditor expresses an inappropriate audit opinion. This we have already seen. And to see whether financial statements are materially misstated or not. Audit risk is the function of risk of material misstatement and detection risk. You know very well, RMM into detection risk is that. Materiality and audit risk are considered throughout the audit, in particular when identified as listing RMM, that is, you know very well, SA 315. At that time, we consider NTE of further audit procedures. You can take it as SA 330. And if any uncorrected misstatements are there, basically that is your SA 450. We report to the management. So basically for SA 315, 330, 450, the auditor will use materiality as a concept. Yeah, that is what we see. Next, again, the concept of materiality is applied by the auditor in both planning and, of course, in the performance of the audit. In evaluating the effect of identified misstatements and of corrected misstatements, the auditor will look at that. Now they have come to the general matter. The overall objectives of the auditor is to obtain reasonable assurance. The auditor is there to express an opinion and in which he is going to report on all material respects in relation to AFRF. The auditor obtains reasonable assurance by obtaining sufficient appropriate audit evidence to reduce the audit risk to an acceptably low level. You cannot make audit risk to zero. There is always some or the other risk which is always there. You can only bring it to an acceptably low level. Are you there with me? Yes or no? Simple. This question number 8. Last one was a good one. I think you like this question a lot. This is in relation to the code is Mr. Kumjid. Let's start. So what will the auditor assume about the user? So let's do this area. Kartik sir, what will the auditor assume about the users? So let's do this answer. The auditor will assume assume that the users have the knowledge of BIAS. What is BIAS? Business, economics, accounting, and they have a willingness to study. Second thing, auditor will assume that the users have an understanding of accounts and they know that audit is done keeping in mind materiality as a concept. And next one, the auditor will assume that the users understand that the accounts are not perfect. In accounts, there is always measurements which come from judgments and estimates. Depreciation, provisions come from judgments and estimates. And last, the auditor can assume that the users can take their own economic decision making. The auditor is not going to spoon feed to the shareholders, sell the shares, buy the shares, purchase more shares, all those things. He will not do that. The auditor will simply give his audit report, and the shareholders have to make their own economic decision making. Simple. So you have ED there, economic decision, that is buy, sell, hold the shares. You have Kumjit, there's a code. Simple. With that, we complete the quick recap of materiality as a concept. In total, in materiality, my dear student, we have question number 5, 6, here we have 7, question number 8, and finally, Kumjit is question number 9 here. That is what we did. Okay. Pretty sure that this chart is now there in your mind. Okay. But with continuous revision and all, it will be there. Easy, simple. That completes your chapter number 3.2, materiality. Let's go further to chapter number 3.3. This is something that students are normally worried before the examination. Worried means they have a sense of discomfort, I should say. The word is discomfort regarding this automated environment. Okay. The reason is this area is normally I've seen it is not in control. Why it is not in control? I don't know. That students will tell their psychic issues in relation to this chapter. There is some negativity I always feel. Okay. So let's ensure that today that is cleared. Okay. Let's see this. First, we are doing what is automated environment. Very simple. Any business environment, my dear students, in which we use processes, operations, decisions, or even accounting by using computer systems is called as automated environment, also known as information system or information technology system. We use PODA. PODA is what? Process, operations, decisions, accounting. Done with the help of computers is called automated environment. Okay. Remember this definition. If a question comes from this part of the chapter, you can write this as the first nice introduction there. Okay. This for us is question number 1. Next, let's go ahead. Question number 2. Key features of automated environment you know very well are dear code called as Philippe. Philippe is less prone to human errors because he gets latest information due to connectivity. Let's look at the screen. First, Philippe. F is what? F is this. Faster business operations. A. Accuracy in data processing. That is A. L. Large volume of transactions. Ability to process large volume of transactions. I. Integration between business operations. That is basically I. Integration. Merging of business operations. B. That is better security and control. Better security and control. That is Philippe. Philippe is less prone to human errors. If you use automated environment, basic human errors like calculation mistake, getting too tired, not paying attention, focus not there. All these machines don't have problem with that. So you understand you're less prone to human errors. So the work will be done in a better manner. Next, provide later information by connecting to the internet. And that comes to the next point, that is connectivity and networking capability. We had done a code here, which is basically this. Philippe is less prone to human errors because he gets latest information due to connectivity. That is how we did it. Easy. Question number 2. Question number 3. Now, question number 3, before going ahead, I'll just introduce one question because in the revision, I'm not doing base diagrams one by one. So any base diagram question also, we'll wrap it up here only. Understanding and documenting the automated environment. In your notes, it is given in chapter number 3. In this revision, I'm covering it in chapter number 3.3, basically. Okay, let's do this. In this, we saw 3 plus 3 plus 3. Let's start. Information system purpose, version, location, architecture, interface, in-house versus package, outsourced, key person, CIO, CISO, Chief Information Officer, Chief Information Security Officer. That's it. Easy to understand this. Let's go to the next answer in our area. This I am pretty sure is your fan favorite area is IT risk. It is called IT risk. Simple to remember. Very, very simple area. Let's start. What are the various IT risks that are there? Let's start. First is loss of data, unauthorized access to the data, direct changes to the data in the master file or the backend data, unauthorized changes to the system and programs, inaccurate data, inaccurate processing of data. Then the authorized person is finding it difficult to make changes. So failure to make changes to the data. That is basically this point. Next is lack of segregation of duties. And finally, we have excess access, privileged access, IT person gaining access. That is basically this point here. Okay. Superb answer to come in the exam and to score marks. Direct answer. So basically, this is the content. Straight, no content, no inner content here, just the head points. Easiest way to score marks for us. Okay, wrap it up properly if it comes. And can we go ahead now? Okay. IT risk done. Now we see impact of IT risk on the audit. Impact of IT risk on audit can happen at 3 stages. First is impact on the controls. Impact on the controls. Second is impact on my substantive procedures, substantive work. And third is impact on my reporting. So we have 3 levels here. Impact on controls is what? Very simple. The internal controls are what? The policies and procedures made by the organization. If they are IT based, then IT risk can be high. In relation to what? In relation to the automated controls which are there in place, the counting done, and the calculations which are there in place. Regarding that, there can be a risk. Imagine if the computerized data is giving you the information, but if controls are not there properly, the data that is you're getting, you will worry that the automated controls are not working properly, so data may be incorrect. Counting may not be done properly. You're worried about the calculations. That is a risk you deal with. That is the impact of IT risk on audit. Second, what is the impact of on substantive procedures? Let's do it. You cannot rely on the data. Non-reliance on the data. You cannot rely on the data. So in your substantive procedures, you're getting stuck. You don't know exactly how to proceed ahead. And last but not the least, my dear students, in substantive procedures, if you don't get the data from the IT environment, you will feel, no, I need more information. I need more data, more information, more reports, so that you can reach the RA level, because the current data that they're giving you, you are finding it inadequate, or it is virus infected or hacked, or the data is changed. In that case, you need more data to satisfy yourself to reach the RA level. Last, if the data is incorrect, and if you reach the R level still, if you reach the R level, you feel material misstatement is there. If material misstatement is there, you will definitely end up giving a modified opinion as per 705. So what is this? If you reach the R level, when you make the audit report, modified opinion will be given as per say 705. That is basically this answer. Okay. That completes impact. This is what we completed. Impact of IT related risk. Simple. Take this in control. I'm very adamant on 3.3 becoming very, very strong. Many students, they say so 3.3 is difficult. I don't understand why it is difficult. Should not be difficult. Okay. Question number 1, meaning. Question number 2, key features. Here, key features, Philippe code. Question number 3, IT risk, which is there. And question number 4 for my dear students is this impact of IT related risk. 4 questions are there. Let me go for the first one, meaning. Question number 2, key features. Question number 3, IT risk. 4, impact of IT related risk on audit. First 4 questions we wrap up. Okay. Then we go to the next area. Let's start. Then we understood, sir, what type of controls are there. So in that case, we did this chart in the class also. You have general IT controls, you have application controls, and IT dependent manual controls. Okay. Let's do it. Any control which goes from the lowest level to the highest level of the organization is spread across the organization. It supports other controls. Such a control is called general IT control, you can call it, or because it is spread across, we call it as pervasive control. And because it helps other controls to work properly, these are also called as indirect controls. Example, I told you in EY when I was working at the time of teaching you, I told you that password was required on every laptop, be it me or any partner. In EY, when I was working, LAN cable used to give access to a drive called F drive. Other than the LAN cable, you could not get the access to the F drive. And last is laptop lock was compulsory. If you are keeping the laptop on the desk, somebody should not steal away the laptop. So laptop lock was required if you are keeping the laptop on your desk. These were standard policies for each and every employee in the organization. And any policy, any kind of control which is there from the lowest to the highest level is called as general IT controls. Let's go to the second one. Application control, any software related controls, anything that controls input, process, output is called as application controls, also called as automated controls. When you come to CA final, it is called automated controls. So that is why I tell you at inter level only that it is called automated controls. Easy. Last is IT dependent manual controls. What are these? Sir, the person takes the decision. So it is a manual control. But for taking the decision, the person is dependent on IT. The data is provided by IT, then the person takes the decision. This kind of control is called IT dependent manual control. IT dependent manual controls. We had taken this SBI branch bank example where my account got frozen. I don't know whether you remember. And the bank employee called me and told Kartik sir, please come and do your KYC details. Only then we'll keep the account unfrozen. And if you don't do that within a week, then we'll freeze the account. Who is freezing the account? The bank employee. So it is manual. But he's getting the data that Kartik Iyer has not used his accounts in the last 9 months. He's getting the data from their Finacle core software or the bank's Finacle software. That is bank's software. You understand here that is system generated report, that is IT dependent. So the person is taking the decision, that is manual control, but because it is IT dependent, it is called IT dependent manual controls. We have done the in-depth discussion of this in class. Where is this? Okay. Let's go further. Now we enter into general IT controls. More in depth. Let's start. In this, we had seen this general IT controls. In that, we did 4 parts. First one we did was appliance system acquisition, development, maintenance. Second part we did was something called as data center and network operations. Third part we did was access security. Fourth we did was program change. Okay. If you remove the diagram, you will get this diagram. You must have seen this diagram with us. Okay. Let's start. What are the various components of general IT control? Let's start. We go for the acquisition, development, and maintenance here. I had given the Camlin example in the class, and that time I'm pretty sure that you were telling me all the points. Very simple area. Let's start. First, Infosys person is appointed to set up a IT system in the organization. Okay, for Camlin, the stationery making company. Okay, Infosys person will come and he will speak to our person. The person who Camlin has appointed to take care of the software getting made is called overall management. We'll call it as overall management. The Infosys person will come and ask a lot of questions. That is called your project initiation. Project initiation. After that, he will make the analysis and give on paper design. That is called analysis and design. This will happen multiple times till the time the organization, that is this person in charge of overall management, is not happy with the on paper design. Sir, in the app, if you click here, this will go. If you click here, this will come. If you click here, this will come. That design, the overall management of the organization should be very, very comfortable. Till that time, this person will make the analysis, give a design. Design will get rejected. Again, make the analysis, make the design. Again, rejected, make the analysis, make the design. Till the time overall management is not satisfied. Once the overall management is satisfied, he'll give the approval. Everything is proper. If everything is proper, in that case, the Infosys employee will construct or code the software, and will get the ERP in place. ERP in place. Are you there? After that, you will not directly set up the ERP, you will not set up the big software that you have made, you will not set up the enterprise resource planning example which I gave you. You will first do the testing and quality assurance and then only put it in place. So, what are the activities that you see? Very, very simple. Our person who is handling it is called as overall management. So, I'll show you directly in the answer only. We had overall management. See, overall management. Then he will ask us a lot of questions, project initiation. We'll do the analysis and give us the design, on paper design, that is analysis and design. After we give the approval, he will start coding, tell his team to code the software. That is called construction. And finally, testing and quality assurance has to be done. This is what we had seen. Okay. And go to the next example, next area. Let's see this PCR. Next, data center and networking. Let's do this area. In this case, in organizations, data is not kept one by one, it is handled in batches. So, again, for doing that, you will have a person called overall management. This person will ensure that data is properly processed in batches, batch process. Can the system crash? The answer is yes. So, we'll have backup in place, backup. After that, you have something called as performance monitoring. So, you'll do performance monitoring, whether everything is working properly or not. If the system crashes, you have to start loading the data one by one from the most important priority data to the least important data. That process is given in BCP DRP, Business Continuity Planning, Disaster Recovery Planning. That is called recovery. And finally, after all this is done, we'll ensure that the data center and network operations are running properly. Again, it is the person who is in charge is called the overall management, as I told you at the beginning. Are you there with me as well? This again, this answer, everyone. Again, what we did was completely given here. Very simple. See, overall management, batch jobs, backups, performance monitoring, and recovery from failures. That is by using BCP DRP, business continuity planning, disaster recovery planning. Easy. Let's go to the next one. That is your access security. Which person will get access to which files is given in this part. So let's do it. First of all, we have who will access which document is given in policies. Security policy should be there. Security policy, once it is implemented, it is called organized and managed. And then we see something called as PONDA, physical security, operating system security, network security, data security, and application security. This is how it flows. Okay. This is what we had done basically in relation to this part, this area. That is called access security. Next area, we did something called as program change. Program change means what? Program change means already a coded software is there. Coded software is there. On that coded software, we are seeing that if any changes are required or not. We have taken the example of Nilesh Sir of Yeshas doing the changes in the student's app. In your app, screenshot feature is not there. So when he comes to class for review, you guys tell him that, sir, can we have the screenshot feature? So it is easy for us to take photo of chart so that we can go home and copy. So Nilesh sir in this case is the person in charge of the change. So we'll call him as the change management process. I'll show you the answer. We call him as the change management process. Here it is, change management process. You will give he will take your request. That is called, he is taking the change request. He'll give to the IT person who will make the changes. Once the IT person has made the changes will be tested. That is called test the changes. And only then after that it will be put into production, means the app with the changes will be made live so that students can now download the updated app. Are you there with me, yes or no? So that is what we did. This is basically what we covered in components of general IT controls. Easy to understand this part here. Okay, we have done it in depth, do it properly. Easy. Next one. Let's go ahead. Now we move on to the next area. Next area is what? Next area is in relation to testing methods in an automated environment. Very simple. The best method of testing is re-performance. Whatever has happened in the organization, retest it yourself. Re-perform the entire thing. Re-performance is the best method to get the evidence. Only problem, time consuming. So hence it is not efficient. So it is not time, it is very time consuming. Hence we cannot do too much work in this. So re-performance is the most effective method, but very time consuming. Hence it is least efficient most of the time. So in the practical scenario, what is the best method the auditor can go for? The auditor can go for something called as inquiry in combination with inspection. It is the most effective and efficient audit evidence tool that the auditor can use to gather the evidence. Okay. In this, we did something called as WDC, if you remember, by doing something called as walkthrough. Walkthrough means what? To check a transaction from start to the very end. Example, in the classes you took admission, so your receipt was given to you. So from the time of inquiry, from the time of receipt given, let's say, till it is there in the financial statement, the start to end when we check the transaction, that is called walkthrough. Second, in the classes, there are students studying in CA Inter, CA Foundation, let's say CS. If suppose the policy is different for each one of them, or transactions are having a lot of what do you call different transaction types of transactions as there. I will check each type of transaction. That is called checking different scenarios. And third is, I forget about the data. I worry about the process. Process means I see whatever data is put in this system. Let me check how the system is working. In that case, I'm looking at the configuration, that is the processing. If processing is proper, everything will be proper. That is what hope I go for. You can go for WDC, walk through different scenarios and configurations. Are you there with me, yes or no? That is basically this question. Okay. Let's go further. Let's do the next area. Sir, very nice question. This was manual element versus automated elements in internal control. We had done a code called VETA. I don't know whether you remember VETA. If the way of doing things is changing very, very often, in that case, you will go for manual way of working. If the way of doing things is very specific, only one way of doing the work, great, you'll go for automated. If the errors are very, very difficult to predict, you don't know which error will come where, you will go for manual. If the errors are something which are more predictable, then you know what errors to expect, so you can code the software accordingly, so you can go for automated. If the transactions are non-recurring, a big amalgamation is going to take place. Non-recurring. So in that case, human only has to handle it. But things which are recurring in nature keeps happening. Example, in the bank, the processing of checks keep happening on daily basis. So you understand here, can the system handle that matter? At least in terms of data storage, the answer is yes. So you understand here, non-recurring is manual, recurring is automated. Next, who controls who for the time being, at least in the world that we are living in? Manual element controls the effectiveness of the automated controls. Are you there with me, yes or no? We had a code called VETA. Simple to understand this area. Okay. Next area in this, let's do it. We saw one of the best questions that I feel in this area is audit approach in an automated environment. This is the question that we did. I feel it is extremely important. If this question a student knows in this chapter, in this 3.3, you are champion of 3.3 because you know this area properly. Okay. It has a lot of detailing. Let's do with the way we did. Okay. We have this chart in place. Let's do it. First, we do risk assessment. In that, what do we see? We look at whether counts and disclosures, what risk do they contain? We are looking at that. That risk that is there, we look at the quantitative and the qualitative elements in the risk. How much damage the risk can do, how big is the risk, or how often the risk can occur. That is called quantitative, that is frequency, and qualitative, that is called significance. How big is the risk? That risk affects which assertion? That is called assertion. We look at the TAD, transaction account balance disclosure. Now, this risk is coming from where? That is called the source of misstatement. Where is it? Where is it causing a problem? And finally, is this coming from any IT system risk? Then I'll check that. Are you there? This completes regarding risk assessment. We have done the flow in the class. Second, we are doing something called as understand and evaluate. Sir, how should we understand first? I'll understand the organization's business policies, processes. Processes will tell me the risk which is there in place. But when I look to an audit of a client, I'll see, oh, risk is there. I'll tell the client, see, this risk is there. The client will tell me, oh, sir, don't worry. For this risk, we have a control in place. For this risk, we have another control. For this risk, we have another control. Risk, another control. When the client gives me risk control, risk control, risk control, risk control, in that way, if he gives, that is called risk and control matrix or risk and control matrices. He'll give me that. Now my focus will shift from risk towards the control because he's telling for this risk, this control is there. So I know, oh, control is there. So let me check the controls now. I'll check the on paper design of controls. That is called design of controls. On paper design of controls. Example. Defective goods are being produced. So quality control is a problem. So they are saying, sir, quality control is a problem. Don't worry. We have a quality control person who is appointed who checks the defective goods and we keep it aside from the main goods. In that case, I will check the design of the controls in place. When does a quality person come? How does he check? Where does he sit? Does he ensure packaging is not defective goods? I'll check all these things. Design of controls. Next, staff is, let's say, not working in a proper manner. Staff is working in an inappropriate or ineffective manner. In that case, I'll check whether the control that I put in place is I've appointed a supervisor. So whether the staff is working properly or not, supervisor will go around and check. Now I'm worried about whether supervisor is doing his work properly or not. So supervisor related controls, I will check. If those designs are proper, then I'm not worried. Then I'm not worried. So I'm checking the design of controls. I'll also check the controls which are spread across the entity. That is called entity level controls. I will check. And finally, I'll check the controls which run across the organization called as general IT controls or IT general controls and the software related controls. These are called as the application controls. Are you there with me? Yes or no? Perfect. Next one. Operating effectiveness of controls. In that, what do we check? We do the control testing, whether controls are working properly or not. Second, we check where is the data coming from. That we check the source data. Next, we check what kind of reports is the system generating. Report testing we'll do. We'll see sample testing. What is the sample telling me about the controls in place? And last is we'll see control testing should be done by a competent and independent person only. We'll check that area. Okay. Only then he'll be able to do the checking in an unbiased manner. Last but not the least, reporting. We look at the chota mota small deficiencies which are there. We look at the significant deficiencies. What remediation is the organization taking? We look at the internal controls memo or the management letter. And of course, if things are not in place, we'll mention that in the audit report. This is how it flows. Okay. Superb area, according to me. Do it very, very nicely. Okay. That completes this part. Then go to the next area. Data analytics we do here. In that, I have this part here. Sir, in auditing, where can data analytics be useful? It can be useful in checking the completeness of the population, recomputation of the balances. In population, it will help us to take out the samples. Recomputation of balances, we can check only when the calculations are there in place. So we may have to check the recalculation. So basically, from population, we'll check the samples, we'll check the recomputation of the balances, and we'll check the recalculations. Easy. Next, where all the control is lacking, that is called control deficiency. We'll check the root of account. What is the root of account? Journal entry. And finally, we'll check the fraud investigation if there is any problem. In all these scenarios, data analytics can really, really help me as an auditor. Are you there with me, Sono? That completes this part. Next, we do one of the most idiotic questions which was added in your syllabus, our dear digital audit. Okay. Because this is just a simple code called RRR Padosi. And we do that. What is this? First, the client must have set up new technologies to revamp their operations. They must have rethought the way the business is required to be done, and they must have gone for restructuring their business models. When they do that, we should not be behind as auditors. Even we should go for digital audit. Digital audit, by the way, is chapter number 12 of CA final. So there it is there in a big manner. There you learn about all the viruses or all the malware. You learn about non-fungible tokens, that is NFTs. You learn about something called as your audit tools, CAT, computer assisted audit techniques. Proper chapter 12 is designed for you. So here they give you one answer. In final, they give you a chapter. Let's see this. Now, it can help you right from the planning to your planning, keeping in mind artificial intelligence, data analytics, other latest technologies to conduct the audit in a better manner and to identify the risk. That is your RRR Padosi. Okay. This question can come as a shocker in the examination. So do it properly. Suddenly you will see this there as 4 marks question. So be very careful. Now, the ICI, the way they set the paper is absolutely crazy, crazy, madness. Okay. Madness means there is no sense of what is important for students' life. Random question is there, asked in the examination. So do it in a proper way. Next, internal financial controls as per regulatory requirements. We do something called as FOLA fraud. FOLA, you know very well. Start financial reporting reliability, operations effectiveness and efficiency, laws and regulation compliance, asset safeguarding, and fraud prevention and detection. FOLA fraud. Easy. Let's go to the last few bit of this chapter. That's it. Next is the where is the term internal control given in the Companies Act? You have to just remember these section numbers. 134 5E, Rule 8, Sub Rule 5 of Companies Accounts Rules, 149 subsection number 8, 177, 143 subsection number 3, clause I. That is basically in relation to your company audit chapter. Duty to report is basically 143 subsection number 3. Okay. Can you go ahead now? Next one, let's start. Last question of this area, that is assess and report the audit findings. In this we saw. So what all should the auditor assess and report in his findings? First is he should look at the weakness in IT controls, impact of these weaknesses, which is nothing but question number 3 and question number 4. That is this. Next, report deficiencies to the management, and significant deficiencies will report to the TCWG as well. That is what we'll give. Okay. Deficiency is what? If controls are missing or control is unable to prevent or detect and correct any misstatements. So if control is missing or control is unable to prevent or detect and correct any misstatement, that is called deficiency. That is called deficiency. That completes chapter number 3.3, audit in an automated environment. That completes on this part. Easy, simple. Now we are doing 3.4. This, the heading that I have termed it as test of controls. So regarding test of control, what do we see? Let's see this. We are seeing something called as the nature and extent of test of control. Nature and extent of test of controls. Let's start first. Sir, how should the auditor proceed with the controls of an organization? First thing is, if I am the auditor, I'll first ask what controls are there in place. Asking is inquiry. The man will give me a response. Based on their response, I will do other procedures in place. Whenever they give me any kind of controls, I have to check 3 things regarding controls. First, how are the controls applied? Whatever written on paper, how is it applied? How are the controls applied? Second, if the controls are applied, is it applied for only 1 day or 1 month in a year or throughout the year? That is the consistency of their application. And third, in the organization, who is in charge of that particular controls or which software is handling the control? That is by whom or by what means? By whom means individual, by what means is which software is handling the control. Do you understand here? We are looking at this in the controls. What is the nature of control? Very simple. We'll do inquiry, we'll give response, we'll do other procedures. In that, you're checking 3 things: controls, how they are applied, the consistency of their application, and by whom or by what means they were applied. That is what you're checking. Next, one of my favorite questions to do is extent of test of controls. In how much depth will you check the controls? That depends on which factors. We have a code called flex row, frequency, length of time, expected rate of deviation, relevance and reliability of the evidence that we get. And finally, you have other controls. In other controls, I hope the students have learned in the class, will remember, we had done something called as the access card reader, and we had the timesheet. The timesheet was the other control. An access card reader, in our example, was the main control for attendance of an employee for computation of salary. Are you there? Simple. We had done this in the class. Next. Let's go to the next question. Very simple, beautiful question. Retesting of control. Again, one of my favorites. So normally the control should be tested once in every 3 audits. Once in every 3 audits. So if I have checked the control before the first year audit, then I'll only check it before the 4th year audit. Normally. But if something, see this blue dot, I'll clear everything. See the blue dot. If something happens in this blue dot, I will check the controls before the second year audit starts. I'll retest the controls. So what can happen in the blue dot? Let's see one by one. Look here, see. First, there is a change in the effectiveness of control environment, change in the effectiveness of risk assessment, change in the control of control environment, change in the effectiveness of correct risk assessment, and change in the effectiveness of monitoring. If there is a change in the effectiveness of that, in that case, I will feel, oh, something is wrong in the company. Then I will not wait for 3 years to get over. I will prepone my controls testing, retesting of controls. Second, there is a change in the characteristics of control, either from manual to automated or automated to manual. Third, sir, there is the change in the effectiveness of the general IT controls. The company's general IT controls have changed. They have changed the firewall system, they have changed the antivirus software, or they have changed the way they store the data. Something major has changed in the company's IT system. In that case, I will prefer retesting the controls once again. Next, change in the application of controls, the way the controls are applied, that has changed. It can happen because of change in personnel. Mr. A was handling it, he has now retired. In his place, Mr. B has come. So now the person who is applying the control, that has changed. That is basically change in the application of control can happen because this one person is leaving the organization and this new person is joining the organization. That is called as changes in personnel, personal changes. So that you have something called as risk of material mischief. Line goes in that case, if line goes up very often in the first year before the second year audit starts, I will not take risk. I will say, let me not go wait till the fourth year before retesting the controls. I will retest the controls before the second year audit starts. And last but not the least, we have something called as COVID-19 example we took. We had taken an example where there is a lack of change due to change in circumstances. Outside some changes happened, but in the company, if you don't make that required change, then your organization will face the risk because you are not making enough changes to align with the changes in the environment. That is basically this point here. Easy? That completes of this part. Easy? Last point, last area. Sir, specific inquiries in relation to in the controls, what all will you check? Sir, when we are checking one control, if we see any deviation, we took the example of access card reader machine. In that case, sir, we will not trust the controls and our substantive procedures will do less if other controls are not there. But sir, if other controls are there, then in that case, I will say, okay, let me not rely on the access card reader machine. Test of controls, reliance on controls is not giving me enough satisfaction. So I'll go for additional test of controls. I'll go for checking of the timesheet. If timesheet doesn't give me that much satisfaction, in that case, you will understand that I will now be worried that controls are not there in place. Controls are giving me lesser satisfaction. So I'll have to do more substantive procedures to reach the RA level. So you understand in this case, there is a potential risk and hence my substantive procedures will increase. Are you guys there with me? Yes or no? Simple. That completes your 1A, 1B, 2 and 3 of test of controls. That is chapter number in our textbook 3.4. With that, we complete the entire revision of chapter number 3, one of the biggest chapters in your syllabus. Easy. We will now start with the next chapter for revision, that is chapter number 4 of auditing. This is called audit evidence. Now, in our notes, we are dividing this chapter into 4 parts. Chapter 4, which contains essay 500, 501, 505, 510, 550. Chapter 4.1 is sampling. So we'll see sampling in this. Sampling, maybe I'll take it right at the end. Okay, sampling we'll do it at the end. Then 4.2 is analytical procedures, and chapter number 4.3 is called internal audit. So in our order, we'll do 4, 4.2, 4.3, and then we'll go to 4.1. We'll do it in that way. Okay, let's start. Let's go for it. Let's start with this part. We are now doing essay 500. Very, very simple. Essay 500, we started with this diagram. Very, very simple. Let's go for it. First is what is audit evidence is covered here. What is audit evidence? Question number 1. It includes any accounting records or anything that authenticates the accounting records and supports the auditor's thinking. That is rational. That is the definition. Question number 1. Question number 2. Kartik sir, what is sufficiency? Sufficiency is the measure of quantity of any evidence. How good is the evidence in terms of quantity? We call it as sufficient. Okay, sufficiency. Sufficiency gets affected by which factors? So factors that affect sufficiency. This came in the Jan 2025 exam, by the way. Mars code. This is basically your first is materiality, risk of material misstatement, and size of the population. Okay. Next. A is in relation to appropriateness. In appropriateness, we see two factors. Again, another question, that is relevance and reliability. Sir, when will the auditor rely more on the audit evidence? So that is basically this. When will you rely more on the audit evidence? We had a code called INDO, independent sources outside the entity. Internal control, if it is more effective, you'll rely more. If it is directly obtained by the auditor, you'll rely more. Documentary evidence, you'll rely more. And if it is original documents, you'll rely more. Indo also code. Okay. So this definition becomes question number 1. Factors affecting sufficiency will become for us question number 2. Appropriateness is question number 3. And when will you rely more on audit evidence is question number 4 for us. That completes this part. Let's go further. Question number 5. That is, sir, in order to obtain sufficient appropriate audit evidence, the auditor will perform which audit procedures? That is question number 5. We had CARO. Let's go for it. Confirmation, analytical procedures, inspection, inquiry, reperformance, recalculation, observation. Simplest area. This is question number 5. So this chart covers 5 questions of essay 500. In total, remember there are 11 questions. Remember the track. This has 5 questions out of 11 questions in this essay 500. Then we go to the next question number 6. 6, very simple. 6 was in relation to, tell me, that is, how will the auditor obtain a reasonable assurance? Very simple, you know it very well. So the auditor will do test of controls, substantive procedures, and before that, of course, when he does the UEE plus UAE, it is part of your risk assessment procedures. This is what he will do, okay, to reach the R level. Very simple question, that is, how does the auditor obtain reasonable assurance? Very basic. This we have done it in our base diagrams, basically, okay. And also, I told you all to read this area. Question number 7, let's start with our favorite one, assertions. Let's start assertions about transactions. Let's go for the hand action. Let's start right hand action. Occurrence, completeness, cutoff, classification, accuracy. What is the assertion about account balances? So let's do this. That is existence, rights and obligation, completeness, valuation. What are the assertions about disclosure? Both hands, go for it. Tell me occurrence, completeness, classification, accuracy. Simplest area to crack, easy. This question number 7 for us. Question number 8 now. Audit trail. Very simple. Audit trail was what? Let's go for it. It's a documented flow of transaction from source document, accounting entries made. From there, financial statements are prepared. So when we check if the audit trail is available, it means you can go backward and check the source. In that case, you will get the confidence regarding authentication and integrity of the transaction, genuineness of the transaction. You have to remember in the short note while writing that you have to remember a code called true coco. True coco is what? First, track many type of transaction. Or you can do record maintenance of user activity and system. So your R and U are together. Remember while writing the point. E is expenditure. What system is there in place and what expenditure is done so that the data can be analyzed. So system for maintenance of audit trail and system for analyzing data in audit trail. Next is COCO, that is confidence in the auditors. It gives confidence to the auditor that audit trail is there in place. Last point is controls verification. If audit trail is there in place, you feel, oh, controls are working properly. You have that confidence. Easy, simple. That completes this audit trail short note. If it comes in the examination, pretty sure that you are going to do well. Let's go to the next one. This is question number 9, 10, 11. 9. First, basic regarding this. When the auditor appoints an outside expert himself, or any expert himself, that is auditor's expert, that will get covered in CA final in a standard called SA 620. 620. When the management appoints the management expert will give a report, and that report is given to the auditor. This report, which is given to the auditor, this gets covered in SA 500 because it's coming from the management. Management expert giving report to the management giving report to us. So for us, it is audit evidence that gets covered in SA 500. I don't know whether you remember, I told you anything that comes from this funnel, which is here, will get covered in SA 500. This is what we did. Okay. Now we go to question number 9, 10, 11. Let's start. Sir, regarding management expert, what all will you evaluate? How will you evaluate the management expert? We did in 3 levels. We'll judge the person, we'll judge his work, we'll then see how appropriate is his work for our audit evidence. Judge the person, judge his work, see how appropriate his work is for our audit evidence. How do you judge a person? Very simple. Look at his competence, how good he is at his work, whether he has a capability of getting your work done, and third, objectivity, whether he is having an unbiased approach. Next, you'll understand the work of the expert. So any report that the expert has given, you'll go through that to understand the work of the expert. And last but not the least, you will see whatever report he has given, how useful is that report for your evidence, the appropriateness of auditor's experts' work for our audit evidence. So three things: judging the person, judging his work, how appropriate is his work for our audit evidence. Are you there with me, yes or no? Question number 9 is evaluating the management expert. Question number 10. When the management expert gives any information, the information shall be. We did a code in the class, if you remember, we did a code called Pakode. Remember Pakode? I told you many codes can come: Pakode, Deepak, Kapde, or Deepak ke kapde pe gir gaye pakode. You can do all these things. So what is pakode? Let's do one by one piece here. First of all, information should be precise. It should be precise. It should be accurate. It should be complete, and it should be detailed. Precise, accurate, complete, detailed. Precise, accurate, complete, detailed. Okay, now you can do whatever you want with the code. Next, question number 11, in my opinion, one of the best questions to ask in the examination. It's a thinking question. Let's start. When using the work of management expert, what factors affect my auditors and nature, time, and extent of audit procedures? Arpita is a management expert. In that case, she is giving a report. How will her work affect my nature, time, and extent of audit procedures? That is what I am looking at. How does it affect my work? First, I look at the matters that she has given the report of. So I look at the matters, nature, and complexity. Nature and complexity. What matter has she given the report of? How complex it is? The more complex it is, more her report's value will increase more in my mind. Less complex, easy to understand, then her report will be very easy for me to deal with it. I'll not give it that much importance. Risk of material misstatement. What is the chance of big accounting error happening regarding this matter? So if the company, there is a chance of huge accounting mistake happening, in that case, the RMM is high. If the RMM is high, you understand here, it becomes very important for me that her report should be proper. That is another factor. So with matters, you have two: nature and complexity, RMM. With A, Arpita is the only person who makes such kind of report. In that case, there is no alternative source. But like Arpita, if suppose many others are available to give such kind of reports, her expertise is not rare. In that case, I get alternative sources from where I can get the information. Okay, so that is another factor. So matters and alternative sources. Next, simple. What work she has done? What was her goal? What has she covered? What work she has done? Nature. What was her goal? Objectives. What area she has covered? Scope of the management expert's work. Next, control on the management expert with the entity. So basically, entity, what controls it has in place regarding the management expert and management expert's work. And second, does the management of the entity have a control on the management expert? So basically, the report of the expert will be biased. Example, the management of the company is the related party to the management expert. In that case, the management expert will give a report in favor of the management. So you understand here, that is called management's control over the management expert. Next, standards. Is the expert following technical performance standards? That is what we are checking here. If they are following, good thing. Are they employed or not? If they are employed, bad thing. It means their report will be a little bit biased. But if they are not employed, then in that case, it is a good thing for the statutory auditor. Experience, very good point. Experience of the management expert. If Arpita is a management expert, what kind of experience she has in her field of expertise? Let's say she's a valuation expert having an experience of 25 years, then I can rely on her report more. If she has experience of just half a year, 1 year, I may not rely on her report more. Her experience. And last is my experience of working with the expert. When I'm doing the audit of A Limited now, they have appointed Arpita as an expert for giving valuation report. Earlier, when I was doing the audit of X Limited, Y Limited, Z Limited, they also had appointed Arpita. And I know Arpita gives excellent valuation reports. I know. So I have a good experience of working with her. That will also become a factor. That is the experience. That is our previous experience of working with the management expert. Are you there with me? Yes or no? It's question number 11. Question number 11. Okay. 11 questions in essay 500. Let's go to the next one. Let's jump. Let's start. We'll go to the next essay. That is essay 501. So that we have to go here. One second, please wait. Just give me a second. Let's go. Let's start. Please here. We're now starting with essay 501. So 501 starts here. That is specific consideration for selected items. Okay, this covers 3 selected items mainly. They have selected inventory, which has 4 questions as per our notes. Litigation and claims, 2 questions are there as per our notes, basically covering the module. And segment information also, we have 2 questions to cover. Okay, Let's do this one by one. Inventory. Let's take the charge of the first 4 questions of inventory. Okay. So inventory has 4 questions. Let's see this. First area. Matters relevant in planning attendance at physical inventory counting. What are the matters you keep in mind? First is, what is the inventory, nature of inventory, that is called as whether it is perishable, non-perishable, liquid form, solid form, gaseous state, all these things we are looking at. That is called as nature of inventory. Second, what is the risk of material misstatement? I am depicting a rat here, but you understand risk of material misstatement basically means chance of big accounting mistake happening. Next is, what internal control the organization has in place, that is internal control. You will remember the chart, I think. Next is, has the entity appointed an auditor's expert in place? Next is, do they have a perpetual inventory system? Do they have a perpetual inventory system which can do the calculation in relation to inventory on a continuous basis? Okay, I had given you the example of DMart, if you remember, in our class. Next is location of the inventory. Where is the inventory located, in which godowns they are having? Let's say they have a godown in Lucknow where they keep their, let's say there they have the work in progress there. With that, we'll remember work in progress. And their godown in Mumbai where they have the main finished goods, we'll have to have a procedure for inventory counting. So that is how we think. And last point is, when should we ideally go and check the inventory? Ideally on 31st of March evening we should go. That is when we'll get the correct figure of closing stock. That is basically timing of inventory counting. Timing of inventory counting. This is the first 9 points in this case. Okay, let's go further. Question number 2. Sir, what are the audit procedures in relation to inventory? What will the auditor do? We had done the imagination of our classroom as a go down. I told you, outside the classroom door, the management has given instructions for their staff members to count the inventory, how to inventory counting should be done. That is instructions given by the management to their staff. We enter the door and we see that the staff is working as per that requirement of the management. We do observation. Then I come and sit here on my place and I ask the various staff members to get few boxes, random boxes. I ask them to show the box and see whether number of inventory in a box is what the management had told. Let's say they had told that each box will contain 100 iPhone boxes will be there, small box of iPhone. I will check whether 100 box of iPhone is there or not. I'm doing something so called as performing count procedures. Next, I will ask them to remove the iPhone boxes, maybe few, 2 or 3 I'll ask them to show to see whether it is the latest iPhone or not, to see whether the quality is there or not. That is called inspection. And finally, when you multiply quantity into quality, that is basically the rate, quality will give you the rate, we'll get the inventory value. Inventory value, I'll check whether it is matching with the final inventory value that the company is showing in their closing stock in the profit and loss account, trading P&L, if they're showing that or not. I'll check that. When you check these areas, it is basically called as, sir, audit procedures in relation to inventory. Simple, 5 points. Next one. Sir, in relation to situations, sir, can there be situations where you cannot go on 31st of March? Yes, there can be. So in that case, we should ideally select an alternative date. If you select an alternative date, let's say in our example, we took 4th April. In that case, sir, then you will go on 4th April. So you'll get the inventory as on 4th April. So what to do, sir, for inventory between 1st April and 4th April? You have to do something called as, you have done in foundation, stock reconciliation. Stock reconciliation. So basically inventory which has come in the godown in that period, 1st April, 4th April, you will subtract. Inventory which has gone out, you will add back. So that you are doing something called as intervening period transaction you're checking. Sir, if it is impossible to check the inventory, my students will recollect. We had done an example of Kashmir godown example, our favorite example. In that case, sir, it is impracticable to check the inventory. In that case, we will not reach the RL level. So we'll try to do alternative audit procedures. If that also fails, of course, we have our dear standard 705 because we are not able to reach the RL level and we feel there may be material misstatement, which if not pervasive, qualified report. If it is pervasive, then disclaimer of opinion. Are you there with me, yes or no? Simple. That covers question number 3, situations. Question number 4, inventory with third party. Very simple. Sir, in that case, what do we check? First, we can take confirmation from third party. Sir, we can ourselves go and do the inspection. And last is we can do other audit procedures, which can help us in getting the evidence. Sir, what other audit procedures we can do? So for that, we had done a code called, if you remember, CARD. CARD was what? Very simple. Sir, again, we can take confirmation. That is repeated again. Sir, we can ourselves attend or arrange for another auditor to attend the inventory counting. Sir, we can check the another auditor's report so that we come to know whether they have flagged any transaction or they have reported about some matter which is not kept properly. And D is documentation we'll inspect. We'll inspect the documentation maintained by the third party. Documentation. Easy, simple to understand this area. Okay. Next is in relation to litigation and claims. We did 2 questions. First is identification and second is where if RMM is high. If RMM is high, we had done an excellent diagram. I'll take you there. First, how will you identify regarding litigation claims with third parties? First is we will do the inquiry of the management and in-house legal counsel. With that, we will identify if court case is going on. Second, we will check our correspondence with the external legal counsel. Any email communication is there between the management and the external legal counsel. And we'll check the minutes of meeting of the TCWG. Third, we'll check the legal expense account. Only 3 points. You can see here also, inquire the management and with in-house legal counsel, review the minutes of meeting between of TCWG and any correspondence between the entity and the ELC, external legal counsel, and reviewing the legal expense account. Similar points. Easy. Sir, if RMM is there, if risk of material misstatement is there regarding litigation and claims, what all will we check? We did this chart, if you remember. Very simple. Litigation and claims are there. If RM, in that case, if they have lied about the court cases, then in that case, RMM is high because they have lied about the court cases. But sir, if other litigation claims are there, which may exist, which they are keeping it hidden, they are not revealing it, then again, RMM can be there. If they have lied to us or kept any litigation claims hidden, in that case, we feel like as an auditor to communicate with the external legal counsel or to meet the external legal counsel. Meeting we'll see later. But communication, how will it happen? Sir, I want to communicate with the external legal counsel. Then what is the procedure? The auditor will go and tell the management, I want to speak to the external legal counsel. I want to communicate to him. By email, I want to communicate. If they don't give the permission, you will do alternative audit procedures. If they give the permission, you want to communicate with something called a letter of inquiry, which gives the direct communication access between you and the external legal counsel, which the management may not accept. Management will tell you, no, you have to give a letter of specific inquiry. Ask your questions in a specific manner. That is the maximum communication we can allow. In that case, you understand here, we have to communicate with a letter of specific inquiry. In this case, what all will be include? Will include the list of litigation and claims. Will include the management assessment, what they feel, win the case, lose the case, which how much amount, lose the case, how much amount, and then we'll tell the external legal counsel, do you think that the management's assessment is reasonable or not? And they have to give their reasonableness for each case. We will tell them, mention if the list is incomplete, it means are there any more cases, or if the list is incorrect, are they mentioning anything wrong? We'll request the external legal counsel to give their comment on that. Okay. Next. If the matter at disco matters, disco, I don't know whether you remember disco matters. Disagreement between the management and the external legal counsel is there. In that case, I will prefer meeting the external legal counsel. If there is a significant risk involved, the significant risk is a relative anti-story, then I will prefer meeting the external legal counsel. If there is a complex matter which is there, let's say cryptocurrency matter, foreign exchange matter, money laundering matter, I'll prefer meeting the external legal counsel. Suppose if permission is not given by the management to meet the external legal counsel. In that case, I'm stuck. I will do alternative audit procedures. If that also fail, I'll report as per 705. If external legal counsel, we send the email or we go to meet them, but they don't respond. They're not willing to communicate with us or meet us. That case, what we can do? We can do alternative audit procedures, then report as per 705. Next, external legal counsel is prohibited from responding. Prohibited. They are code of ethics as per Bar Council of India Code of Ethics. The Code of Ethics says you cannot communicate with any person other than the client. So they cannot communicate with the auditor. In that case, again, alternate process will do and report as per 705. Same thing. Are you there with me, yes or no? That completes your excellent area in relation to litigation and claims. Superb area. 2 questions only. Very easy to identify it in the examination and score marks. Okay. So do it well. Okay. All these charts are for you. So do it properly. Next. We do this area. Very simple. Very easy. Segment information. First area, segment information. First question is, sir, what is the, sorry, not this one. First is, sir, what are the audit procedures we will do to obtain sufficient appropriate audit evidence regarding segment information? So we did this answer. In that case, look at the audit procedures. We'll understand the methods used by the management. We'll see whether the disclosure is done as per AFRF, and we'll see whether we'll test the method, whether they work properly or not. And finally, because the data will be in disaggregated form in segment information, it is of great help for us to go for analytical procedures. Next is, sir, in order to understand the method used by the management. Second question is this: what should the auditor do? Auditor should check how the transaction, how the transfers are recorded, how the sales are recorded, how the charges are recorded, depending on the company situation regarding segment information. Second, how the asset allocation is done. What was the budget? How have they met or exceeded or not met the target? That is called as compare with budget. And finally, we'll check the consistency with the prior period. Previously, how they were doing, how they were showing segment information. Now, how they are showing it. Are you there with me, yes or no? So that is basically this question. This completes our essay 501. We move on to a very beautiful standard. I love this standard a lot. This is called essay 505. Let's start. Shell confirmation. My students, I hope you remember the basic example here. We did the Tetris example in the class. Okay. This example we had done. Okay. Let's start with this one by one. Let's go for it. What is the meaning of external confirmation? It's a direct written response to the auditor from a third party, that is a confirming party, in paper form or electronic or other medium. That is the meaning here. Question number one. Question number two. Question number two, we go to the content part. Do it with me. Be in flow. This was this question. What information can be confirmed using external confirmation? In this case, I told you this question is not there in the module, but I have included in our notes because it was there in the earlier syllabus. It can very well come as a very good question in the examination. We have done PINPA, correct? Property, investment, inventory, bank balance, bank borrowing, account receivable, accounts payable. Regarding these matters, examples of information to be confirmed. Question number three, we go to the big guns now, one by one. Let's start question number three. Question number three, we go to factors to be considered while designing confirmation request. What are the factors you'll keep in mind? First, sir, which assertion do we want to take external confirmation about? Sir, in that assertion, what is the risk of a material misstatement? What is the problem that is occurring? Risk of material misstatement. So we know the matter, we know the problem. We know the matter, we know the problem. Now, with the matter and the problem, we go to the management and tell them, please give me the access to speak to your to the external party. So I will go and take management authorization. Management may not give the permission, then that goes to question number four. Wait for it. Management gives the permission, then we are doing the third point. So point number three is the management authorization. Next, we look at our prior experience of dealing with the management expert, that is, sorry, of dealing with the external party. That is point number four. We look out the layout and presentation should be proper. Point number five. We look at the method of communication. Point number six. And we look at the ability of the confirming party to respond. Even if I go and take the external confirmation, but if they are not able to respond, then what is the use? They should have the ability. That is point number seven. Simple to understand this area here. Sir, if management authorization is not received, then we'll inquire regarding the reasons why you are not giving me response. Their reasons can be valid and reasonable or not reasonable. Valid and reasonable, if it is there, then in that case, you are in a bit of a situation because you are not reaching the RL level. You're stuck. RL level is here. You're stuck in the middle only. But their reason is valid also. So you cannot debate with them. So you will look at the effect that it has, implication that it has on the risk of material misstatement and on the audit procedures. If you are still not able to reach the R level, then of course you have only one option. You will try to do alternative audit procedures. If alternative audit procedures works, great, you have reached the R level. If it doesn't work, sad, because now you'll go to the TCWG and communicate with them. If they are also telling, sorry, we cannot do anything in this situation, then you'll report as per 705. That is how the flow will be. Suppose if reasons are not reasonable, then you will report, then you will communicate with TCWG, SA 260, and then report as per 705. That is your modified opinion. That is how we flow. Are you there with me, yes or no? Simple question, simple area. This is your question number four in this area. Yeah. Question number five. Let's start. Question number five was in relation to, I think it was at the end, evaluation of evidence obtained. Let's do this area. Sir, we take the confirmation from the third party. We asked, have you purchased goods worth rupees 5 crores? They say, yes, we have purchased goods worth rupees 5 crores. They are in agreement. That can be the first situation. Second, they say, no, what 5 crores? We have purchased goods worth rupees only 3 crores. So in our client's balance sheet, they are showing 5 crores. But confirming party, third party has given response of 3 crores. That difference between 5 crores and 3 crores, which is 2 crores, is called as an exception. It is called as an exception. Third, they have given the response, but they've said, please don't rely on our response. We have not done the fact checking from our side. What is the use of responding? That is called the response is unreliable. That will make me a little angry. And last is you have non-response. They have not responded. They have not responded. Easy to understand this part here. Okay. That completes your question number 5. Question number 6. Now we enter into the definitions. We go to the beginning. So let's go to this part here. Just give me a second. Bolo. What is positive confirmation request? When we tell the party that the request that we are doing is a positive confirmation request, whether they agree with the figure that we are given or whether they disagree, we are requesting them to respond. What is negative confirmation request? We are telling them and we are doing them a favor to save their time. We are telling them, see, if you agree with it, don't respond. If you disagree with it, only then respond. That is called as negative confirmation request. Next is a non-response. Non-response will be when, wait for this, non-response will be when the confirming party doesn't respond to a positive confirmation request or the confirmation request is returned undelivered. This second part, no students forget. It can come in MCQs. Confirmation request returned undelivered. Be careful about it. Exception is what exception we just saw. Sir, the matter regarding which we asked and the response that they gave, if there is a difference in that, that is called as exception. Easy to understand this area. Question number 7 in this chapter. I don't know whether you know. This is my favorite question because this is a thinking question. You must have marked it as star for sure or important for sure. Question number 7. Question number 7 is what? Sir, negative confirmation request. Which all conditions should be present? Which condition should be present? In a code called red large. Red large is what? Sir, RMM is low. Only then that is the first condition for sending a negative confirmation request. Second, exception rate is very low. What we thought, what we got. That exception rate is very, very low. What we thought, what we got is nearby only. So you understand here exception rate is low. Next is D. D is what? Sir, this is the super point. Auditor should be sure that the third party will not disregard the auditor. It means that the third party will open the email, read it properly, respect the auditor, and then if he doesn't respond, then we can be sure that he agrees with the matter. If we are very sure about a third party, we know when he will open the email, not disregard us, respect the auditor, open the email, and then after that, if he disagrees, he will respond. Regarding this, we should be very confident that the third party will not disregard the auditor. That is one very important point. This we have done in the class. Disregard. Last point is you cannot take negative confirmation request regarding one-off transaction of a huge amount. You should not. Maximum you can take it off is for large number of small homogeneous account balances transaction condition. Large number of small means small in value, large in quantity, small in value. Homogeneous means similar transactions. For that, can you take it? The answer is yes. Are you there? We have done a code called red large. Perfect clarity till here. Okay, this is what we had done. This was basically in relation to. By the way, I hope you understand. We are not doing the explanation charts and all. So entire chart which I did for explanation, I'm not revising those. That was for explanation purpose. We are doing a quick recap of the points. This is question number 7. Go to the last question. We had this very simple area called as positive confirmation request and blank confirmation request. Sir, if amount is mentioned in a confirmation request, the third party may simply not verify before responding and say, 5 crores. Yes, confirm 5 crores. They may give such kind of response. So what we do is when we take confirmation, no, we give a blank confirmation request without mentioning the amount. So we say, please let us know the payment to be made to A Limited. We ask like this. In that case, you understand here, we are not mentioning the amount. Two things can happen. Good thing is confirming party, if they are sincere, they will do the background checking and then give us a response. So we are forcing the confirming party will check and then respond. Disadvantage is if that person is a lazy person, lower response rate will be there. He will not respond to our matter. Are you there with me? Yes or no? That completes this matter. Easy. That is basically your SA 505. Let's move on to the next one. SA 510. 510, the good thing is it is in one chart itself, except one or two areas. Let's start. We are doing initial audit engagement. Tell me, when is it called initial audit engagement? When? Regarding the client, previously somebody else did the audit and first time you are getting appointed as an auditor. Or till now, nobody has done the audit and you are getting appointed as an auditor. That is when we call it as initial audit engagement, which covers opening balances. Okay, that is the definition. Second, sir, what are the audit procedures that we do in that? Or let's do it in our flow. Second, we did our objectives. So this is basically our objectives. Okay, let me do one thing. Let me do the important questions here. That is more important to focus. We'll do audit procedures in relation to initial audit engagements. Okay. What do we do? First, look at the screen. Whether closing balance of last year in this case or this case where previous auditor was there, here no audit was done previously. In both the cases, last year's closing balance is correctly brought forward as the opening balance. So carry forward it, properly carry forward it. First is that. Second, whether the accounting policies are consistent with the prior period. That is what we are checking. Second point. Third point, what is better? Previously, somebody has done the audit, or previously no audit was done? Previously, somebody did the audit, because then we can rely on the audited financial statement, previous audit reports, and any other documents. And fourth, but not the least, sir, if audit was not done, we'll have to do specific audit procedures in that circumstance. Are you there with me, yes or no? Next area. Sir, if closing balance is closing balance become the opening balance, and opening balance, if I find any material misstatement is identified, in that case, in our mind, line goes up. To bring, if the line goes up, we have to do more hard work to bring the line down. We have to do additional audit procedures, and I'll note all the misstatements, give it to management for correction. When I give the management to correct the misstatement, that is called SA 450, evaluation of misstatements, which we have already seen while learning in chapter number 7, SA 450. Are you there with me, yes or no? Next, one of the best questions to ask, this was audit procedures. This is if opening balance contain any material misstatement. This is the next question. One of the best questions, I feel, again, because the thinking question, nature and extent of audit procedure depends on which factors? On which factors? First, sir, when will you check more areas in opening balances? When you will check less areas in relation to opening balances? That is the question. I look at the nature and the detailing in relation to TAD, transaction, account balance, and disclosures. Second, I look at the accounting policies were followed or not. If they were followed, I'll be under less stress. If not followed, I'll be under more stress in relation to opening balances. I will see in the previous auditor whether he gave a modified opinion or not. If he gave modified opinion, I'll be more worried. If he did not give a modified opinion, I'll be less worried. And last is opening balance significance. What is the value of opening balance in that entire ledger? If it's a huge value, then I'll be worried more about the opening balances. If it is a small value in that entire ledger, other transactions are in crores and this opening balance is in thousands, then I'll not worry about it. But if it is vice versa, other transactions in the ledger are in thousands and the opening balance is in crores, then suddenly you will give more value to the opening balance significance. We have done a code called NAMO in this. Are you there with me, yes or no? SA 510 was this. Major areas of SA 510. Okay, important areas. Let's go to SA 550. Very simple area. Let's start. That will end chapter 4 for us. Let's do it quickly. Let's start. SA 550. This is basically regarding related parties. Let's go for it. Sir, what is the meaning of related parties? Everyone look here. If we are doing audit of A Limited, this is the reporting entity. We are making the audit report for this entity. So we'll call them as reporting entity. Any entity having control or significant influence on the reporting entity, look here, directly or indirectly. X is having shares directly, Y is having indirectly, and they become our related parties. If the reporting entity has control or significant influence directly or indirectly, then those two entities below us can become our related parties. Okay. Next, if X Limited has one subsidiary called B Limited and we are the other subsidiary, then from the same parent, two children are coming out, A Limited and B Limited. So A Limited become related parties because they are siblings. Easy. Next one. If Mukesh Ambani ji holds 60% of A Limited, Neeta Ambani ji holds 80% of D Limited, then A Limited and D Limited become related parties. They become related parties of each other because the owners are related. If A Limited's key management includes Mr. PQR and Mr. PQR are also the key management of E Limited, then because the companies have the common key management, they become related parties. They become what? Related parties. Are you there with me, yes or no? Comfortable? Can you go ahead now? Next. But see, this exception, which I am now highlighting to you in red, this, look here, see. Sir, X Limited is a holding company. Two entities are there below it. Sir, will it apply in all cases? The answer is no. If government is having control over two government companies, let's say ONGC and Steel Authority of India Limited, in that case, both these government companies will not be related parties of each other unless they are having significant transactions between them or they are sharing resources. Only then they'll be related. Otherwise, even if the government is the common controlling entity, both the companies will not be related parties. They're clearly given that as an exception. Okay. That completes our question number 1. That is meaning. Let's go to question number 2. This was a simple read area. What is control, significant influence? I told you control is nothing but power to govern. Significant influence is the power to participate. Just keep that in mind. Okay. Let's go to question number 3. Very good question again. See this. Sir, the nature of related party relationships and transaction. This was this. We have done a code called NICE. Nice. Again, I am going to tell you again, I am not going into the in-depth explanation here. Simple points coverage. Look here, see. First, normal market terms and conditions may not, the related party transaction may not be conducted under that scenario. When you are dealing with your brother, you don't tell your brother, pay me now only. You don't tell your brother, credit period given to you is 90 days. You don't tell all those things. He's a related party. He can pay you whenever you want, whenever he wants. And even if he doesn't pay you, you're not going to ban your brother. So you understand here in that case, related party transaction don't happen under normal market terms and conditions. And second, information system may be ineffective. My brother does some service for me. I'm very happy with the service. When I go to pay him, he doesn't accept it. So I gift him on his marriage day. I gift him when he has his first child. I gift him some gold to him. So you understand here, he showed love by not accepting money. I'll show love by giving gift in one of his family functions. So you understand here, in that case, no transaction will be entered in the counting software. So information system will be ineffective. And third, complex and extensive range of relationship can be there, which can make it very difficult for the auditor to check, that the auditor has to keep in mind. So related party transaction, the nature of that is, remember, nature N, and remember the code NICE also starts with N. So N is normal market terms and condition, I is information system, and C is complex and extensive range of relationships. Are you there with me, yes or no? Simple. Let's go further. How will you understand related party transactions, related party relationships? Very simple area. Let's wrap it up. Simple. Sir, regarding any related party transaction, we look at whether the organization has identified the related parties, explained the nature of relationship, whether it is subsidiary, holding, associate, all those things, and have they entered into a transaction with them. First, we have to check these three things. Have they identified Mr. A is my related party, he is my brother, and I am entering into a sales transaction with him. So, nature, first identify the related party, nature of relationship, and whether we have entered into any kind of transaction with them. If there is related party transaction, auditor will ask questions to understand. Ask questions to understand. That is, auditor will inquire to understand. What he'll understand? Identifying accounting and disclosing as per AFRF, applicable financial reporting framework. Auditor will see whether proper authorization and approval is taken regarding related party transaction and transaction which are not in the ordinary course of business, not in the normal course of business. Clear to understand this area here? That is your understanding RPR and RPTs. Next, very good question. I like this question a lot. This is, how can the auditor verify existence of related party relationship? Which records and documents should he go through? Remember the word records and documents. You must have circled in your notes also. Records and documents you should go through. It is a very nice code. I see shareholders conflicting life in these documents was our code. Okay. So I has 5 things. Look here, see. Income tax returns will go through. Information supplied to the regulatory authorities. We look at the invoices, internal auditors report, and the investments made. That'll give us an idea who the company's related parties are. We'll look at contracts. Contracts is C. This is contracts. Contracts which are there with the KMP and the management of the company. Contracts which are, look here, see, not in the ordinary course of business. Contracts which are not in the not in the ordinary course of business. And contracts which have been renegotiated during the period. Recently renegotiated contracts we'll look at. Shareholders register to identify the company's principal shareholders. We'll see conflict of interest or conflicting relationship is there or not. That is what we'll check. A person who is the director of the company and also the company's principal supplier, that kind of relation is there or not, we'll check. Next is life insurance is taken for any person or not. And finally, any document that we have filed with the securities regulator. In the module and your note, we have given the word called prospectuses. They have given there. Are you there with me, yes or no? This basically covers this matter here. This completes your essay 550. That completes for us. We have 4, 4.1, 4.2, 4.3. We just completed 4 right now. Yeah. Okay, everyone, let's go ahead and do the revision of audit sampling. This is your essay 530. Okay. Very nice standard. I feel it is one of the best standards in your syllabus. I consider this as the peak of auditing. So you have to do this properly. Okay, let's start. Sampling means what? Sampling means if lot of transactions are available for checking, but you don't have the time to check all of them. So you'd select samples and give your opinion based on the sample. That is called sampling, as simple as that. So the data, all the transactions which are available of a certain type, example, all sales transaction available, we call it as sales population. Purchase transaction are called as purchase population. So out of that, when you take out one invoice, check it, keep it aside. Another invoice, check it, keep it aside. What you're doing is you're taking sampling. You're not checking all of them, you're checking few of them, but you're giving an opinion on all of them. You're checking few, but giving opinion on the entire population. That is called as sampling. Okay, let's go ahead. What is the meaning? According to SA 530, you will see it here. Audit sampling refers to the application of audit procedures to less than 100% of items within a population of audit relevance, such that all sampling units have a chance of selection in order to provide the auditor a reasonable basis on which to draw conclusions about the entire population. So the auditor can draw conclusion based on the sample, but about the population. That is basically called as sampling. Okay, nice definition, simple one also. Scope covers two things. You have something called as statistical sampling and non-statistical sampling, which we'll cover one by one in the coming areas. Let's see. What is population? Population, as I told you, is any type of transaction given in entirety. All sales transaction. 80,000 sales transactions are there. Invoices are lined up, let's say, from the floor till the top. So you understand here that is called as the sales population. What is population? Population refers to the entire set of data from which the sample is selected and about which the auditor wishes to draw conclusion. The auditor should select sample items in such a way that the sample can be expected to be representative of the population. This requires all items in the population to have an opportunity of being selected. That is basically your population definition. Population, when the management gives it to you, you ideally want the population to have we did a code in the class called CARE. The management should make the population with care. So what was care? Completeness should be there, appropriateness should be there, and it should be reliable. Completeness, appropriateness, and reliable. Simple. Very, very easy area. Next, we go to a very nice part which I like teaching. This is called approaches to sampling. Approaches to sampling basically means what? It means, sir, when we are checking the samples, in which method can we, you should not say select the samples, in which method can we go for checking the samples one by one, testing the sample one by one? Are we using technology? Not using technology. It comes to that. If you are using technology, in that case, you can call it as statistical sampling because nowadays softwares do that for you. And if you're not using technology and you're using purely the auditor's judgment and his experience, you call it as non-statistical sampling. So statistical and non-statistical sampling. Okay. So let's go for it one by one. What is statistical? So nowadays, technology, Caseware is a very famous, very well used CAT tool, that is computer assisted audit technique. When you go for your articleship, you will see Caseware being used by almost all the auditors. Very commonly used software. Do you understand here? What does it do? It helps with the random selection of items. It chooses the transaction with mathematics and probability theory, and which is more scientific. Scientific means it can be proved in the court. And third is sample risk can be measured. The software itself identifies, oh, out of 80,000 transactions, the person who is using the application, the software, will only get the time to check 32,000 transactions. So you understand here sample risk is already measured. You understand here that is your RMS, random selection, mathematics and probability theory, and sample risk is measured, RMS. Anything that is not statistical, where you understand it is not statistical, where the experience and judgment of auditor is involved, that is called as non-statistical sampling. Are you there with me, yes or no? Simple. That is basically approaches to sampling. Statistical and non-statistical. Remember, approach to sampling will never determine the sample size. You are selecting the sample size purely because of inherent limitation of auditing, because of lack of time. If I give a plate of food to you, or there is unlimited food, you will eat the same amount of food whether you use a spoon or whether you are using your hand. Your approach of eating will not determine how much food you can eat. So similarly, how much you can check is 32,000 transaction. Which approach you take, statistical, non-statistical, will never change the sample size. So approaches to sampling does not determine the sample size. Very important area to remember. Easy. So we complete this area. Next, we go to the next part. Sir, what are the advantages of statistical sampling? We did a code here called better score. If we use sampling, or if we use, let's say, statistical sampling, first, it provides a better description of large mass of data than a complete examination of all the data. If sample represents the population, it is better to check few, which represents the entire population, rather than sitting and checking the entire population. That is what they mean to say. Second, Better score was the code. Better is here. Score S is sample size does not increase the proportion to the increase in the size of the area or population tested. C. If the company's number of transactions is multiplying by 3 times, 4 times, sales what was there last year is multiplied by 3 times. Suddenly you cannot check 3 times the number of transactions. You cannot check. If sales has increased by 3 times in terms of number of transactions, you cannot check 3 times the invoices now. That cannot increase in that way, because for you, inherent limitation is the time factor. Are you there? That is basically this point here. Let's go further. It provides a means of deriving a calculated risk, correct? Because sir, we are taking few transaction commenting on all the invoices. So you understand here there is always a calculated risk involved, but that is a risk that we take. Next is, sir, it is more objective and thereby more defensible in the court. Because we are using numbers, especially statistical sampling, it is easy to prove in the court. If I use non-statistical sampling, it is the way your brain has processed the transaction or processed how we should go about with the sampling process. You cannot prove that in the court unless you have written it down properly. Brain functioning, you cannot open your brain and show in the court, but calculations or statistical sampling, you can show in the court. Hence, it is more defensible in the court of law. Finally, for statistical sampling, I don't know whether you guys remember, we had done this example of Mumbai, Bangalore, Delhi, Chennai, if you remember this area. So we had taken this example in the class, and based on that, we decided that, sir, we use two things, that is risk and precision to decide the minimum sample size. Minimum sample size. We have done this question here. Okay. This completes your advantage of statistical sampling. The code is better score. Let's go to the next one. Next area. Non-statistical sampling, very simple area. It is a short note. I'll just explain to you in a quick manner so that you get a grip on this. Non-statistical sampling is when the auditor is simply using his experience and judgment. It can be the way the auditor decides. They are given few examples here. You can take the transactions of March, June, September. You can take based on value of item, top 10 highest value. You can decide the way you want. Just that whenever you select the samples, you should ensure that you don't form a pattern. See, avoid establishing a pattern. Every year you're checking June, July, August, September. Next year also June, July, August, September. After that also June, July, August, September. Never check in such a pattern, because the management, if they come to know, then they will start manipulating the transaction other than June, July, August, September. Are you there with me, yes or no? Finally, non-statistical sampling is criticized that it is neither objective nor scientific true. It is not numerical, hence it is difficult to prove in the court. Are you there? That is non-statistical sampling. Okay. We go to one more excellent short note. I love teaching this area. This is called sampling versus traditional method of auditing. What is traditional method of auditing? Traditional method means checking everything. Checking everything. Problem with checking everything is that if you check everything, if you go to check everything, it is very time consuming, and plus you will not be able to check in detail. You will have to just do touch and go, surface level checking you will do. But in case of sampling, what you're doing is you're checking few transactions, but you're checking in much more in depth. The extent, depth of checking is much more. That is basically this. Okay. So they have said here, auditors realize that you can derive good satisfaction by undertaking much lesser checking by adoption of this technique. It is a mathematical truth that the sample, if picked purely on random basis, would reveal features and characteristics of the population. So if you select the samples carefully, that will reveal the features of the population. Let's go further. There's the important line. Sampling is used as part of test of controls. Even in control testing, there is sampling involved. I don't know whether you remember or not, because it's been a while. We are taking a revision class. You understand here, salary checking when we saw, I told you salary is the internal control and these are the specifics that you will check. Now, when you check this, all these controls regarding each of the matters, you cannot check all controls. You may say, sir, I'll check this, sir, I may check allowances, I may check PF, ESI details, I may check, let's say, PSP. Sir, I'll check these 5 out of 10. So even in the controls of each of these areas, you're not checking all the controls. You're checking only sampling in controls also. Are you there with me? Yes or no? Simple. That is what we did in this part. Yep. Great. Let's go further now. There's a good question here. Again, a very nice question. This chapter is something which is a teacher's delight, okay, to teach, because it's amazing. A lot of complexities. Factors that would be considered for deciding upon the extent of checking on a sampling plan. Sir, when will I go more in depth to check the sampling plan? When will I do that more? When the risk is high. When the risk is high. Simple. Tell me, if the size of the organization is big, tell me, if the size is big, is the risk high? The answer is yes. So my extent of checking of sampling plan will be more. Internal controls, if they are good, they're in place. In that case, the risk is lower. So my extent of checking of sampling plan will be less. If books and records are there in place, risk is lower. Action of checking or sampling plan will be lower. Next, if tolerable error range, for example of this, the girl, while doing the audit, had a broader range in terms of tolerance. The boy, we are taking the example, he had a lower range of tolerance. In that case, I told you that if the tolerable error range, more mistakes you are able to tolerate, in that case, you will feel risk less. Hence, in that case, the extent of checking of the sampling plan will be lower. But if you can tolerate less risk, in that case, more times the issues will go out of your tolerance range. Because if it is going out of your tolerance range, you understand that you will feel the risk more. Hence, you will feel like checking more areas. The sampling will increase. Same thing, see, look here. For the girl, the risk will be low because she can tolerate more. So she'll continue normal audit work. Sample size will stay the same. But for the boy, risk will go. It will go out of his range more often, so the risk will be high. So audit work will increase. Hence, the sample size will be more. That is what we had seen. Okay. Let's go to the next one. Let's see this. Please here. Tolerable error range, if it is more, then extent of checking will be less. And degree of desired confidence, if you desire more confidence from controls, you need to do more checking. Extent of checking or sampling plan will be more, is what we had done. Okay. We had a code here called SBI Tode, which you must have written. That is basically the code for this. Easy, simple. That completes your this question. Now we enter the big fish. And the big fish is the sampling process, the last area in this part of sampling. Okay, last area, but you know the size, it is a chapter in itself. So now we are doing this, we are doing something called as the sampling process. This is the diagram that we had completed. Okay, let's do this. Especially, you know where I'll focus more on. I'll focus more on sample size, this area. I'll focus more on sample selection, two important areas. Of course, we'll see the entire thing, but these two will be my prime targets. Okay, let's start please here. Sample design. How do you select the sample design? Look here, please. By using the audit procedures, you will try to reach the purpose. Purpose is the RA level. For reaching that purpose, you need to gather audit evidence, and evidence should be as per say 500. In your journey, will you face misstatements? The answer is less. Line will go up. You have to bring the line down by doing further or additional audit procedures. That is called response to risk. And the auditor is better. It is better for the auditor to stratify the data and also ensure that value weighted selection is done. So value weighted selection should be there. Okay. Let's go further. The auditor will then select the sample size. Sample size, two very important questions, prime questions in your audit syllabus, super questions. That is factors influencing sample size in test of controls. Second is factors influencing sample size in test of details. For which, if you remember, we had done this diagram, which is the semicircle one. This diagram we had done. Okay. What are the factors that affect the sample size in case of test of controls? Let's see this one by one. You have to focus on the pink area. Please see here. First is, sir, if risk assessment is high, then sample selection should be done more. If you do that, the advantage that you get is RMM eventually will be lower when you go for substantive procedures. That is the advantage that you get. Second factors you will consider. Second factor you will consider while test of controls by selecting the samples. Second point is, sir, if tolerable rate of deviation is more, if you are able to tolerate more deviation in controls, it's a good thing because then you will not get flustered easily. In that case, your sample selection will be lower. If you're already expecting more things to go wrong, so if expected rate of deviation is more, sample size will be higher. Sample size will be higher. Next one. If large population is there, sample size will have negligible effect. It will not fluctuate too much. I told you in the class also, 80,000 transaction becomes 1.6 lakhs, 1.6 lakhs becomes 3.2 lakhs. Your checking will not double. It may increase, but in a negligible way. Out of 80,000, you check 32,000. Now, when it is 80 becomes 1.6 lakhs, you will not check double. You will not check 64,000. You will check maybe little bit more, 34,000, 36,000. You may check. So it will increase only negligibly. And a small population is there, my dear students. In that case, sample selection should not matter. You should check all transactions. All transaction is better. In this, if you remember, you must have written your notes also. We had done the Maruti Suzuki versus Rolls Royce example in this part. Okay, that is what we had done. Let's go to the next area. Please here, do it with me. Factors influencing sample size in case of test of details. Now you have to focus on the green areas. Do it with me. Sir, if line goes up, we have to bring the line down. Line goes up, we have to bring the line down. We have to do more work. So that entire area, if you follow this line, we are doing it here. If RMM is high, sample size will be more, sample selection will be more. We'll check more transactions. Okay. Next, if tolerable misstatement is more, sample size will be less. If expected misstatements are there, when I check the controls, I was not very happy with the controls. So I'm expecting more misstatements to happen, more misstatements will come about. So in that case, my sample size will be more. Again, this point remains the same. Large population, sample size, negligible effect. Small population, sample selection is not the right procedure. It is better for you to check all transactions. Okay. Next area, stratification, grouping of the data. I gave you the example, I think, in the class of my sister and I, the way we used to divide the chocolates in the fridge. So because she used to put it in proper compartments, it is easier for her to find the chocolate. And I don't know whether you remember that example. We had done it in the class. You remember? Good. So strategy, because this was done around what for you? 3-4 months back? Audit? 3 months, 3-4 months back. So stratification. If stratification is done, in that case, good thing, because it will be easier for you to select the samples. And normally you will not be required to take more samples. So sample size will remain low. Next, sir, if in substantive procedures we use one of the substantive procedures, that is, let's say substantive analytical procedures, and we get good satisfaction from that, then from the other substantive procedure, sample size will be less. Sample size will be required to take less because we are already satisfied with the first method. Are you there with me? Yes or no? Let's go to the next area. In this, let's do it. Come to this part, into this area. Sample selection, we are doing, what are the sample selection methods? Let's start. This is your Harabomzi. Harabomzi, which is haphazard sampling, random selection, block sampling, monetary unit sampling, and systematic sampling is also called as interval sampling. Okay, let's start. First is we have haphazard sampling. Haphazard sampling is when you are doing random selection. I'll show you the chart for it so that it's easy for you to also recollect. We had done, if you remember, we had done this chart, we had done this area. Random selection is done, but human bias can also play a role. So in haphazard sampling, you have to ensure that human bias does not affect your selection. That is haphazard sampling. My favorite sampling method is this random sampling, simple to implement, easy to do. Random sampling, in which you are using random number tables, or in today's time you can put in ChatGPT. I have 80,000 transactions with me. I can select only 32,000 transactions. Please give me random 32,000 numbers between 1 to 80,000. ChatGPT will just throw 32 numbers in front of you. Whatever numbers come, you check those invoices. As simple as that. In earlier times, random number tables used to be there, but we are in much more better technological era. So you will use ChatGPT in your time. Okay. But human bias does not play a role. So whatever the software or the system tells you to select, you will check those transactions without any kind of bias. Okay. Example, in module, they are given a very basic example. You put all the invoice numbers in a drum. And from the drum you select, whichever number comes, you will blindly check that. You will not question the procedure. So no biasness is there. Okay. That is basically this. Random sampling has two parts: simple random sampling and stratified sampling. My bad. Simple random sampling and stratified sampling. You have these two methods here. Easy. So if you simply do random selection, simple random sampling, if you first divide it into group, Mumbai branch different, Bangalore different, Delhi different, Chennai different, and then do random sampling. That is called as stratified sampling. As simple as that. Okay. Monetary unit value, you know very well. This is what we saw in materiality example. Higher value transactions, you check more. Lower transaction value, you check less. Okay. Next, systematic sampling is what? Sir, if there are 600 students, out of which you have to select 10 students for take up, I'll make a student stand, ask them a question, they'll have to answer. So if I want to do it in a systematic manner, I should take every 60th student and ask them the question, and they should be able to answer. Similarly, if there are 10,000 invoices, I have time to check only, let's say, 100 invoices. So I will take every 100th invoice number 100, 200, 300, 400, 500. I'll go in a systematic way. If I do that, that is called systematic sampling or interval sampling. Advantage, you get a very organized way of checking the samples. Disadvantage, you should not follow a pattern. You should keep changing the starting value. So first time I start with 100, then 100, 200, 300. Next time I should start with 50. So it will be 50, 150, 250, 350. Next time I should start with I should start with 25. So 25, 125, 225, 325, 425. Like that I should go about with the work. If I do it in that manner, I will be able to do the work in a better way. Are you there with me, yes or no? So change the starting point. Remember this, huh? Next is block selection. Block selection means you're taking a transaction in chunks. Look at the area shaded in yellow. I want to check 32,000 transaction. I'm taking this entire 20,000 transaction chunk. I'm taking this entire 12,000 transaction entirely in chunk. But you do that, the problem is I'll get transactions having similar feature. Similar feature. There will not be any variety. To understand here in samples, what works in your favor is if you take more variety, then basically you come to know that, oh, this is better in this. Oh, Delhi transaction, this was wrong. Oh, Mumbai, this was problem. Oh, in Chennai, the accountant has not maintained this properly. You get more variety. But if you go for chunks of transaction, then basically the transactions are having similar characteristics. So it doesn't help your audit procedure. Easy to understand this area. So this is your Hara Bombs, as I told you, FSR sampling, random sampling, block selection, monetary unit sampling, and you have systematic sampling, also called as interval sampling. Okay, that completes this part. Let's go to the main chart once again and do this in a much better manner now. Let's go for it. Please here. Now we are entering into audit procedure. This is what I explained to you. If you remember in the class, we had taken this check example, check number 350001, and then I told you there was a check number 350002. This is the check example we had taken. Let's do this. Let's see this area. Let's start. The auditor, when he does his when auditor does his audit procedures, in that case, the auditor while doing his audit procedures, he wants to reach the purpose. If audit procedure is not applicable on an item, then the auditor will perform his audit procedures on a replacement item. If I tell the management, I see this particular problem is there. If you are able to replace that and help me with a better evidence, then I'm satisfied. That is called replacement item. If they don't give me that, then suddenly in my mind, I feel some problem is there. As some problem is there is given here. See, if audit procedures cannot be applied, replacement item is not given, or replacement item is not proper, then in case of test of controls, I'll feel there is deviation in relation to controls. In case of substantive procedures, I'll feel there is misstatement. Basically, how the matter should have been stated, it is not stated in the financial statements. That is what I'll feel. If there is deviation or misstatement, it is very important for me to look at the nature and cause of it. What is it? What is causing it? What is it? What is causing it? What is it? Nature. What is causing it? Cause of the deviation or misstatement. I will see whether that mistake is having a common feature or not. Example, TDS miscalculated for all employees for a particular month. So for all employees, that common feature mistake is there. If common feature mistake is there, identify all items having the common feature. If that is the case, then evaluate the possible effects on the audit procedures, how to proceed ahead with the audit work. Plus, note the issues down and look at the purple arrow going across. Note the issues down and give it to the management. Give it to the management for a broad view of the scale of misstatements. Next, sir, if common feature is not there, then what to do? In that case, it means that there is a one-off mistake which has happened. This management can easily accept. Sometimes they'll say, oh, all these transactions are having this feature, or this one transaction having some problem. Example, manual way of calculating TDS was there. For all employees, TDS is properly deducted at 10%. But for one employee, by mistake, GST rate was taken, TDS was deducted at 18%. In that case, the management may accept, oh, yeah, this one issue has happened. Such kind of issue, which is not having common feature, is called anomaly. It is called anomaly. For anomaly, you have to obtain high degree of certainty that it doesn't represent the population. Very, very important. Then this also we have to inform the management. Look at this arrow going up. This also you'll inform the management. So it is excluded from the projected misstatement. That is the broad view that you give here. In the end, whether you give anomaly, whether you give con feature for management, both are misstatements only. They have to correct it. And after they have corrected it, it is your job to check if they still remain uncorrected. That is what you will check. Finally, what is the auditor's biggest fear? Biggest fear is after doing so much hard work, after taking samples, still, if I'm not satisfied that sample represents the population or not, then that is the worst thing. It means even after doing sampling, you feel, oh, population must be having much more data, much more issues which I have not checked yet. That is the worst feeling. So you understand here, auditor has to be absolutely sure. PCR, evaluating results of sampling, results of the sample, auditor should check whether sample provides a reasonable basis for conclusion about the population. Auditor should be very sure about this. Comfortable? This completes your chapter number 4.1, that is sampling. Easy? Yeah. Let's go to the next chapter. We are next heading towards the next part, that is 4.2, analytical procedures, as we call it. It is, of course, your analytical procedures. Okay, let's start this year. Yeah, we have an excellent chart for analytical procedures. 13 questions you have to master. If you know these questions, you are a master in analytical procedures. Okay, let's go for it one by one. Let's get to the kill. Let's start this year. First, meaning of analytical procedures. What is analytical procedures? You have to divide the definition always into three parts. As per SA 520, analytical procedures is evaluation of financial information. That is the first part. Through analysis of plausible, means sensible relationship. Between what? Between financial and non-financial data. Between financial and non-financial data. That is the breakup of the definition. Okay. Evaluation of financial information through analysis of plausible relationships between financial and non-financial data. That is the definition here. Okay. Next, sir, what are the examples of analytical procedures? Super simple. Sir, examples can be, we can compare the data with the prior period, with the anticipated results, and or with the similar industry information, with the past or what you are expecting in the future or what is happening at present. So these are the 3 points here. Third point, commonly used ratios. I told you to have fun in this. You can write all your FM ratios in this question. And this has come in the exam. So you have to ensure that you can write any ratio of your choice. They have given net profit or net loss to sales ratio, gross profit to sales ratio. They are given stock turnover ratio, inventory turnover ratio in the module. You can write many other ratios that you know. Okay. Let's go further. We are now doing what is the purpose of analytical procedures. The code is pain end. Pain end. Let's start. Profit and loss account comparison with the prior periods. A will be audit evidence you are obtaining which is relevant and reliable in this inter-firm, intra-firm comparison. And after you do test of details, when you reach the end of the audit, you can use analytical procedures to confirm whether your results after test of details are correct or not. So the point is end of the audit, it can be useful. So pain end. Okay. We completed this part. What are the examples of purposes of analytical procedures? We have done this area. If you remember, we had made a diagram in this. First is for trade receivables. Next is trade payables, inventory. Then after that, we will have gross profit, that is fall in the gross profit ratio. And fifth one was in relation to interest accrued and interest or dividend accrued, basically for that. Okay. This completes our 5 examples in relation to the purposes of analytical procedures. Next is, what is the timing of analytical procedures? It can be done at the planning phase, testing phase, completion phase. This is the one-line question which I given. I gave a one-line question because it leads you to the next question, that is benefits. Sir, if we use analytical procedure at the planning phase, it can help us to determine the nature, timing, and extent of audit procedures to be done later. If we use analytical procedures at a testing phase, it will help us to obtain audit evidence. So if we use analytical procedures right at the end, at the completion phase, it will help us in our overall review of the financial statements. These were the points. Okay, this is your question number 7. Question number 8, superb question, one of the favorite questions to teach. Factors for substantive audit procedures. What is this area? In the last batch, I remember the batch just after yours. This area took 1 hour 15 minutes in the class. Students were super, what do you call, involved in this discussion. Very good one. This is your me cooking for family story. Go for it, tell me. First is data availability, disaggregation, source, fire comes, inherent risk. Then you put the fire down first. Then you message your friend, that is called account type. Then put coriander leaves, that is called nature of assertion. Then you close the lid, the bhaji that you have made, take it to your family members, then ask them to predict. That is called predictability. Easy. So the points are data availability, disaggregation, source, inherent risk, account type, nature of assertion, and predictability. Okay, good. Next one. When can we use analytical procedure as a substantive audit procedures? Only when we are assured. What is assured? Suitability, reliability, expectation is we can come with an expectation and difference if you are able to find. If these 4 areas are covered, suitability, reliability, expectation, difference, you can go ahead and do the analytical procedure. Okay. Suitability, we had example in this. If you remember, just below the suitability point, there was an area in our textbook which was covered in green. So that is that area in which I told you we had done a chart regarding this also. If you remember, most suitable, least suitable, partially suitable. We had done this example in the class. Okay, so you have to go through this. Let's next go to the next area, that is reliability. What is the extent of reliance on analytical procedures? We had done something called as SON core. Very simple question. Source, nature, control over preparation, comparability. And we have the last one that is called relevance. So where is the data coming from? Source. That will affect how much I rely on the analytical procedures. Next is nature of the transaction. Is the nature means, is it given verbally? Is it given in documented form? That will affect the my judgment about the reliability. Next is comparability. If I'm able to compare with the industry data, then it will be easier for me to do the checking. Next is your control over preparation. Source is proper, but after that also the head accountant has checked, then the CFO has checked, then the data has come to the auditor. In that case, you understand. In this case, I will rely more on the data. So that is control over preparation. And finally, you have the last point that is called relevance. If it is useful for me, then it is relevant in this case. Easy, simple. Last two areas, simple areas, techniques of analytical procedures. We did something called as trees, very simple, trend analysis, ratio analysis, reasonableness testing, and structural modeling. Okay, now, if you remember in the class, I'll just teach you a trick. Question number 12 in our notes is techniques, and the answer is tree. So you have TTT, 12 techniques trees, 12 techniques trees, so that it is easier for you to identify the answer on the exam day. Okay. Last but not the least, we have something called as evaluating results of analytical procedures. Sir, that example which you are given, I hope you guys remember this example. I'll just show the example to you. This was in relation to our original example of analytical procedures. Sir, salary was paid 5 crores, then the 2 years before 6 crores, and last year 63 crores. 5, 6, and really 63. Because the difference was too much, you will inquire with the management. Now we go back to the answer. You inquire to the management. If the management is able to give you proper response, then great. But if the management is not able to give you proper response, no response, or response not satisfactory, then we'll do other audit procedures. That is how it will flow. This completes your chapter number 4.2, analytical procedures. Easy. So we are now going ahead with chapter number 4.3, that is called as internal audit. 4 charts wraps up 18 questions for us. Okay, so let's do it one by one. Let's start. Question number 1 is a meaning. What is the meaning of internal audit? Very simple. Sir, the internal auditor provides assurance and consulting in order to evaluate and improve 3 things, that is governance, risk management, and internal controls. So he does that. Simple. That is basically the definition. Question number 2. Sir, what is the objective and scope of internal audit? Very, very simple. So the internal auditor in relation to governance, he will check VPAC. VPAC is here. If you are not able to see, VPAC was here. Let's start. That is values, ethics, performance management, accountability, and communication of controls and risk. Okay, that is what we see. And this communication of controls and risk will come like this. It will come from the C, and R will come from the C, communicating control and risk. Next is, sir, we are looking at the risk management. In risk management, the first step is to first know which risk is there. So identify the risk, then evaluate the risk, then see how to improve the risk management and do fraud detection, where all chance of fraud can occur. Next is regarding internal controls. What do we check? We check first account related, factory related, law related. Account related, we check financial and operating information. Factory related, we check operating activities, and law related, we check review law, regulation, policies. Let's start with that one by one. Please look at the screen. Regarding accounts, what are we worried about? Sir, we check in relation to whether the transactions are identified properly, how you identify journal entry, whether you have how do you identify invoice after raising the invoice, how do you recognize by passing journal entries with the right value, that is measurement. You then classify properly whether it is revenue or capital. Based on that, you understand whether it will go in the balance sheet or P&L. And last but not the least is report all the areas properly. Simple. Next is you do this, and so the entity must have done that, and the internal auditor will ask questions, do specific inquiry, and detailed testing of transaction, account balance, and procedures. Internal auditor, remember, is never bothered about disclosures. Disclosure, who is worried about? Statutory auditor. Internal auditor is worried about how the work is going on. That is called procedures. Are you there with me, yes or no? Let's go further. Regarding factory, what are we concerned with? First of all, factory should produce good quality material. That is effectiveness. Factory, the work should get on time. That is called efficiency. Factory, the work should happen within the budget made. That is called economy. We are checking the effectiveness, efficiency, economy of operating activities, including non-financial activities. Any activity which doesn't come in the books, still, even those are happening properly or not. Example, workers keeping the factory floor clean so that the work can happen properly. Never a journal entry will be made about that. But does it affect the operations? The answer is yes. Non-financial activities. Are you there? Next is, we are checking the law. Regarding law, we had done this, if you remember in the class. Countries' laws, industries' regulations, companies' policies. So that is called review the law, regulation, policies. That is basically we have review the law, regulation, policies. Easy to understand this area. That is how we completed question number 2. Question number 3 now. Question number 3 is where this year. Ways to make the use of the internal audit function by the external auditor. How will the auditor make use of it? Very simple. Obtain the relevant information using the work of internal auditor for partial substitution of audit evidence. If he has done good work, I can see whether he has done good work or not, and I will not do the work. I will use his work so that I can go further ahead in my to reach the R level. That is called partial substitution. Or third, you know very well, to appoint internal auditor in my team and ask him to do work as per my instruction. That is called as direct assistance. So this is use internal auditor to perform audit procedures under the direction, supervision, review of the external auditor. That is called direct assistance. Easy. Question number 3 was this. Question number 4, very simple. One line. Internal auditor, if I'm relying on him, and if something goes wrong, I cannot tell, oh, he did wrong work. Still, the external auditor will have sole responsibility. That is basically what we did here. Question number 4. Easy. So first 4 questions are covered in chart number 1. We move on to chart number 2. This is question number 5 to question number 11. Let's go for it. First question number 5. Overall question, that is evaluating the internal audit function. It is called USCO. We'll check organization status, objectivity, systematic and disciplined approach, and co-is competence. This is what we are checking. In organization status, what are we checking? We'll check the internal auditor's capacity, how much he can handle the work. Is it a proprietorship firm? Is it a partnership firm? Is it a firm having lots of experience? That is what we are looking at. We are looking at the organizational status. Objectivity basically means we are looking at unbiased approaches there or not. For that, if you remember, we had a code called FICR. FICR was in relation to free from bias, whether it is employee or not, conflicting responsibilities are there or not, and constraints or restrictions we had seen. Next we had done was in relation to whether there is a systematic and disciplined approach or not. In that we did a code called Dr. VOCA. I remember or no? DS, whether the internal auditor has maintained documents and reporting properly, whether risk assessment coverage is done properly, whether he has a properly set schedule, that is work program, neatly the work is done, and finally, whether quality control policies are there in place in his firm. SQC1 is there in his firm or not. If SQC1 is there in his firm, I'll be more relaxed. If not there, I'll be, or there but not applied properly, then I'll be worried. Are you there with me, yes or no? Next, very good point. Competence of the internal auditor, very nice point. In that we saw, I think we had done a code called APAC in your notes, correct? No. In that we saw appropriately resourced or not, whether proper team members are being appointed in his team. Who is the entity appointing as internal auditor? Does the entity have a policy for hiring, training, assigning internal audit function? That is policy for hiring, training, assigning internal audit function. Whether internal auditor has adequate technical training regarding the field of the entity's work. The internal auditor has knowledge of FRF and AFRF. Not necessarily that internal auditor will have knowledge of the accountancy. May not have the knowledge, may be very good in his technical field. Let's say engineering is very good, but may not have the knowledge of FRF and AFRF. So I'm checking that. A, okay. A is appropriately resourced. P is policy. A is adequate technical training. K is knowledge. APAC. Okay. Let's go to the next area. If usko, this is our question number, by the way, organization status was, sorry. Objectivity was question number 6. Systematic discipline approach question number 7. Competence question number 8. Then if usko factors are not there, then the work of internal auditor cannot be used. This is question number 9. So you have to just write the usko factors but in negative. If you have read the notes, you will understand. You have to just write it in negative. Question number 10. If USCO factors are there, my dear student, then in that case, we did a code called STOIC. STOIC was internal auditors work can help me in what? It can help me in substantive procedures, test of controls, observation of the inventory counts, information system transaction, whether they are there in place or not. And C is finally compliance with the regulatory requirements. To be very honest, no, you can write any point in this case. Because they have asked for examples, you can write any point. But I always keep telling, stick to the module language for getting good marks. Okay. Or sometimes you can get a crazy examiner who is looking at only the module answer and just checking whether you've written the points or not. So he's not understanding that in the question, examples have been asked. Okay. Next one. Circumstances where external auditor shall use less work of internal auditor and perform more work directly. This we had done a code called JROC, if you remember. Judgment involved is is a lot. Judgment involved matters a lot. Opinion of the auditor matters a lot. In that case, external auditor should take up more work. Next, RMM is high. RMM is high. Next, objectivity and organized status is low. Or last point is competence is low. In this case, we will do more work as external auditor, rely less on the internal auditor. Easy. Question number 11 is done. Let's go to question number 12 to 15. Let's crack it up. Look here, see. What is the objective of the external auditor where entity has internal audit function? Very simple. We look at the work of the internal auditor, whether work of internal auditor is adequate or not. We look at whether the internal auditor has provided direct assistance. Internal auditor can be taken as a direct assistant or not. In direct assistance, we are looking at whether we'll be able to um, give him direction, supervision, review so that he can work for us. We'll check that area. This in question number 12 is point number 1. This is point number 2. Point number 3 is what? Very simple. You have to just write a combination, or you can write this. Point number 1 is this combination. Point number 2 is this. So, and point number 3 is this. That is how the 3 points have been given in your notes. Okay. Question number 13. Very nice. If external auditor plans to use the work of the internal auditor, how will you use the work? Okay, very simple. First, the external auditor has to read the internal auditor's report. Second, he has to, with his mouth, discuss with the internal auditor. Third, he has to perform sufficient audit procedures. He has to perform. Exactly, that is the 3 point that you will see. Question number 14, very simple. Sir, when we are having discussion with the internal auditor, what matters will be addressed? We did a code called NT Dr. Mame. Nature of the work done, timing of the work done, extent of the work done. D was documentation and R was review procedures. What kind of review he has done? Mame was materiality and methods of sampling. Methods of sampling. What kind of sampling methods has he used? Easy. Question number 15, very, very simple. Look at the screen. So external auditor is here, internal auditor is here. First, for coordination, they should have a discussion with each other. Discussion should be there. Second, very simple. We will give our reports, they will give their reports. So first is we will give our reports, inform significant matters. They will give their relevant report and inform significant matters to us. That is basically how it flows. Very, very simple understanding. It's easy. This is your question number 15. Question number 16, 17, 18. I'm telling you again, in the exam, if you see direct assistance in the examination, mostly they'll be asking question from 16, 17, 18 only. Be careful here. Sir, when will the external auditor take the internal auditor from the management as a direct assistant? When competence and objectivity is there and it is not going against any law and regulation, then we can take it up. This small area is question number 16 for us, small area. 17, I feel, is an extremely important one. Very good question. See this. Prior to using the work of the internal auditor and direct assistants, what should the external auditor do? First, I will go to the management and tell the management, see, I want a written representation from you that the instruction of external auditor will be followed by the internal auditor. And second, when I give instruction to the internal auditor, management, you please don't intervene, don't interfere. So management shall not intervene regarding these two matters. Management shall give me the written representation. I'll go to the internal auditor and tell him, see, when you are working for me, we'll be coming across a lot of secrets about the client or a lot of things that we are planning to do the audit work properly. Don't reveal this information. So you understand here that is called written agreement from the internal auditor to keep the matters under direct assistance. Confidential. Confidential. Are you there with me, yes or no? Last but not the least, internal auditors, see what they're given. Direct assistance shall not be used to perform. JRID was a code where judgment involved is more, RMM is more. This we had seen earlier. Where internal auditor is already involved with the management for doing the work. And finally, decisions regarding the direct assistance of the internal auditor. What work internal auditor will do, when he will do, when the checking will be done. All these things, we are not going to take his advice. We'll give the work as per what we feel. Are you there with me, yes or no? Simple. That is basically your question number 18. That completes your chapter number 4.3, that is internal audit.
Hi everyone, we continue with the quick recap of chapter number 5, but this we are going to do in a very ultra short mode. Chapter number 5, what we are going to do is I have already aligned 25 key questions in this chapter, which I'll be giving as a separate link on YouTube. You see below, you will see a separate link for chapter number 5, 24 most important questions. Okay. Other than that, in this chapter, I strongly recommend the students to do it in a very collective manner. So don't do the entire chapter, each and every question. The reason is the chapter takes too long on the exam day to complete, and hence it takes a lot of your time away from studying the other chapters where you can actually score more marks. Okay. So in this chapter, what you can see here is you will see specific questions, common questions. If asset is asked in the examination, you can write about assets in the examination. So once again, please see here. If assets is asked in the examination, then you can write about assets. Then if liability is asked in the examination, you can write about liabilities here. Then if expenses asked in the examination, you can write about expenses here. And finally, if income is asked in the examination, you can write about income or revenue here. These matters here. Okay, so common points have been given for these, which can be advantages for you. This system is very important because chapter number 5 is one of the most lengthiest chapters in the syllabus, and it has no connecting points. Every area is different from the other, and it becomes too much for the student to do on the exam day. So better strategy is go for the 24 most probable questions that can come in the examination, which have come most often, and do this common set of questions so that you are better prepared to answer those questions by taking least time possible. Okay, what this does is on the exam day is it gives you more free time to prepare for the other chapters. Okay, do this strategy. You have the common question list here, common areas list here, which the PDF will be given in the link below, and also the 24 questions video also I'll put in the link below. Do this area separately. I wish you all the best. Take care. Carry on. Now we are starting with the quick revision of audit documentation chapter, one of the most easiest chapters in your syllabus. Very simple to decode. It has in total 11 questions which are there, which you need to master. Okay, the questions are here. In fact, with a chart only, we can complete the entire revision. Let's start with this chapter. Very simple. Question number 5 is this question, which we are going to take up first. Let's start. What is the form, content, extent of audit documentation? So in this case, what will the auditor write in the audit documentation? Let's start. It's the big hand action that we had done. Let's go for it. Audit documentation is a record of nature, timing, extent of audit procedures, specific items tested, who performed and the date of performance, who reviewed and the date and extent of such review, audit evidence obtained, significant matters, significant judgments, conclusions reached. Inside significant matters, nature, when and with whom. What is the matter? When did we discuss with the person? With whom did we discuss? In whom we have TCWG, management, others. And if there is any kind of inconsistency, and how it was addressed. If there is any problem with the management, how did we resolve the matter? So basically, what are we writing in this? Let's go for it in a little bit of depth. Tell me, audit documentation is a record of what work we did in nature, when did we do the work, timing, in how much depth did we check the work. That is called extent. Specific item tested, what did we check with the team member, the junior person in the team, who checked it and what are the date of their checking, who performed and the date of performance, and who reviewed their work and the date and extent of such review. With this, what evidence did we obtain? Then you have significant matters, important matters, significant judgments, and the conclusions that is reached. Significant matters, when we do, again, what was the matter? When did we discuss? With whom did we discuss? In that we have the TCWG, management, others. If there was any inconsistency between the management and the auditor, then how was it solved? How was it addressed? Okay, that completes our question number 5 first. Okay, let's go now to question number 1. Okay, 1 is what? The shorthand action definition. What is the definition of audit documentation? Let's start. Audit documentation is a record of audit procedure performed, audit evidence obtained, conclusions reached. As simple as that. Okay, that is what we did in this part. Okay, so this is your question number 1. Once again, question number 1, and this we did is question number 5. Let's go to question number 2. That is nature of AD, nature of audit documentation. One more term is called, it provides evidence regarding which matter. Audit documentation provides evidence regarding PP and OO. It provides evidence that audit was planned and performed as per SARL standards and regulatory and legal requirements. It provides OO. It provides a basis for conclusion about the overall objectives of the independent auditor. Basically, that is the proof that we get. Okay. Question number 3. Factors on which the form, content, extent of audit documentation depends. This is form, content, extent of audit documentation depends on which factors. Let's do it one by one. It's very simple. When will your audit documentation be thicker? When it will be thinner? What are the factors that define that? That is the question. The thing that I taught you in this was the 10 standard notes and your CA inter notes. That example. Let's start. Tell me. First is what? Size and complexity, audit procedures performed, audit methodologies and tools used, evidence, exceptions, risk identified, and documentation of the conclusion. Because of these factors, your audit documentation will vary in size. Are you there? Okay. Next, we are done. What is the purpose of audit documentation? Very, very simple. What is the purpose? First, in audit documentation, we write which person is accountable, which person is accountable for which work. So who has done what work, we write it down, so that person becomes accountable. If there is any problem in that work, then that junior, we can hold that junior accountable. Second, it helps us to do planning and performing in a better manner. Our plan will become much better if we are documenting things properly beforehand. Next is DSR. Whenever we know some work properly, we can easily delegate it to others. So it helps us in direction, supervision, and review. Next, very simple. If some outside inspector is coming to check, our documentation will help that inspector to understand what work we have done. So it helps in external inspection. I told you that in class while teaching that in peer review and quality review, the ICI can, in case of peer review, ICI can send a peer reviewer to the CA firm, and the peer reviewer may request the CA firm to show their documentation. So in that case, if the CA firm shows the documentation, in that case, there is quality control review and inspection going on. In that also, audit documentation can be of great help. Last is future audit. That is future audit. What is future audit? This year, if you maintain audit documentation properly, it will help you in the next year. Are you there? Question number 4. Question number 5, you have already revised. Form, content, extent, big hand action. Let's go to question number 6, significant matters. Significant matters cover what? We are done in the class this way. We are done significant risk, significant difficulty, material misstatement, risk of material misstatement, 705 and 706. We are done these points here. So these are the matters that we'll include in the significant matters. Okay. Next. So regarding significant professional judgment, what all should the auditor document? We did that RDD example, if you remember. I'll show you that if you want, please see here. Sir, what are the information or factors based on which judgments are taken? Whether the judgment that we have taken is reasonable or not reasonable. And if it is not reasonable, we'll check the genuineness of the document, authenticity of the documents. If the company has taken a higher RDD percentage at 30%, which is very much different from the past years, in that case, the auditor will wonder why they have taken such a high percentage. Management may say that the customer has sent us emails and letters that they will not be able to pay. Those emails and letters we'll have to check. That is called authenticity of the document. Are you there? Okay. This is question number 7. Question number 8. Let's go on to the main chart here. Let's go on to the basics. Question number 8 is ownership of audit documentation. Let's do this. Audit documentation is the property of the auditor as per SQC1. As per the auditor's discretion, auditor can share the entire documentation, partly share, or not share at all. It is completely his decision. Even the branch auditor of a company need not share his audit documentation with the main auditor if he doesn't want to share. Okay, even that power is given. Next, question number 9. We have something called as completion memorandum. Easiest thing. Completion memorandum is nothing but a summary. You're converting a large audit documentation into summarized form, short content. If you do that, so it is summary. So if you are summarizing, then what will you do? You will include significant matters only and how the significant matters are addressed. And because it is so short, it helps in effective and efficient reviews. Effective and efficient review. Okay. Finally, we have the next one, that is audit file. This is question number 10. This was question number 9. This is question number 8. What is question number 10? That is audit file. Auditor will prepare the audit file within 60 days from the audit report date. It shall be retained for 7 years, minimum 7 years you have to retain the audit file. Can you make changes? Yes, you can, but only which are administrative in nature. What are the examples of those? Very simple. Any kind of document which is getting superseded. Document 2 supersedes document 1. Then document 1 you need not include in your audit file. Okay, this we have done the Yeshas picnic policy. Next is sorting all types of matter regarding a certain topic. Can you put it in a certain compartment of a folder? The answer is yes. Checklist basically means making a checklist of all what you need in the audit file so that everything is there in place. You can add that checklist. And last is anything that was discussed, if you are converting it to written form, that is documenting audit evidence that may have been discussed verbal into written form. Comfortable here? And the last question in audit documentation simply is your examples. Examples, I just show you the area which is there. Out of these examples, you can write any 4 or 5 of them. Comfortable here? This completes your entire quick recap of chapter number 6, that is audit documentation.
Okay, everyone, let's start with the next chapter, that is completion and review. Let's do a quick recap or revision of this chapter. Let's start this year. This is chapter number 7 of your CA Inter Audit syllabus. Let's start. In this, no, my dear students, we have in total 6 standards. Okay, we have SA 560, that is subsequent events, SA 570, that is going concern, SA 580, that is written representation, SA 260, that is communicating with those charged with governance, SA 265, that is deficiencies in internal control, and finally you have SA 450, which is evaluation of the misstatements. Okay, we have to master these 6 standards in this chapter. Let's go for it one by one. Let's do a quick, sprinty revision in this matter. Okay, let's start this here. We are now doing SA 560, that is called subsequent events. Okay, I want you all to understand everything nicely. Please see here, look here at the screen, see. If this is representing a financial year end, that is 31st March 2017 is the financial year end of course, the year 16-17, correct? The audit report date, the auditor is giving on 20th of August 2017, that is the audit report date. And the financial statement issue date is 10th of September 2017, okay? So take it in this manner. Let's do one by one now. Hear me out. My dear students, in this case, suppose if on the balance sheet date, there is some condition which is existing. Condition existing on the balance sheet date. Now, what is the condition? Let's take an example. Let's say just before 31st of March, let's say somewhere here where I put the cross, on that day, a major debtor or a few major debtors who are, let's say, in the city of, let's say, Hyderabad, they could not pay. They are facing a lot of difficulty because there is some earthquake in Hyderabad, because of which they are in a very difficult situation to pay the amount. So on the balance sheet date, we know for sure that they are finding a lot of difficulty to pay the amount. So condition is existing on the balance sheet date. Condition is existing on the balance sheet date. Now, after the balance sheet date gets over, between the balance sheet date and the auditor's report date, so between balance sheet date and the auditor's report date on this day, between that, we get additional evidence regarding the condition that was existing. So look here, we get additional evidence regarding the condition that was existing. So we get AE regarding CE. So CE was existing on the balance sheet date, correct? Condition was existing on the balance sheet date. And we got additional evidence regarding the condition that was existing between the balance sheet date and the auditor's report date. Okay. What they are saying is this: if such a additional evidence we get, in that case, the management of the company, through their accounting department, they have to make adjustment in the financial statements. This is what you learn in AS4, that is events occurring after the balance sheet date. So what should the management do? Management, in the case of case 1, this is for us case 1, management should make adjustment of in the financial statements. Clear to understand this part here? Okay. Sir, what does adjustment look like? So I'll just give you an example, please here. Suppose debtors, the company was originally planning to show 10 crores debtors value, and 90% of debtors were there in Hyderabad and they were not in a position to pay the amount. So we received calls and emails from them after 31st of March, but till that additional evidence we got calls and messages from them that they will not be able to pay the amount. So what should the company do in this case? Company, as per AS4, they should take these as bad debts. So 90% debtors means 9 crores will be bad debts. And in the outer column, they should show only 1 crore as the debtor's value. This is called making adjustments in the financial statements. Making adjustment in the financial statements. Comfortable till here? Okay. Now, second thing. Let's go with another situation this year. Suppose, my dear students, on the balance sheet date, everything is very normal in the company, very normal, no problem. Okay. So there is no condition existing on the balance sheet date. No condition is existing. Nothing major, no issues, no evidence, no proof of something that has gone majorly wrong. Nothing. Everything is going normal in the company. But between the balance sheet date that is 31st of March and the auditor's report date that is 20th of August, a new event arises in the company. A new event arises in the company. Let's say there was a major factory building fire that had taken place. So major fire in the factory building took place, and that happened on this day. Now on 31st of March, we didn't know that fire will happen, correct? But fire happened here. So you understand here that new event arose. So in that case, you understand, see, condition was not existing on the balance sheet date and a new event arose between the balance sheet date and the auditor's report date. This is for us, we'll call it as case 2. Between you and me, we'll call it as case 2. Okay. So case 1 is what? When condition existed on the balance sheet date and we got additional evidence regarding the condition existing. That is case 1, in which the company has to make adjustment of in the financial statements. But case 2 is what? Condition was not existing on the balance sheet date and a new event arose between the balance sheet date and the auditor's report date. So in that case, the company should make a disclosure in the financial statements. Company should make a disclosure in the financial statements. Okay. Now, what disclosure they will show? So let's take an example here also. Please see here. Factory building caught fire. Earlier, they were showing the value as 50 crores. They will continue showing the same value. 50 crores will be the value. But they have to now add a notes to account. They have to add a note. So let's say they are adding something called as note number 41. Example I'm taking. Note number 41. So note number 1 is here, 2 is here, 3, 4, like that. Many notes will be there. Like that, here you have note number 41, in which they will have to give the disclosure. What will they give as a disclosure? They will say a major fire occurred in the factory building on, let's say, 11th of July. Okay. And because of the major fire, we are expecting a damage of around 50 crores worth of machines in the factory, or 50 crores worth of items which are there in the factory. And the building has also suffered heavy losses. We have filed an insurance claim with the insurance company, and we are expecting that the insurance company will give back 90% of the claim amount. Like that, a neat disclosure will be given. This the management of the company has to do in the case of case 2. Okay. So case 1, case 2, you have understood now. Tell me again, case 1 is what? Condition existing on the balance sheet date and there is additional evidence regarding condition that is existing. In that case, you understand that the management of the company will make the adjustment in the financial statement. That is case 1. Case 2 is what? Condition is not existing on the balance sheet date. Everything is normal. But a new event arises between the balance sheet date and the auditor's report date, because of which the company has to make a disclosure in the financial statements. Are you there with me? Yes or no? Simple to understand this. This is what is written in AS4. I have still not taught you the auditing part. This is AS4. Now, what should the auditor do in this case? The auditor should, in the case of case 1 and case 2, in which the management has given adjustment of or disclosure in, auditor procedures are common for both the cases. First, auditor will understand the procedure the management has adopted to identify the subsequent event. The auditor has to obtain an understanding of the procedures that the management has adopted to identify subsequent events. The auditor will read the minutes of meeting. See if a major fire has occurred in the factory or debtors are not paying a significant amount. Don't you think this will be discussed in the board of directors meeting? The answer is yes. So we'll be reading the minutes of meeting to get a better understanding of the situation. Okay. Next is reading the interim financial statements. The quarterly financial statements must have been released by the company. So you can see here that our audit report is made on 20th of August, correct? So don't you think that April month, May month, June month would have already happened, and then the company would have released their quarterly financial statements, correct? So the auditor will read the quarterly or the interim financial statements. Okay. And finally, you can inquire with the management regarding this matter. So with the brain, you will try to understand the procedure the management has adopted to identify subsequent events. With the eyes, you will read minutes of meeting, you will read the interim financial statements, and with the mouth, you will inquire with the management. Very comfortable. This is one question. Very, very simple. Okay. Now let's go ahead with cases 3 and 4. What is 3 and 4? Understand very nicely. Look here. My dear students, case 1 and case 2 has already occurred. But the management of the company has not informed us. They have not told us regarding this situation. So they are keeping it hidden. So what happens is, because if it is case 1, they have not made the adjustments in the financial statements as recommended by AS4, or in the case of case 2, they have not given disclosure in the financial statements as required by AS4. They have not done that. So accounting wise, it is wrong. They are keeping it hidden. Now let's understand first of all the reason why they'll keep it hidden. Imagine if 90% of debtors are not paying the amount. If the company discloses that, then it means that company's sales, that is that debtors related, that sales which is there, even that will go down. It means the company, that bad debts will have a very big effect on the P&L account, yes or no? So you understand here that the company profit will be very low. And if the company discloses lower profit, then the market sentiment about the company will become slightly negative, correct? Yeah, imagine the second situation of case 2 where there was a fire in the factory building. Now, if the shareholder comes to know that a major fire has occurred in the factory building of the company, you only imagine the kind of market sentiments that will go ahead in relation to the company. It will be very negative. A company doesn't want that kind of negativity around the company, even though that is the truth about the company. But they are not giving the truthful image. So the management of the company has not made the adjustment or the disclosure in the financial statements. So because the management has not told about this at all, even though we do our procedures here, we also don't come to know about this matter. So what happens is, if we don't come to know about this matter, we also give the audit report in a very naive manner, correct? So we also feel that everything is good in the company. So we have given a audit report here. So audit report we have given. Now think about it. Financial statements are wrong. In that, many things were not given to us. So tell us, is our audit report wrong or right? It is also wrong only in one way. So now what happened is, the auditor comes to know about this situation here, somewhere here. That is, see, after he has given the audit report, but before the financial statements are issued to the shareholders. In that gap, if the auditor comes to know about the matter, in the language of the standard they have written, if the auditor becomes aware of situations in relation to case 1, case 2, that is, events have occurred between the balance sheet date and the auditor's report date, and the auditor becomes aware of it after the audit report is given, but before the financial statements have been issued, in that case, the auditor has to take some action, because he now knows that the financial statement of the company is wrong, because of which the audit report is also wrong. In that case, what they have said is, auditor will first of all discuss the matter with the management. Correct? The auditor will determine whether FS need any kind of amendment. And third, auditor will inquire how to address the matter. How is the management planning to address the matter? Discuss with the management regarding the situation. We'll tell them, why didn't you tell us about this? Determine whether FS require any kind of amendment. Ask them if FS needs any amendments or not before you issue the financial statements. And third, inquire how the management is planning to address this important situation. That is basically where we are. Are you there with me, yes or no? So you understand that this is what the auditor will do in the case of case 3. But there are more things to be done in case 3, but these are the, I'm going to write CP here. I hope you understand. CP basically means these are the common points in the case of case 3, case 4. So discuss with the management, determine whether FS need any kind of amendment, and inquire with the management how to address. These are the common points for case 3 as well as case 4. Okay. Now let's do the uncommon points here. What are the uncommon points? Let's see one by one, please, here. Look at the screen, please, here. Auditor should carry out the audit procedures if the management agrees to the amendment. So the management agrees that yes, they will change the financial statements. So let's say they change the financial statement, let's say by this date, which I'm marking in maroon color, okay? then the auditor will carry out the audit procedures. He'll carry out the audit procedures. That is exactly what is given here also. Auditor will extend the audit procedures to the new audit report date. Auditor will extend the audit procedures to the new audit report date, new report date. Okay. And auditor will provide the new audit report. Auditor will provide the new audit report. These 3 points that you see here are the uncommon points for uncommon points. It is only for case 3. So case 3 has these 3 common points, as I told you: discuss, determine, inquire, how to address, and the 3 uncommon points, which is carry out the audit procedures, extend the audit procedures to the new report date, and provide the new report. Are you there with me? Yes or no? Okay, simple. And when the auditor provides the new report, he has 2 options. If the changes are a little bit, not that much, then the auditor will provide the new audit report with an additional date. Simply, he will take the old audit report, add a new additional date there, and whatever are the new evidence that he got in this period, see in this period, that he will simply add there. Correct? No, he'll simply give his views on that there. If there are, suppose there are major changes, there are a lot of things that the management had hidden it from us. Here, suppose I told you that debtors are not going to pay us the amount, fire in the factory building. These are only 2 situations. Suppose in this case, we come to know that there were around 25 situations here that they did not inform us. Lot of situations were there. In that case, the changes in the audit report will be so major that the auditor will prefer giving a new audit report, including a EOM or an OM paragraph. As you know very well, EOM paragraph is given as a disclosure in relation to the financial statements, but it is to tell the shareholders that please go and read this particular note to account regarding financial statements. And OM paragraph is regarding the auditor's responsibilities and auditor's report. Are you there with me? Yes or no? Comfortable till here? Okay. That is basically what will happen in the case of case 3. Let's do case 4 now. Case 4 similar to case 3, but with a major twist. What is similar to case 3? Let's discuss that. Case 1, case 2 has happened in the company. Okay. Management has not made the adjustment or they have not disclosed. So tell me, is the financial statement correct or incorrect? It is incorrect. So the auditor was very, naive person. So auditor also gave the audit report. And auditor in this case, tell me, his audit report is correct or incorrect? It is incorrect. Correct. You understand here, audit report is not correct. Simple. But the auditor comes to know about this fact that lot of situations had occurred between the lot of case 1, case 2 related matters have occurred between the balance sheet date and the auditor's report date. And the auditor came to know about this matter somewhere here. Imagine here means what? See, after the financial statements have been issued. After the financial statements have been issued, the auditor comes to know. Auditor will do what? He will first discuss with the management, determine whether FS need any kind of amendment, and inquire with the management how to address. I told you these are common points for both case 3 and case 4. So discuss with the management, determine whether FS require any amendment, and inquire with the management how to address. Now what will the auditor do? The next points which are there now are similar to what we saw. So if the management here corrects the financial statement, it's a good thing. So auditor will carry out the audit procedures. He will extend the audit procedures to the new audit report date, correct? And he'll provide the new audit report. Exactly the same point which we saw here. See, exactly the same points. All these things the auditor will do. But because it is known to the auditor after the financial statements have been issued, I hope you understand the gravity of the situation. It means that the shareholders have already received the audited financial statements along with the auditor's report, and they are going through it and making investments in the company. And that is when we come to know. It's a very difficult situation. So the auditor will specifically see one more situation, one more thing, that whether steps are being taken by the management to inform the shareholders or the users of the financial statements. Is the management taking care? Are they taking steps? Are they telling the people by giving a small ad in the newspaper saying that please don't rely on our audited financial statements issued on so and so date. In another 1 month, we'll be releasing new financial statement along with the new audit report. Is the management giving that information to the shareholders? That is what we are checking. Steps taken by the management to inform the users of the financial statements. Simple. And to give more clarity on the matter, the auditor may provide EOM or OM paragraph along with the reasons. Very, very comfortable, easy, simple. So that is the procedure of the auditor in the case of case 4. Okay. Now, a tough situation I'm going to put you in. Imagine this. Suppose management steps taken by the management to inform. Management doesn't take these steps. I put a star here, star I've repeated here. See, management doesn't take these steps. They have an attitude where they say, so what, shareholders are facing some loss in the market. Every day people are suffering loss in the market. So let it be our shareholders this time. It's okay. We are not going to take any special steps here. That is a very bad attitude to have, correct? So you understand the problem here. It means that the management is not ready to correct their mistake. So we will gently notify the management or the TCWG of the company that, see, you have done a mistake. Please correct it. Still, if they don't take, see, no steps taken. Still, if they don't do anything, then the auditor will try to disassociate himself from the client. See, what is happening is finance statements are incorrect. Because of that, audit report has also become incorrect. So if the shareholders come to know about the truth, you will understand that the management reputation will go down. With that, the CA from auditor's reputation will also go down. So auditor wants to ensure that, see, we have told them to change it, still they are not changing it. So let the auditor will try to tell the world that he is correct, and he will tell the people, the users of the finance statements, that don't rely on the auditor's report. Don't rely on the auditor's report. That is not the right report that we have given. Okay, so see this. Auditor shall seek to prevent reliance on his audit report. Seek to prevent reliance on his audit report. Seek to prevent reliance. Telling the people, don't read our audit report. It is not the correct one. That is what the auditor will do. Are you there with me? Yes or no? Comfortable? That is basically SA 560. Easy to understand this area. Okay, can we go ahead now? Okay, everyone. Now let's start the revision of one of my favorite standards. The students also know that going concern is one of the best standards to learn. Okay. Now let's understand this standard here. This is your SA 570. Okay. Now in CA interlevel, what kind of questions can be asked in this? Let's explore that. Okay, let's start. Please here. First is going as an introduction, in which I had taught you all in the class, and I told you why going concern is so important. Because normally the balance sheet of the company will be made on normal cost basis, correct? No. But if the company is not a going concern, in that case, it will be made on NRV basis, net realizable value basis. You understand the magnitude with which the figures will change. Imagine if you are showing machinery at cost at, let's say, 4 crores minus depreciation, let's say around 1 crore. So outer column will be 3 crores, correct? But suppose this is when the company is a going concern. But if suppose a company is not a going concern, in that case, suppose the market value of the machine or the net realizable value of the machine is only 40 lakhs. So if the going concern assumption is not valid, in that case, you will have to show that machinery at the value of 40 lakhs. So that much amount difference can happen. That is why going concern becomes a very important standard here. Okay. Now let's go to the further questions. Now, the management of the company has a duty to do the assessment of going concern, for which management will consider some factors. Okay. Now, what are these factors that we will see? Wait for it. This is question number 2. Suppose if it is your business, and if I ask you, what all will you think about regarding your business to tell whether your business is going to continue as a going concern or not? So, as a businessman or a businesswoman, what will you think regarding the business? That is basically factors that the management will consider, for its assessment of going concern. Understanding the matter? Okay. Question number 3. What is the objective of the auditor in this standard? What is the goal of the auditor? The goal of the auditor is very simple. What the management feels about going concern, that is our first left hand here. What the auditor feels about the going concern of the company, that is the second hand here. If that matches, no problem. They are saying they are going to continue the business. We also feel they are going to continue the business. So no problem. Infosys Limited doing very well. So they are going to continue the business. We also feel they are doing very well. There is no chance that the going concern might get affected. So in that case, you understand if both are in agreement, then no problem. But suppose if the management is over optimistic and management says, we are going to continue as going concern. We say, how will you continue as going concern, boss? So much bank loan is there on your head. How are you going to pay it? We feel company is not going to continue as a going concern. So they feel they will continue, we feel they will not continue. In that case, the auditor has to report the difference. Okay. So you understand that is the objective of the auditor. Again, we'll do this answer. I'm just giving you a small briefing here. Fourth one, evaluating the management assessment. Whatever assessment the management has made, we are evaluating that. We are checking that the management assessment is proper or not. Okay, so what all points will you keep in mind for assessment? That is given in this answer. So wait for it. Next, what are the events or conditions that cast a significant doubt regarding going concern? What are the indicators because of which you may feel that the company may not continue as a going concern? Now, my dear students, you know this song. This is our Jeene Ke Hai 4 Din song. We'll sing that. But in this, they have covered financial indicators, operating indicators, and other indicators. So they have covered these 3 indicators. Okay. You need to know the entire answer also. You need to know these 3 indicators separately also. Okay. Can we go further now? Next is, what are the further audit procedures the auditor should do? What are the examples of further audit procedures the auditor should do when the auditor has identified events or conditions? So if you find that something is wrong in the company, what are some examples of the actions that you may take? That is basically question number 6 for us. Okay. Suppose if the company is genuinely in a tough situation, then what are the additional audit procedures you will do to know the management's perspective? So what are the additional audit procedures in case events or conditions are identified that may cast a subsequent significant doubt that the company may not continue as a going concern? Okay, so additional audit procedures is a separate question. What are the disclosures the management should give? That is question number 8. And what are the implications in the auditor's report? That is question number 9. Like that, this entire standard has 9 areas. Again, I always tell, if you know these 9 areas, then you are a master in this standard. We do for our entire auditing subject the same thing only. No, we take an area, we jot down all the questions that can come regarding that area, and that becomes our boundary. So regarding going concern, this is our boundary. These 9 questions, it can come only from any, if a going concern question comes, it has to come from one of these 9 areas only. Okay. Now let's start with a quick recap, quick revision. Let's start with it. PCR. Introduction I already have given. So let's go to question number 2 now. Management assessment of going concern factors. Okay. So now let's go here. See this. Factors relevant to management assessment of going concern. What is given here? So my dear students, you know this is your favorite. This is your Sikonako. Okay. What is Sikonako? Let's see this. So suppose if I ask you about your business. Is your business going to continue as a going concern? So what will you think of? You will think of the past of the business, the present of the business, and the future of the business. Correct? You will think from these 3 angles only. Correct? So regarding the past, you will think regarding the businesses Sikonako. What is Sikonako? Size, complexity, nature, and condition of business. You will look at it. You will look at the information available at present, based on which you will make judgment about the future. Correct? Based on which you will make the judgment about the future. Easy. And the third, the more into the future you think, the uncertainty degree will increase only. I'll give you an example. If I ask you, will India win the 2060 World Cup, 2060 World Cup? You'll say, sir, 2060 World Cup? Sir, we don't know whether we'll be there in this world at that time. Correct? All these questions will come up. So you understand that if I ask what further into the future, the uncertainty degree will increase. Correct? No. But if I ask you, does India have a chance of winning the 2026 World Cup? Now you will say, sir, this is very nearby. Or suppose 2028 World Cup or 2027 ODI World Cup is there. If I ask you, will India win that? You will say, sir, chance is there. We have decent team. You may say like that. Why? Because you know, almost you know which kind of players are going to play that World Cup. So the uncertainty degree will increase. Hence, if it is more into the future, hence, whenever the management makes any kind of estimation about the future, they have to always specify the period. They have to specify the period. Example, we are giving a forecast for 2026, 27, 28. They have to mention that period. So people will come to know, okay, they are giving the forecast for this period. Okay, simple. Go for it, tell me. Management's assessment regarding going concern, what factors will they keep in mind? They'll keep in mind past, present, and future. Past is Sikonako, your present is You will take the information at present based on which you will make the judgment about the future. And regarding the future, they have said here uncertainty degree will increase the more further into the future you think of. Hence, it is important for the management to specify the period. Very comfortable? Okay. Let's go further, please here. Next is what is the objective of the auditor? Very simple. As I told you in layman terms, what they say, what we feel, report any difference. What they say means what the management is saying, what we feel, what we genuinely feel regarding going concern, and then report if there is any difference. Okay. So let's look at this answer here, please see here. What they say, what we feel, report if there is any difference. What they see means what we are looking at the appropriateness of the management use of going concern basis. We are looking at this. What we feel is based on the audit evidence obtained, whether material uncertainty, big doubt, material means big, uncertainty means doubt. Big doubts exist related to events or conditions. So we are looking at whether there is a big doubt. And finally, report if there is any difference is there. Report if any difference is there. Are you there with me, yes or no? Comfortable till here? Okay. That is basically our question number 3. This is auditor's objectives, okay, regarding going concern. Let's go further. Let's do question number 4. Evaluating management assessment regarding going concern. Let's do this properly. Now, I hope the students, you realize that we are taking a marathon session. So I cannot go into in-depth teaching. Audit entire portion is around 100 hours, which I take. And in crash course also, if we do, it comes to around 60 hours, 50, 60 hours. I hope you understand, when we complete the entire audit syllabus in 10 hours or 12 hours, you understand that the compression of the explanation will have to happen, okay? And this is in any case a marathon session for revision purpose, okay? So I hope it is being useful for you. If you like such videos, ensure that you are typing in the comment section and also writing what you liked about this video. It really motivates me and my team here to ensure that we are able to deliver more lectures for you. Okay. So let us know. We'll be very happy. Can we go ahead now? Please here. Now, evaluation of the management's assessment. What will the auditor evaluate first? See, it is not the auditor's responsibility to rectify if management has not done the assessment. If the management doesn't do the assessment, it is a wrong part on the management side. Imagine if lakhs of shareholders are giving you money. You are the management. And your company is not doing well. It may not continue in the future. Don't you think it is your basic decency to at least inform these lakhs of people that, see, our company may not continue. If the share price is still decent enough, you can please sell your shares. We are not telling them to sell the shares. At least we should inform them that the situation is not good. That is a basic decency you should do. So if the management does not do the assessment, management has not done the assessment, it is not the auditor's job to rectify it. First of all, that. Okay. Second, management's assessment will not be detailed if the company has history of profits. Imagine an auditor doing the management's going concern assessment for Reliance Industries Limited. Now you only tell me, hand to heart, you only tell me. Will the auditor do in-depth assessment whether companies are going concern or not? No. Auditor has also attended the wedding of Anand Ambani. He also saw the kind of delicious food that was served and the amount they spent in the wedding. Looking at that, only the auditor will get satisfied. No, everything is going good in the company. No problem with Reliance at all. So you understand here that if the company has history of profits, then the management will also do very less detailed assessment regarding going concern. Even our assessment will be not in, it will be surface level assessment. Correct? No. So see, management's assessment will not be detailed if company has history of profits. In this case, auditor's evaluation also will not be detailed if other audit procedures are sufficient to conclude the management's assessment. It means we have got other evidence to tell us that the company is doing relatively fine only. Okay, there is no problem with the company. Last, I normally expect the management to do the assessment of the next 12 months. But if the management does an assessment of, let's say, 3 months and they give us, then will you evaluate the management assessment? The answer is yes. But you will request them to please make the assessment for 12 months. So see what they're given. Auditor's evaluation will cover the same period that the management has covered in its assessment. If it is less than 12 months, then auditor shall request assessment of 12 months to be made. Are you there with me, yes or no? Very, very simple. This is question number 4. auditor's evaluation regarding the management's assessment. Okay, let's go to the main base diagram, base chart. We have completed question number 1, question number 2, question number 3, question number 4. Now question number 5, my favorite. This is basically your events or conditions that cast a significant doubt regarding going concern. Okay, in this we have financial indicators, operating indicators, other indicators. I'm giving a disclaimer. Many students, what they feel is looking at our songs and everything. They feel, oh, Kartik Sir only does songs only, no teaching happens. But a student who sit in the class, they know how much in depth we go into the concept. The way we had done materiality or control, risk circuit, control circuit. Our students know the kind of in-depth, explanations I get into. So students who are not my students watching this video, just to tell you, just because we have learned the smart memorizing technique like a song, doesn't mean that this answer is not explained in the class and I just simply tell the students, ki chalo, we'll do a song. And you just do this and you go to the examination. You also understand students in the class are also very smart. They also analyze a teacher not purely on the memorizing techniques, but also on the explanation. Correct? No. Can you go ahead now? What are the events or conditions that cast a significant doubt regarding going concern? We have financial indicators, operating indicators, and other indicators. Okay, let's start. In this, we did a song, our favorite song called Jeene ke hai char din, oh, baki hai bekar din. There was a movie called Mujhse Shaadi Karogi. It had Akshay Kumar, Salman Khan, and Priyanka Chopra. It was a very nice movie, very jovial movie. You should watch it. Nice, good, fun movie, relaxing movie. In that movie, there is this song called Jeene ke hai char din. Okay, so it has a very catchy tune. So we take that tune and we have our song here. So let's start. Please hear. Net liability or net current liability position, fixed term borrowings approaching maturity, short term borrowings to finance long term assets, indications of withdrawal of financial support by the creditors, negative operating cash flows, adverse key financial ratios, management intentions to cease operations, loss of key management, loss of KLMFS, labor difficulties, shortages of supplies, highly successful competitor, regulatory cross-spending changes, uninsured, underinsured catastrophes. It goes in this flow. Okay. Song as a method works when you continuously sing it. Students in the class know very well that at the end of every day in the class, we sing the song always. But the students who are seeing from outside, just because I sing a song doesn't mean I have a wand with me and I've done some magic on you. It doesn't mean that. Doesn't mean that if I sing the song once, it will be there in your mind forever. No. But you have to listen to it continuously. If whenever you come to this revision video, please just bookmark the, mark this video, the song where it is starting, so that you can start this video immediately, go to that particular minute and second and sing the song along with me. Do this every day for around 7 to 10 days. After that, you will not need your notes also. All the key points you will be able to sing very nicely. This question came in the May 2025 examination. And my students were very happy after the paper. So this question came. Okay, can we go ahead now? Okay. Now this is basically event or conditions that cast a significant doubt regarding going concern. So we have done question number 5. Question number 6, again a favorite. This is, what are the examples when events or conditions are identified? What are the examples? Let's see one by one. First is, this is our 4 friends near river story. Okay. So I'm going to tell you all the story once again. Hear me out. And then after that, we'll look at all the points. Okay. There are 4 friends who go near the river area. They bunk college and they are chilling near the river area. Out of that, one friend is a very studious friend. He talks about latest happening, this, that, latest information he will give regarding new news, this war, that war, this cricket match, that cricket match, all these things he will talk about. So others gets bored with this friend. Full time he's just giving knowledge about this thing, that thing. So the other friends tell this friend that, hey, you now keep quiet. You remove your dabba. Your amma sent dabba, no. Remove dabba. We'll have nice idli. We'll have. So the studious guy, he opens the dabba and all these friends are eating idli out of the dabba. They sit and eat idli for 1 hour. Okay, slowly, they're eating idli, they're talking and all. They're pulling each other's legs. Okay, typical boys group, boys will understand this. When 3 or 4 boys meet together, the only thing is roasting each other. Correct? No. So they do that near the river area. Now what happens is, after they eat the entire idli, one entire, piece, entire idlis which are there, one of them wanted to become a lawyer. So he really feels, what am I wasting my time with these boys? Let me go and study and be something big in life. After eating idli, he remembers that he was to study also. He goes towards his college. He's doing a law course, correct? So he goes towards his college to become a lawyer. There he sees that parents are there. These four boys, their parents are there. So boy one's father, boy two's father, boy three's father, boy four's father, all are there. So this boy who went to the law college comes back running and informs a friend, see, each of our father is here. So now the father also come running behind this boy, and now near the river area, boy 1 is standing in front of his father, boy 2 is standing in front of his father, boy 3 in front of his father, boy 4 in front of his father. Boy 1's father tells him, what, you are wasting your time like this? You are doing time pass here and there. You are bunking college and sitting near the river area. So boy 1 tells, Appa, very sorry, Appa. But boy 1's father tells, see, you have left my dream unfulfilled. Okay. Boy 2's father looks at him and tells him, see, we have taken borrowing from bank, loan from bank we have taken, and you're still doing all this time pass. Okay. Boy 2 also feels very, ashamed. He tells his father, Appa, very, very sorry. Boy 3 father doesn't believe in all these wordings and all. Boy 3's father tells him, you meet me later, I'll give you action. We'll play Kung Fu Panda together. Okay, no. So boy 3's father tells him, you meet me later, I'll give action. Okay. Action means, you understand, no, beating basically. Boy 4's father tells that boy nothing. Boy 4 looks him in the eye, and he doesn't believe in taking action later. He kicks the boy in the river only. Go swim and come in the house. So this is the story. Okay. So tell me the story once again. Let's quickly recap it and then do the points. Do it. First, 4 boys go near the river area. One boy starts giving the latest information. The other boys get bored, ask him to open the dabba. In the dabba, there is idli. Idlis, lot of idlis are there. The 4 boys eat idli, and after 1 hour, one boy, after eating idli, he realizes that he wants to become a lawyer. He goes towards the law college. There, he sees that the parents are here, father is here of each of those boys. So this boy comes running. Behind him, fathers also come running. Now each boy is standing in front of his father. First father says that you have left my dream unfulfilled. The second boy's father says that we have taken borrowing from the bank, still you are doing this time pass. The third boy's father says that you meet me later, I'll give you action. And the fourth boy's father says that, doesn't say anything, kicks him in the river only. Okay. Keep the story in the mind. Okay. And I'm pretty sure that in your mind, some mental image has come up regarding boys and the river area and all. Okay. So keep that image in your mind, because that will really help you to do this answer. I want you all to come to this point here. Hear me out. First, you have to connect. So what are the examples of audit procedures when events or conditions have been identified that may cast a significant doubt on the entity's ability to continue as a going concern? So what are the events or conditions that are there? Let's do one by one. First is, with river, no, you'll remember the word flow, correct? No, river flow. And with that, you'll remember cash flow. So boys are chilling where? Near the river area. So river, with that you'll remember flow. With that, you remember cash flow. So you will say cash flow, profit, other relevant forecast. Tell me again. Cash flow, profit, other relevant forecast. Yeah. Second is latest available interim financial statements. The boy gives the latest information, correct? No. So latest available interim financial statements is what our point will be. You have to connect little bit. The other boys tell him, you open your dabba. With dabba, you'll remember debentures. Okay, no, debentures. So you remember something called as debentures and loan agreements. With dabba, you remember debentures and loan agreement. Okay. They sit and eat for how much time? 1 hour. 1 hour is how many minutes? 60 minutes. So with that, you'll remember minutes of meeting. You'll remember minutes of meeting. Like that only. Then one of them wants to become a lawyer. So we have a legal counsel. So just we'll say the point inquiring with the entity's legal counsel. The boy who wants to become a lawyer goes towards his college. There he sees that parents are here. So he sees the related and third parties are here. So remember, related parties, which are parents, are here. Then boy, once father tells him, you left my dream unfulfilled. With that, you'll remember unfilled customer orders. Unfilled customer orders. Boy two's father tells him that if you have taken borrowing from bank and you're doing this time pass, so that is your borrowing facilities. Okay. Boy 3 father tells him two things. Remember, 2 points are here. You meet me later and I'll take action. You meet me later means subsequent events. And regulatory action. Regulatory action is action, basically. Boy 4's father kicks him in the river only. That is planned disposal of assets. Planned disposal of assets. Like that, the points will go. Okay. Now, I'm just going to help you with little bit understanding of this. Even though the revision session, I'll still help you out. I want you all to connect the points. See, in events or conditions that cast a significant doubt, no, my dear students, you're looking at this indicators. What may go wrong? Example, you can see here a point called negative operating cash flows. Correct? No. So if you see negative operating cash flow as an indicator, then what should you do? The auditor will do this action. See, he will analyze and discuss the cash flow, profit, other level forecast, because that is the indicator he's getting that something is wrong. So we'll do more work on that matter. Correct? We'll take few more examples for you to understand. Please see here. Suppose if there is a pending, see this point, pending legal and regulatory proceedings are there. This is there. Pending court case is there. So in that case, if this is there, then the auditor may do an inquiry with the legal counsel. Correct? So I hope you understand. I'll show you one more area so that it is easy for you to understand. Let's do this one. No, let's see this. Suppose there is a loss of major market where the company is selling the goods. There is a big loss of that. Where the company was selling the goods, now the company is not allowed to sell it there. Some restrictions have come in. Now this happened after the balance sheet date. So you understand here very well. In that case, the auditor will check the performing audit procedures regarding, see, subsequent events. He will do. So I hope you understand. All these are points which are like that only, which are basically the examples. Look at the question. Examples of audit procedures when events or conditions have been identified. So something you will identify in the earlier answer, and in this answer, you will take some action. Are you there with me, yes or no? So in the class, we had done this as 4 boys near the river story. This is that story. Are you there? Yes or no? Comfortable till here? Can you go ahead now? Okay. Next one. What are the additional audit procedures when events or conditions are identified? What are the additional work that the auditor should do? First of all, the auditor should ask for management assessment whether it is done or not. If it is done, then a management plan will be there in place. If it is not done, then the auditor will request them to make the plan. If they make the plan, then plan will be there. In that case, this arrow should have been from here. One second, now there is a slight error. This arrow should be from here, from management plan, not from cash flow forecast, from management plan. Whenever the management gives a management plan, the auditor has to ask 2 things. Does it improve the situation and is it feasible or not? Improve means, suppose there is a big loan on the company's head. The management decides to sell few of their machines and pay a part of the loan. Does it improve the situation? And selling the machines, is it practical or not? Is it feasible or not? Does it make sense or not? That is what we are trying to see. Okay. Next is, we are looking at the cash flow forecast, the cash flow position that the company is forecasting regarding the future. We will check the reliability of the cash flow forecast and whether adequate support is given or not. Adequate support is given or not. We will also take the written representation of the future plans and the feasibility of it. We'll take the written representation, means everything in writing. Okay. And last but not the least, since the previous management assessment, since that time till now, we'll consider all the additional facts that may happen. So are there any additional facts that we need to check? That is what we'll see. Are you there with me, yes or no? This question number 7, that is additional audit procedures regarding going concern if the auditor identifies any event or condition. Clear to understand this part here? Okay. Now let's go to the next one. Please here. Now this is a very nice answer, very superb answer. This is regarding management disclosure. Okay. Management disclosure means what? See, ideally the management should openly disclose regarding going concern because they have to tell the truth to the shareholders. There are two levels which you have to work in this. First is event or condition there? Is there event or condition? Second, is it leading to material uncertainty? There is a big loan that the company has to pay to the bank. So they have to repay the loan. They have not yet done so. So event or condition is there. That is non-repayment of the loan is the event. Is it leading to a material uncertainty regarding going concern? Big doubt. Material uncertainty means big doubt regarding going concern. So the auditor is asking, is the event or condition there? The answer is yes. Is it leading to material uncertainty? The answer can be yes or it can be no. If the answer is no, it means big loan is there on the company's head, but company will be able to pay it easily. There is no problem. They can sell a few machines and they can pay it. But still the management, should they give a disclosure to the shareholders? The answer is definitely yes. So auditor will evaluate whether as per AFRF, FS contain the required disclosures or not. That is what the auditor is checking. Okay. Second, if material uncertainty is there, this was a case where material uncertainty is not there. In this case, material uncertainty is there. So there is a material uncertainty, big doubt that the company may not continue as a going concern. In that case, management has to adequately disclose. They have to clearly disclose. What should they adequately disclose? The event or condition. They should tell openly, big loan is there, we are not able to pay it, like that. Plus, they should disclose the management's plans to deal with the event or condition. Easy. They should clearly disclose the material uncertainty. And they have to mention the fact that they are unable to realize its assets and their liabilities in the ordinary course of business. It means that they cannot continue showing on cost basis. They will have to show everything on NRV basis, as I told you. Simple to understand this area. Okay. There is your adequately disclose and clearly disclose. Easy. Last but not the least, that is auditor's report. So what are the implications of going concern on the auditor's report? Let's do one by one. I want you to hear this piece here. Management says they are a going concern. Auditor says that they are not a going concern. Company is not a going concern. In that case, the auditor will simply give an adverse report because opinion is only different. What they feel, what they say, what we feel, there is a big difference. In that case, we'll give an adverse report. Easy. Case 2. Company says that they are a going concern, but material uncertainty is there. And two things. Management gives a proper, honest, heart-to-heart disclosure about it. They tell about everything. In that case, the auditor will first of all appreciate the management, because even though the company is in a tough situation, the management has been very open and they are informing the shareholders, see, this big problem is there. It's a good thing. In that case, the company must have given the disclosure, means they have given the disclosure in the notes to accounts. Let's say they have given note number 23. So they have adequately disclosed. So in this case, the auditor will give a clean report or unqualified or unmodified report, means the same thing. Okay. Then in the audit report, the auditor will open a paragraph called material uncertainty in relation to going concern. This paragraph. And in this paragraph, the auditor will write there that please go and read note number 23. Auditor is telling the shareholders, please go and read note number 23. Management has given an important disclosure. But the auditor will worry that the shareholders should not take this auditor's concern that please go and read that notes to accounts. It means that the auditor is scared that the company may not continue as a going concern. The auditor wants to relax, help the shareholders to relax. So auditor is telling the shareholders, see, material uncertainty is there regarding going concern. Please read that note number 23. However, our opinion on the management is that they are fine statement. We don't want to give any kind of modification. The auditor's opinion is not modified. It means what? The auditor feels that everything that the company has disclosed is disclosed properly only. Just that the auditor wants to tell the shareholders, please read note number 23, so that the shareholders get proper knowledge and they can take their buying, selling, holding onto the shares decision. All the decisions they can take. Simple. So that is basically this part here. Tell me, company is a going concern, material uncertainty is also there. In regarding this part, what I just said, if the management has given the disclosure, in that case, the auditor will give a clean report. But the auditor in the auditor's report will also give a note in the material uncertainty in relation to going concern paragraph, and auditor will clearly mention that his opinion is not modified. Not modified. Are you there with me? Yes or no? Comfortable till here? Okay. Second, next one. This is case 2 part A. Okay. Case 2 part B. Going concern is there. Material uncertainty is there. And disclosure is not given. Disclosure is not given. It means management is not telling the truth. In that case, the auditor will give a qualified opinion or an adverse opinion, depending on whether the matter is not pervasive or pervasive. If it is not pervasive, qualified opinion. If it is pervasive, then your adverse opinion. Clear? Simple. Next is case 3. Case 3 is what? Management has not done the assessment only. What is the objective of the auditor? Tell me. Question number 3 we did. Tell me. What they say, what we feel, report if any difference is there. Are Baba, but what they say, they should say something. No, if they don't do assessment only. And what they say, we don't know. What we feel a lot of things. Report any difference. What difference will you report here? You cannot report any difference. Correct? So your objective is not met only. In this case, what to do? Regarding going concern, if they are not doing the assessment, then we don't have the evidence. In this situation, the auditor will give, see this, if it is not pervasive, qualified opinion. If it is pervasive, then disclaimer opinion, because we don't have sufficient appropriate audit evidence regarding this matter. Are you there with me? Yes or no? Simple. That completes a very beautiful standard called going concern. I hope you found it very comfortable. Any queries, please message me in the chat area. Okay, see you.
Hi everyone, let's continue with our revision session. We are now doing essay 580. Now let's see this. This is called as written representation. How many questions are there in this standard? Let's have a look. Okay, please here. First, we have the definition of written representation. That is question number 1. Second, we will call it as from whom is the written representation required. It is a one-line answer, that is, it is required from the management. But I have taken it as a separate question so that even if it comes in MCQs, you don't miss out on it. Okay. Question number 3, what are the objectives of the auditor in relation to written representation? That is question number 3. Question number 4, what are the areas covered by written representation? That is question number 4. Question number 5, what are the other matters for which written representation can be taken? So that is question number 5. Okay. Question number 6, my dear students, when can the auditor reconfirm certain matters using written representation? Very simple question, has come several times in the examination. That is question number 6. Question number 7, how should the auditor evaluate the matter received by written representation? You take this as question number 7. How should the auditor evaluate? The keyword being evaluate. Question number 7. Question number 8, doubts over written representation. Question number 8. Beautiful question, amazing question, has come several times in CA exams. Ensure you are doing this properly. Next is written representation is not provided by the management. This for us, my dear students, is question number 9. And finally, the 10th question is the date and period of written representation. So written representation is a list of your 10 questions. Okay. Remember, 570 going concern had in total 9 areas. This has 10 areas. So 570, 9 areas, 580, 10 areas. Okay, let's start. Now everyone, let's go one by one. Let's do the meaning of written representation first. Let's see this. First, written representation may be defined as a written statement by the management provided to the auditor to confirm certain matters or to support other audit evidence. I kept telling in the class that written representation by itself cannot provide sufficient appropriate audit evidence. By itself, it cannot provide. We need to have some audit evidence with us. Then we can take written representation to confirm certain matters. So in order to confirm certain matters, can we take written representation from the management? The answer is yes. But can written representation by itself be sufficient appropriate audit evidence? The answer is no. I cannot write an email to the management saying that please give information regarding inventory, and they give information saying that we have 7 go downs here. Go down 1 has this much inventory, go down 2 has this much value of inventory, go down 3 has this much value of inventory. And as soon as the management gives a reply, I say, okay, audit done, inventory checking is over. I cannot say like that. How can you rely completely on what the management says? Correct? So what you need to do is, you have to first gather your evidence. Then you can take confirmation from the management and see whether it confirms that matter or not. And if it doesn't confirm that matter, then you have to respond appropriately. Correct? Now let's see this. To confirm certain matters or to support other audit evidence, written representation in this context says do not include financial statements, the assertions therein or supporting books and records. It does not include what the management has to normally give the auditor. So information about transaction, account balance, disclosures, invoices, ledgers, agreement, all these things the management has to give the auditor for sure, right? So those are not covered in written representation. Those are not covered in WR. Are you there with me, yes or no? See this? So transaction, account balances, disclosures. In supporting books and records, we have cash book, fixed asset register, investment register, inventory register. All these things are not part of written representation. Clear till here? Okay, can we go ahead now? This is question number 1. Now question number 2, let's do this, please here. Sir, we will obtain written representation from which person? This is question number 2 for us, okay? So from whom is the written representation requested by the auditor? Simple one-line answer, it is required from the management and those persons who are having knowledge about the particular matter. So you will communicate with them for the written representation. Comfortable till here? Easy to understand this part here, okay? Can we proceed? Okay, let's go ahead. Please see here. Next. Question number 3. What are the objectives of the auditor regarding written representation? What are the objectives? So do a hand action with me. We already have the audit evidence with us, okay? Now, point number 1. We will obtain written representation from the management. See whether it confirms the matter or it does not confirm the matter. If it confirms the matter, great. If it does not confirm the matter, in that you have to respond appropriately. Example, suppose if I write an email to the management to confirm whether they are having 7 godowns where they have maintained inventory, correct? So I already go to the 7 godowns and I have the proof with me regarding the value of inventory there. I just want to confirm whether they have a 8th godown or a 9th godown or a 10th godown. So I'll ask the management, are there any other godowns other than these 7 godowns? I send an email to them. Now they send a reply to us saying that, no sir, these are the only 7 godowns we have. So we confirm the matter. Are you getting my point here? Confirm the matter. Suppose if they say, no, there are two more godowns that we have started very recently. So in that case, what evidence we had regarding 7 godowns, management has given the confirmation, but that does not match the information that we have. In that case, we have to respond appropriately. We have to do more audit procedures. We have to do further audit procedures on this matter. Are you there with me, yes or no? Comfortable till here, okay? So to obtain written representation from the management, see whether it confirms or supports other audit evidence, see this, and finally to respond appropriately. Respond appropriately. Comfortable till here? Okay, this is question number 3. Question number 4, my dear students, is in relation to regarding which matters will the management provide written representation. Okay, very simple. What are the general matters for which the management will provide written representation? We have a code here called FERI. FERI. What is FERI? Very simple. Whether financial statements is as per AFRF, is in accordance with AFRF, applicable financial reporting framework. F. E is in relation to regarding experts. So experts who have a specialized knowledge, we can take written representation from them also. Imagine this, if the management has appointed a valuation expert for their investment value. Now the valuation expert has given a valuation report. Now if we want to confirm something in that, then who do you contact? Is it better to contact the management or the expert himself? You should contact the expert. You understand here, that is the E of FERI. Okay, so F is financial statement, whether they are as per AFRF. E is in relation to experts. Very comfortable, okay? R and I are very interesting. Look here, see. Whether management has recorded all the information or not. Regarding that, we are taking written representation. And I is regarding whether all the information access has been given to the auditor or not. Whether management has recorded all the information or not, that is R. Whether that information has been given to the auditor or not, that is I. Okay, so look here, see this point. All transactions have been recorded and are reflected in the financial statement. This is R, recorded, everything is recorded. And whether all relevant information and access
as agreed is given to the auditor. That is I. Are we there together? Yes or no? Comfortable? This is FAIRY. For us, this is our question number 4. Okay. Now question number 5. Regarding which other matters can you take written representation? So let's do this. Please see here. Now we enter this question. Let's see this. Please see here. So this is the question. So regarding which matters will the auditor take written representation? Which other matters? So this means we are not looking at the general matter. See, in that question number 4, it was very generic. Generic means what? Very normal things. Whether FS is as per AFRF, take the written representation from the expert, whether they have recorded all the information, whether information has been given to the auditor or not. Very generic. In this, it is very specific. You will understand. See, we have a code here called scalar for question number 5. We see here whether selection and application of accounting policies are appropriate or not. Selection application of accounting policies. Then regarding the classification of assets or carrying value of assets, we are taking confirmation. See, very specific. Classification of asset, whether investment is long term or short term. Regarding carrying value of the asset, whether value is correct or not. Very specific. Next is regarding assets. We are taking information regarding plenty of assets. Plenty. Plenty means what? Plenty is our code. Look here. P is pledge. L is lien. EN is encumbrances. Encumbrances means any kind of security if it is there on assets. Next, TI is title of the assets. TI, plenty, PLENTI will take. So pledge, lien, encumbrances, titles of the assets. Can you go ahead now? After that, we have the next point, that is liabilities, both actual and contingent liabilities. Regarding this, you can take a written representation. And finally, if we are taking any information regarding any regulatory, contractual or legal aspects. Company has entered into a contract with their supplier. Regarding that contract, we want to just confirm certain matter. Some clause is there in the contract. We are finding it difficult. So we just want to confirm whether our understanding is correct or not. Regarding regulation applied by the regulator, we want to just confirm with the client. So regarding these matters, when you take a written representation, that comes under this category. Okay. So that is our code called scalar. Very simple code, scalar. Easy. This completes for us question number 5. Question number 6. When can you reconfirm any matter? Reconfirm. Very simple, very easy answer. Please see here. When can you, the keyword is reconfirm. See, reconfirm any matter. So let's see this one by one. Please see here. First, there is any indication, please see here. There is any indication that the management misunderstands those responsibilities. There is a misunderstanding between the auditor and the management. So we are just taking a reconfirmation on that matter. Next, those who signed the terms of the audit engagement with us, they are no longer part of the entity. So the person who is newly there, can you reconfirm that same matter with them? The answer is yes. Okay. Next is, if there are any major changes in circumstances. Example, company had 2 factories. But this year we observe that the company's operations has grown up by, let's say, 7-8 times. Let's say during COVID time, company was making masks. Company was producing so many masks that you understand that their production just went by leaps and bounds. So we just want to confirm whether they actually have only 2 factories now or have they increased their factories. So can you take a reconfirmation? The answer is yes, because there is a change in circumstances. And last point, my dear students, is the terms of the audit engagement were prepared in the previous year. So if the terms were prepared in the previous year, we just want to confirm regarding those matters. Okay, reconfirm regarding those matters. This completes for us question number 6. Okay, can we go ahead? When the management gives any written representation, what all matters will you evaluate that written representation with? How will you evaluate it? That is a question. Okay, so let's see this. Let's go to this question now. Please see here. Let's start. That's it. Please see. We look at the past history in carrying out the stated intentions. In earlier times, in few years back, what has the management intentions been regarding a particular matter. Example, management has changed from WDV to SLM method of depreciation. In the past history also, have they changed the method of depreciation? That is what we are checking here. We are evaluating their decision on this. Second, what is the reason for choosing a particular course of action? If they have gone from WDV to SLM, what is the reason for going for this new method of depreciation? Management's ability to pursue a specific course of action. What is the meaning of this? It means that whether if they have taken a decision, will they stick with the decision or not? In the past, have they gone from SLM, WDV, WDV, SLM, SLM, WDV, WDV, SLM on a very regular basis? In the last 10 years, they have changed the method 6 times. So in that case, we will not get confidence. But suppose the last time they changed the depreciation method was 28 years back. In that case, that is ability to pursue a specific course of action. Next, existence or lack of any other information that we know or any lacking is there. Whatever is the situation, whether we know the information or we don't know the information, there is a change, there is a different thought process that the auditor has and the management has. There is inconsistency. There is inconsistency with the management judgment or intent. So it is auditor versus the management. Are we there together? Yes or no? Very, very comfortable till here. Okay. That is basically this point. Okay. This for us, my dear students, is question number 7. Okay. Let's go ahead now. Question number 8 is one of the best questions you will ever see. That is basically this. Doubt as to the reliability of written representation. Doubt. So see, when you judge a person, no, you judge the person in terms of his qualities. Similarly, when the auditor joins the company as the auditor, in that case, he will judge the management. He will judge the management's something called as dice commune. Dice commune is what? Very simple. Look here, see. Diligence, integrity, competence, ethical values. They are commitment to those and enforcement of those. Commitment to those and enforcement of those. This is what we are judging first. So you understand here that once we judge a person at a very high level, but later on we find some lie about them, then suddenly their level drops. That is what is exactly happening in this answer. Now what is happening is when the auditor has kept the management at a very high level, we feel they are very, very diligent, very having good integrity, good competent, good ethical values. They are committed to these and they have enforced these across the organization. Now what has happened after doing this? We see that the evidence that we have and the written representation that they have given, it is not matching. So there is inconsistency. There is inconsistency with other audit evidence. So in that case, you will try to resolve, you will attempt to resolve the matter. See, attempt to resolve the matter. You will try to do your procedures and check once again whether your judgment about them is correct or not. Now what will happen is, see, if the matter remains unresolved, so we will reconsider what we were thinking about them. We will reconsider the assessment of dice commune. That is again, we will reconsider the assessment of diligence, integrity, competence, ethical values, their commitment to those and enforcement of those, and shall determine the effect that this may have on the reliability of the representation, oral or written, and the audit evidence in general. This is what we are looking at. Comfortable? Okay. If the auditor concludes that they were purely lying only, what we thought of them, what they are, now their level has dropped. So if the auditor concludes that written representation are not reliable at all, we cannot trust it, the auditor shall take appropriate action, including determining the possible effect on the opinion of the auditor's report as per SA 705, which you know very well is modified opinion. Okay, and in this appropriate action, we may even communicate with those charged with governance. This is doubts as to reliability of written representation. A favorite question. Okay, so do it properly. Has come several times in CA exams. Okay, next. If the written representation is not provided only, not provided, we are asking the management multiple times, they are not providing. What to do now? Discuss the matter with the management. If they still don't provide it, then we'll have doubt, reevaluate the integrity of management. Earlier we used to keep them at this level,
Now we are asking one question, we are asking some confirmation, they are not giving only. We feel because they are not giving, they must be hiding something. We'll re-evaluate the integrity of the management. We'll feel, oh, we thought they are very honest persons. They are not. Like that we'll feel. Okay. And we'll take appropriate action, including determining the possible effect on the opinion in the auditor's report in accordance with SA 705. And its appropriate action in this case means communicating with, again, those charged with governance. Comfortable till here? Okay. Last but not the least, date and period of written representation. You will always take the written representation from the current management. Whoever is the current management, whenever you want to confirm any matter, you will always take it from the current management. That is what is written in that part. Okay. This completes the entire revision of SA 580. Do it very, very nicely. It's a very nice standard, simple standard. Okay. Hi everyone, hope you are doing well. We are now doing the next standard, that is SA 450. Super simple standard, has just 4 questions. Ensure that you are knocking it out of the park. Okay, it doesn't get easier than this standard. Very, very simple. Let's get it done. Please hear. First is consideration of identified misstatements as the audit progress. How should you consider the misstatements as an auditor? Okay, so let's see this. Please hear. The auditor should look at the identified misstatements and circumstances of their occurrence that indicate that other misstatements that exist when aggregated with the misstatements could be material. So the auditor is basically looking at the possibility of material misstatements, okay? Or the aggregate of misstatements that have already been accumulated, are they material or not? That is what the auditor is looking at. That is basically is if there could be material misstatement, or already the misstatements that we have in aggregate, are they already material or not? In both the situations, what we'll have to do is we'll have to give these material misstatements to the, or the so-called to be material misstatements to the management. And we'll request the management to see, examine the TAD, transaction account balance disclosure. We'll tell them, please look into this matter carefully. If the management is sincere, what they will do is they'll try to get to the root cause of why those accounting mistakes happened. So the management will look at the cause of the misstatement. They will determine the amount of the actual misstatement, and if they are sincere, genuinely sincere, they will make appropriate adjustment also. They'll look at the root cause. They'll see what is the amount that is wrong in terms of accounting, and they will make the adjustment also. Now, if they have made the adjustment, we cannot just accept everything on face value, correct? No. So we'll have to check whether they have made the adjustment properly or not. So what we are doing is, see this, we are seeing whether the management, whatever misstatement they have given us, see, if at the auditor's request, management has examined the TAD and the corrected misstatements that were detected, the auditor shall perform additional audit procedures to determine whether the misstatements remain or not. So we are checking whether they have actually corrected it properly or not. That's it. This is question number 1, consideration. Simple. Question number 2, very simple. Now this is in relation to communication and correction of misstatement. Let's see this. Please hear. In this case, first of all, what they are saying is timely communication of misstatements is extremely important. You cannot accumulate all the misstatements till almost the end of audit and tell them, please correct everything now at one go. Very difficult for them. So as soon as you come to know about misstatements at regular intervals, you should keep on informing them, so that as soon as you inform, they can correct and give it to you back. Then you can check whether correction is done or not. And it is a back and forth process that can go on. Correct? If the management refuses to correct some or all of the misstatements, we gave them, let's say, 100 misstatements to correct. Some or all misstatements they have not corrected. Some they have not corrected, or all they have not corrected. In that case, what to do? Tell me what is the natural thing to do. Ask them, why have you not corrected? That is what you have to write. See this. Understand the management reason for not making the corrections. Normally, the audit paper, no, you have to apply common sense in that situation. If somebody doesn't correct the misstatement which I have told them to do, then what will you ask them? You will ask them, why haven't you corrected? That is what you have to write in the examination. As simple as that. But you have to read the area and understand the concept nicely. Correct? Next. And shall take that understanding into account, and when evaluating whether the financial statement as a whole are free from material misstatements. So if the uncorrected misstatements are still there, we will see whether it is material or not, because you know very well, see, uncorrected misstatements, if they are there, but if they are not material, then it doesn't bother us.
Correct? No, no problem. But if uncorrected misstatements are material, then we have material misstatement. And material misstatement, then our reporting will change, correct? We'll give either a qualified or an adverse report if material misstatement is there, if we have obtained sufficient appropriate audit evidence. Are you there with me, yes or no? Okay. This is question number 2. Okay. Question number 3 is super duper simple. That is regarding uncorrected misstatements. Evaluating the effect of uncorrected misstatements. So if uncorrected misstatements are there, what will you think? From which angle will you think regarding those matters? First, is it uncorrected misstatement because of size, means because of amount? Is it uncorrected? Is the uncorrected misstatement having an effect on the financial statement because, not because of the amount? Amount is small only, but because of the nature. Nature means if your materiality benchmark is 5 lakhs, but if the director has done a theft of, let's say, 4 lakhs, so is it less than materiality benchmark? Yes. So amount wise it is not material, true. But think, shareholders, if they come to know that director has done theft of 4 lakhs, then is the amount important or the nature of the transaction important? Nature is important. Imagine the person who you have appointed to run the business in which you have invested in. That person is stealing, maybe a small amount, but still stealing, no. So you understand here, the nature of the misstatement is such that it is an important matter to look at. So we'll look at the amount, that is the size, and the nature of the misstatement. Okay. Next, we'll ask ourselves the effect of uncorrected misstatement related to prior period. Sometimes this year accounts are proper, but last year some mistakes were done, and that is, getting carried forward and affecting this year's accounts also. That is what the auditor is looking at. Comfortable till here? That's it. Question number 3, easiest thing in the world. Question number 4, documenting regarding misstatements identified during audit. What will you document in your working papers? That is, in chapter number 6, we did audit documentation. So what will you document? So first point, amount below which the misstatements would be regarded as clearly trivial. Clearly trivial. Trivial means so small, so negligible in value, that is not important. So there also has to be a benchmark, because below which we'll say, oh, below this we are not going to even bother about it because it is clearly trivial. Trivial means very negligible, not that important. Example, for Reliance Industries Limited, 5,000 rupees transaction will be clearly so small that it is not even worth it to check it. Are you there with me, yes or no? Okay. All misstatements accumulated during the audit and whether they have been corrected or not. So whether all the misstatements, whether they have been corrected or not. And those uncorrected misstatements, whether they are material or not. See this? Uncorrected misstatement, whether they are material or not. So these are the 3 things we will document in our own notes. That is as per the own notes means you know very well, that is your working papers or work papers or audit documentation that we see in chapter number 6. Very easy. This completes your essay 450. Okay. Okay, everyone. Now we start with essay 260. This is communicating with those charged with governance. Super simple standard. Okay. Unnecessarily don't make it complicated. Very, very basic. Very, very simple. And I hope you get this standard in one go. This chart that you see, that is the standard. That's it. Okay. Now, content of course is there. But even if you do this chart and then read the content, you will find it very, very simple. Okay. So chart is holistic. Holistic means covers all the points very nicely. Okay. Let's start this here. First, why is communication important between the auditor and the TCWG? Why is it important? Communication is important because it helps the auditor to you means understand the matter. Understand any matter in relation to audit, he gets a good perspective from the TCWG. Second, it is something that the auditor can use to gather information, to obtain information from the TCWG. Also see, when you discuss with the TCWG, you come to know whether they are aware of the financial reporting process or not. It is important for them to have, they are sitting at the top, but many a times it may so happen that the TCWG is not aware of the financial reporting process also. So the auditor will come to know whether TCWG oversee the financial reporting process or not. So we have a code here called UNI oversee financial reporting. Very simple. This is question number 1. Question number 2. Who are TCWG? the TCWG are nothing but Sai Baba. So our code is Sai Baba. In that we don't need Baba, we only need Sai. What is Sai? They are those who are involved in the strategic direction of the company. They give the strategic direction to the company regarding what goals to achieve. If something goes wrong in the company, they are the person who are accountable, and their work ideally should include the overseeing of the financial reporting process. Very, very comfortable till here. Simple to understand this part here. Next, question number 3. What are the objectives of the auditor regarding communicating with those charged with governance, regarding this standard? Okay. So the first objective of the auditor is very simple. It is ensure that clear communication is there. Clear. Regarding what? Regarding the responsibilities of the auditor, RE, regarding the scope and timing of audit, planned scope and timing of the audit. What are we planning to check? When are we planning to check? Just to give an overview to the TCWG. Just to tell them, see, by this date we may complete our audit. By this day we may give our audit report. By this day 50% of audit should get over. Like that. That is basically your responsibilities, planned scope and timing. You are informing the TCWG. So our code is REST, that is responsibilities, scope and timing. Now when you communicate, you expect that they will also communicate. So we want a two-way communication. Now when we communicate, what do we need? We want to obtain information. So see, obtain relevant information. And we will give our observation to them. Whatever we observe in the company, we will inform the TCWG. So provide timely observation regarding SIR. As you have given a code there called SIR. SIR means significant and relevant matters. Very, very simple. Basic area. Super easy. Okay. So question number 1 we saw was, why is communication important? Question number 2, who are TCWG? Question number 3, objectives of SA 260. Now question number 4, let's see. Matters to be communicated. Tell me, matters to be communicated. So which matters should be communicated? Let's see. First they are given there regarding auditor responsibilities, and second regarding significant findings. So we have A and B. So regarding auditor responsibility, what do you inform? You informed about Mera Kaam. Mera Kaam means auditor's job. And you also remind them of Tera Kaam. Tera Kaam means what their job is. So we have 2 points here. You can see communicate Mera Kaam, communicate Tera Kaam. Now Mera Kaam means what? Mera Kaam means I will tell the TCWG, see, my job is to reach the reasonable assurance level and to report as per the standards on auditing. That is my job. What is their job? Their job is to ensure that they comply with accounting standards and they make the accounts properly. Just because auditor is there to check doesn't mean that they don't make the accounts properly. They cannot say, oh, auditors, you will check us and tell us the mistakes. No. So even if you make mistake, it's okay. That should not be the attitude. We want them to make the accounts properly so that it is easier for us to also check. So we will communicate Mera Kaam, auditor's Kaam, and we will also remind them of Tera Kaam. Comfortable till here? Next. We will communicate our planned scope and timing of audit also with the TCWG. Very, very simple, very, very easy, super easy. Next, significant findings is the B part. I feel this part is very, very important. So this B part, please ensure that you are marking it as star. Very, very important. Significant findings. Now, what are the significant findings in relation to SA 260? Super easy, very simple. First is we'll communicate significant qualitative aspects. That will include what? Remember a code called PAID. P-square-E-D. P-square-E-D. We'll communicate with them our practice. We'll communicate with them and we'll want to know the information regarding any significant practices, some changes have happened or not. Practices means, let's say, for some reason or the other, they are maintaining accounts on cash basis. So we are wondering why not accrual basis. Next is regarding accounting policies, regarding estimates or disclosures. Regarding this, if we find something, we'll communicate with them and we'll hopefully receive a response from them. Next, any significant difficulty that you are having in auditing, any difficulty. The management is not giving the information to us on time. The information is given to us so late it is very close to the audit report date. All these things we can inform the TCWG. Significant matters that we have discussed with the management. So the matter is so significant that we have already told the management, and we feel that we should tell the TCWG also. Written representation that the auditor has requested but still not received. If I have requested a written representation but the management is not providing that to me, then this matter I will inform the TCWG. Circumstances that affect the form and content of the audit report. Form and content means what? Whenever we are giving a qualified opinion, adverse opinion, disclaimer of opinion, basically modified opinion, should we discuss the matter once with TCWG? The answer is yes. And finally, your favorite point in the world, other significant matters. Your favorite point. Sir, half mark we are getting for free. So we'll write that. So these other significant matters. Are you there with me? Yes or no? Okay. That completes this answer. This is 4B. Last question, that is in relation to listed entities. Question number 5. See here, question number 5. In relation to listed entities, which matter should we communicate? There is a code here you can see here called Iyer. E means ethical requirements including independence, we should communicate. All relationships and other matters we should communicate. Suppose a related party of the auditor's firm is doing some work with the company. In that case, we should inform the TCWG beforehand. See, this relation is there. You have appointed them as, let's say, maintaining the accounts of the company. So you are appointing us as auditors. We just want to inform you that they are related parties. Ideally, you should not accept such work because you know section 144. So some matters which are dicey, in which controversial things can happen, you should inform the TCWG. Okay. Last is R. R is regarding any other related safeguards. We can inform the TCWG that, see, we have taken a declaration from all our audit team members that whether they are holding shares in the company or not, the declaration we are having in place, or in one way or the other, are they related to the company, we have taken a declaration from them. That is a related safeguard from our side for our team members that we have taken, that will inform the TCWG. So ethical requirements including independence, all relationships and other matters, and the third point is related safeguards. Are you guys there with me? Yes or no? Comfortable till here? That completes this part. Easy? Simple to understand this part here? Hi everyone, now we are doing essay 265, that is in relation to communicating the deficiencies in internal control. Okay, so let's do this area. Let's see the first one, please here, let's start. Look here, see. First, deficiencies in internal control exist when, see, when will the deficiency exist? When control is not there only, or control is not working the way it should work. Okay, so see here, first of all, where control is missing, or the control that is designed, implemented or operated in such a way that it is unable to prevent or detect and correct the misstatements. In your building, if watchman is not there only, then theft can happen. If the watchman is there, but he is not working the way he should, he sleeps in the night nicely, snoring. In that case, you understand, then also theft can happen. So if control is missing, or if control is there but not working properly, in that case also, we call it as a deficiency. Can we go ahead now? When do you say there is a significant deficiency? When a deficiency or a combination of deficiencies, see, deficiency or a combination of deficiencies in internal control that in the auditor's professional judgment is of sufficient importance to merit the attention of those charged with governance, where deficiencies sometimes combine to ensure to see, and it leads to a significant deficiency, where we feel, oh, this is very important to inform the TCWG because it merits the consideration or the attention of the TCWG. Okay. Next, the significance of a deficiency or a combination of deficiencies in internal control depends not only on the whether the misstatement has actually occurred, but also on the likelihood that a misstatement could occur. Likely to occur, or it could occur. In both cases, it can be a significantly deficient matter. Okay. Let's go to the next area. This was basic simple area. Let's do this important question here. This is basically in relation to examples of matter that the auditor may consider in determining whether a deficiency or a combination of deficiencies in internal control constitutes a significant deficiency. When will the auditor say that deficiency or a combination of deficiencies may lead to a significant deficiency? Okay, the key thing that you have to understand here is these are the examples of matters, examples. Okay, it can be more than this also. Let's see first. We have to look at the likelihood of deficiency. If it is happening more times, then it may lead to a significant deficiency. You have to look at loss or fraud. If the value or the asset involved is very high or very precious, it may lead to a significant deficiency. Complexity of determining the estimated amount. The estimated amount that we are taking is more of guesswork, and it is taken on the basis of very less information. There is a word that I taught you in class called measurement uncertainty. This is similar to that. Okay. Next, we have something called as the amount exposed to the deficiency is very high. Very high amount is exposed. Next, you have volume of activity is such that a mistake can occur. But a mistake, if it occurs in 1 crore transactions, then the volume is such that it leads to significant deficiency. Okay. Next area, the importance of controls to the financial reporting process. For example, they are given here some controls if they are not working properly, crucial, important controls. Example, the monitoring control of the entity, whether the entity is working properly or not, the person or the system that monitors it, that is only not working properly, that may lead to a significant deficiency. Or the prevention and detection of fraud. Imagine this not working properly. Next, significant accounting policies, their application or selection is not properly done. So if this control is not working properly, it may lead to a significant deficiency. Related party transactions which are outside the normal course of business, transactions which seem very weird for the company. I give this example in the class. If an iron and steel company purchases some 25 ton of cotton, you are wondering, iron and steel company purchasing 25 ton of cotton doesn't make sense. Only that is this outside the normal course of business. That may put us to doubt that, oh, what is this? Nobody has identified this weird transaction. Why? That will put us in the thinking process. Next is period end financial reporting process. Period end basically means near the end of the year. Near the end of the year, a chance of doing fraud increases because suppose if you are expecting 100 crore sales, but you are not even close, you are hardly doing 50 crore sales around the Jan-Feb month. 31st March is the year ending. So now what will happen is the company will call the accountant and do some manipulation in accounts. Try to increase the value to around 80 crores, 75, 80 crores, just to justify, see, we are close to 100 crores. All these manipulations happen near the period end. So there you have to be very careful. Okay. Next, the cause and frequency of the exception detected as a result of the deficiencies. Exception detected, you know very well, exceptions is what you thought and what you got. The difference between that is called exception. So if more of those are detected, you will understand that it may lead to a significant deficiency. And finally, if one deficiency interacts with another deficiency, it may lead to a significant deficiency. Please see here the interaction of the deficiency with other deficiencies. Are you there with me? Yes or no? Comfortable? Okay. Let's go to the next question. Please see here. Examples of indicators of significant deficiencies. Indicators. This is not a sure shot thing. This is when you will doubt, oh, there can be a significant deficiency. Let's see this. In this, I have a simple diagram for you. Please see here. When control environment is not effective and it is leading to one of the 3 F's. What is F's? Please see here. First F, control environment means top management. They are involved in any financial interest, or they are involved in fraud, or they are finding it difficult, failure to take remedial action. Second, risk assessment process is absent, not there only, or there but ineffective, or even though risk is assessed, they are not able to take effective response. So there is ineffective response. Next, internal controls are not able to prevent material misstatements or issues. Internal controls are not able to detect and correct misstatements. Okay. Next, the control environment, finance statement is unable to oversee the preparation of FS. The control environment, top management is not able to oversee the preparation of the financial statements. How the transaction goes from transaction, journal, ledger, trial balance, then goes into financial statements. They are not able to oversee. There is no control. And last, inclusion of prior period items leading to error or fraud. Last year, some issues are there leading to issues in the current year. To understand here, this is how it works. This is regarding indicators. Okay. Last but not the least, last question in this standard and this chapter also. Let's go for it. Please here. This is communicating of significant deficiencies. How do you communicate? See, significant deficiencies will inform the management and TCWG both. Any other deficiency will inform only the management. It is not worth it to inform the TCWG. So same thing they have given. See, communicate with TCWG. What will you communicate? You will communicate the significant deficiencies. What will you communicate with the management? You will communicate significant deficiencies also and other deficiencies also. Comfortable? Whenever you communicate with some description. Correct? No, some detailing you will give. You should give the detailing in such a way that they understand the matter after reading it. So they get the context. See this? Sufficient information to enable those charged with governance and management to understand the context. Context basically means the reasoning behind it. What is the actual matter? They should come to know about it by reading the description. Okay. Last but not the least, the auditor's main job in audit is to reach the RA level and to report as per the standards on auditing. My job is not to communicate the deficiencies to the management. It is not. That is not my main job. But in my audit journey, when I do test of controls, I come across internal controls. So I come to know about the deficiencies. Hence, as a so-called favor to the management, favor to the TCWG, we inform that, see, in your company system, these issues are there. That fact, that see, it is not the auditor's main job to talk about the deficiencies in internal control, because our main work is to report to the shareholders after obtaining sufficient appropriate audit evidence and to obtain reasonable assurance. To understand here, that fact is mentioned in this part. Are you there with me? Yes or no? Okay. That completes our chapter 7. Quick recap. Okay.
Okay, everyone, now we are starting with the quick recap of chapter number 8, part 1. This has 3 main areas. It has branch audit, joint audit, CARO. Let's do branch audit first. Let's complete those 2 areas. Let's see this. Now, in branch audit, what are they said? There are 2 questions here. Who can be the branch auditor using the work of another auditor? Who can be the branch auditor? In the case of an Indian branch, so if the branch office is in, let's say, in India only, in Nagpur, let's say branch office is there, company's head office is there in Mumbai. In that case, what they have said is the head office auditor can do the audit of the Indian branch, or any other practicing CA can do the audit of the Indian branch. You can appoint the head office auditor or any other practicing CA. If the company has a foreign branch, then the head office auditor, that is company's auditor, can do the audit, or an accountant can do the audit, or any person qualified to be an auditor as per the laws of that country, they can do the audit. So in our example, as per the German laws, if any person can get qualified to be appointed as an auditor, we can appoint him the auditor of the Germany branch. Okay. Next, we are now doing something called as using the work of another auditor. We had done hand action. Let's go for it. First is what? Clear understanding of the role of the branch auditor and our role we'll first understand. Next is we are entitled to rely upon the work of the other auditor because he's also a CA. Next is we'll discuss with the other auditor. We'll visit the other auditor. So the 4 points are here. We see here clear understanding of the role of such auditor and the company's auditor will give. That is the first area. Second is we are entitled to rely upon the work of such auditor. Next is we might discuss with the other auditor, and if required, we may visit the other auditor also. So 4 points are covered here. Let's go further. We will do advise. We'll advise the other auditor regarding CCC and AAR. So in the first advice, we have CCC. In the second advice, we have AAR. What is CCC? Very simple. Regarding coordination of the effort so that jointly we take lesser effort to complete the work properly. There should not be as much overlap of work happens. It is better if I complete one work and after some 2-3 weeks he submits his work, then I have to again restart that work once again. So I will not want that. So I like to coordinate with the other auditor. Next is inter-component transaction, inter-branch transactions. And third is completion timetable. Completion timetable I will give him so that we are having some schedule that we can follow. Okay. And advice regarding AAR, we have significant accounting, auditing, reporting requirements we'll try to fulfill. Okay. So all these things regarding these matters, I'll try to advise the other auditor. Simple. Then we went into our DEAR. Joint audit. Let's start. Favorite area. Joint audit is basically very nice. 4+1 we have. So we have first in 4+1 we have this question number 1, 2, 3, 4, and this fourth question has a hidden +1 also. Okay. So let's start. We are now doing advantages of joint audit. Let's start. We are doing our right hand actions. What are the advantages of joint audit? Let's do it. Please tell me. Sharing of expertise, mutual consultation, lower workload, lower staff development cost, lower cost to carry out the work, better quality of performance, improved service to the client, local firms, and healthy competition. Next is, what are the disadvantages of joint audit? We are doing left hand actions. Please tell me. Fees will be shared, psychological problems, superiority complex, problem of coordination, common concerns are neglected, uncertainty of liability. When are the joint auditors jointly and severally liable? They are jointly and severally liable when bad by all, FSAR comply. Let's do it. Work done by all, agreement by all, and decision by all. Let's do quick example giving in this. Work done by all. In the class, we had done the example that if joint auditors have divided the work amongst themselves between the three of them in fixed assets, in between assets, liabilities, and P&L account, the notes to accounts area becomes the common area, common concern. So that is the work done by all. So for if there is a mistake regarding the notes to accounts area, all three joint auditors will be jointly and severally liable. An agreement by all, any matter brought up by one auditor amongst which all the joint auditors are in agreement, this is called as agreement by all. Decision by all was regarding decision regarding the nature, timing, extent of audit procedures. So while planning the audit work, if some mistake is found, then all three joint auditors will be liable. As per our example, we have taken 3 joint auditors, that's why joint auditors can be 2 or more. Okay. But if a proper execution is not done by any one of the joint auditors, then only that specific joint auditor is liable. Okay? Whether FS complies with the relevant statute, whether audit report complies with the relevant statute. This is what they'll be liable regarding these matters. If financial statement is not as per AFRF and joint auditors do not tell about it only, then all joint auditors will be jointly and severally liable. Audit report is not complying with the SA 700 format, then all joint auditors will be jointly and severally liable. Okay. Next. Special consideration. Let's sing the song. This is our Belagiddu. Let's start. 1, 2, 3, start. Involved in planning overall audit strategy. Discuss and develop a joint audit plan. Identify the division, reporting objectives, communicate teams' efforts, preliminary engagement, activities, NT of resources, assess the RMMM, document the entity, common engagement letter, work allocation. That is basically this answer. How does it cover? Very simple. Joint auditors should be involved in planning of their work. They should involve their key team members also. They should establish the overall audit strategies so that what areas to cover, when to cover, and in which manner the audit should be done. That regarding that we have clarity. Then they should discuss and develop a joint audit plan which will cover the following areas. They should identify the division of work and what common areas we will do. Okay. Next is reporting objectives. What is the main goal of making the audit report? That should be known. Next, they should communicate among all joint auditors the factors that are significant in directing the engagement team's effort. So what should be done so that the team's effort gives the best result? They should communicate with each other, the joint auditors. Preliminary engagement activities. Before the audit work starts, what we should do? Preliminary engagement activity. Nature, timing, and extent of resources. In the class, we made 2 arrows. Human resources, IT resources. We should ensure which resource will be useful, when they'll be useful, in how much extent we can use that resource. That we should know. Okay. Next, we had done, you should assess the RMM. That is basically risk of material misstatement. That is nothing but 315. Now you know very well. It is 315. Identifying and assessing risk of material misstatement. Next is we'll document the nature, timing, and extent of the common procedures and common area and the specific allotted areas. Joint auditor should obtain a common contract between the auditor and the client is called engagement letter. And finally, the work allocation document after the work has been divided should be signed by all the joint auditors and communicated to those charged with governance. In the exam, if they ask you that +1 means if they ask you, what will you include while discussing and developing a joint audit plan, you will include only this as the answer, point number A to E of question number 3. Okay, so be very careful about this. Okay, this completes our area in relation to joint audit. So joint audit we have done question number 1, 2, 3, 4, and +1 here. We have done that now. Okay? Let's go further. We go to the all important, the dynamic of all dynamic areas, that is CARO 2020. Let's start. Very nice area. Let's start. CARO, superb area. Let's go for it. Tell me. The company shall prepare the financial statements and they shall give those financial statements to the auditor. Auditor will prepare the audit report as per SA 700. There's another requirement on the auditor's head that the auditor should also make a report as per CARO 2020. CARO has in total 21 clauses. Auditor has to report on as many clauses as applicable to that organization. CARO is applicable to all companies, including foreign companies. CARO, however, is not applicable to 8 BOSIP. Go for it. Tell me, you are champions at it. Go for it. Tell me. Section 8 company, banking company, OPC, small company, insurance company, and certain private companies. Why am I making this arrow? Because this arrow will come down here. And for chote private companies, CARO is not applicable. Not applicable. Okay. So for chote private companies, CARO is not applicable. For bade private companies, CARO is applicable. This is how we did it. Which companies are chote private companies? Private companies, there are 5 points in it. So I'll first write the points. Point number 1, point number 2, point number 3, point number. Let's start. Private companies which are not a holding company of a public company. Private companies which are not a subsidiary company of a public company. Private company having a paid capital plus reserves up to 1 crore. Borrowing up to 1 crore, revenue up to 10 crores. When all 5 conditions are satisfied, then only you will call the company as a chote private company. Any one condition not satisfied will become bade private company and CARO will become applicable. Remember this, when you take reserves, borrowing, revenue, you have to follow this instruction sheet which I gave. For reserves, take all reserves and always deduct profit and loss account debit balance. If they give you a balance sheet in the exam to assess, you have to keep this in mind. Borrowing, you should consider all borrowing, that is long-term, short-term, secured, unsecured, interest accrued and due. And revenue, you should take sales, other income. See, it is revenue and not sales. Revenue means any kind of income the company has earned, you have to include it. You will take sales, other income, sale of fixed asset, revenue from discontinuing activities, subtract the sales return, trade discount, excise VAT. Excise VAT basically means tax. So in today's times, you will deduct GST basically. You will never ever deduct 2 things: commission on sales and cash discount. You will never deduct these 2 things. Are we there here? Yes or no? Comfortable? Okay. Let's go ahead with the big gun, and that is your 21 clauses of CARO. Okay. Let's start. CARO clause 1 is in relation to, I'll highlight, it is better if I highlight. 1 minute, wait. CARO clause 1 in relation to property, plant, equipment, intangible asset. In that, we have done a code called PPT REBE. Whether the entity is maintaining proper records or not, whether physical verification has been done by the management, and if there is any material discrepancy, whether it is properly dealt in the books of accounts. We'll check the title deeds. Regarding this, we had seen, go for it, tell me. Company controls company's name. In these cases, we'll get the title deeds. Somebody else controls somebody else's name. In that case, the asset is a leased asset. In that case, we don't have to worry about writing in CARO report. Company controls but somebody else's name. In that means the company is doing some manipulation. So we have to ensure that that table is filled, which is given in CARO clause 1. Okay, in this point. There's a revaluation. In that case, we had done this way, that in our example in the class, the value of the class of assets was 40 crores. 40 crores plus 10% is 44 crores minus 10% is 36 crores. If the value is less, if from 40 crores, if the revaluation is done and the revaluation value is, revalued value is less than 10%, in that case, we'll only mention revaluation is done. But if the revalued value is 10% or more, in that case, you have to mention that revaluation was done, and we have to also mention the amount of change. Comfortable? Okay. So mention amount if it is 10% or more. Next is in case of any proceeding under Benami Transaction Prohibition Act 1988, we have to mention that proceeding is going on. This is CARO clause 1. Quick recap. CARO clause 2, we had done inventory. Inventory, we had done something called as P3WC. Whether physical verification is done by the management. While doing that, whether their procedure is appropriate or not, and if they find any discrepancy of 10% or more, whether it is properly dealt with it or not. So we have P3, physical verification done by the management, whether their procedure is appropriate or not. and if it is properly dealt in the books of accounts, if discrepancy is 10% or more. WC, let's go for it. It was a nice one for you so that it is easy for you to say. Go for it, tell me. The bank or finance institution has given any working capital loan to the company of more than 5 crores. They will take current asset as security. They'll also want the company to file their quarterly statements or returns where the bank can keep a check on the value of inventory at the godown. Companies sometimes may try to fool the bank by showing higher value of inventory is there. Hence, there is a chance that the company may do manipulation in their quarterly statement or returns. So auditor, when he makes CARO report, he has to mention whether the quarterly statements or returns are in agreement with the books of accounts. If not, then the auditor has to provide the details of such a manipulation. Are you there with me, yes or no? This is CARO clause 2. Let's go to CARO clause 3, the big one, the giant, that is your Linguse to Kofilo. Let's see this Linguse to Kofilo, which is basically this entire area which I'm shading in yellow. This is that area. These are 6 points. We are done in the class. Let's do one by one. Tell me, Linguse to Kofilo, loans given, investment made, guarantee given, security given to Kofilo, company, firm, LLP, other parties. In that, what all points will we check? We'll check 6 points. Let's start first. When loans have been given to JASU or other than JASU. JASU means your joint venture associate subsidiaries. Other than JASU means other than joint ventures associate subsidiaries. When loans are given to JASU, in that case, we have to mention 2 things in the CARO report: the aggregate amount and balance outstanding on the balance sheet date. Loans are given to other than JASU, we'll mention again such same 2 things: the aggregate amount and the balance outstanding on the balance sheet. Okay. Next, we had done provide loan guarantee security. We had done terms and conditions. When the company has given any kind of loan, whether terms and conditions, whether they are prejudicial to the interest of the company, whether they are disadvantageous to the interest of the company, that is what the auditor will mention to the shareholders in the CARO report. Okay. Then we have re means what? Repayment schedule. Whether repayment schedule is regularly followed in terms of the principal and the interest. ORE, if the amount is overdue for more than 90 days, whether company has taken reasonable steps for recovery. Next is REF. During the year, if some persons have come to whom we had given the loan earlier, but they have come to us in this year for any kind of renewal, extension, fresh loan for existing loan. In that case, we have to mention 2 things in the CARO report: the amount of renewal, extension, fresh loan for existing loan, and the percentage of that to the total loan. Then we have REP, related parties and promoters. In this case, if the company has given any loan to related parties and promoters, you have to again mention 2 things: what is the amount of that, and the percentage to the total loan. Are you there? Okay. Let's go to the next, CARO clause 4. Linguse, again common. Linguse under 185 and 186. 185 is loans given to directors, and 186 is inter-corporate loans and investments. Auditor will simply check if these sections apply, then whether these sections have been complied with or not. Okay, this is not there in inter, it is there in final only. For the timing, you have to just know. In final, more questions on this clause can come. Okay, because by that time you will be knowing those section numbers also. Let's go further. Accepting deposits. In that case, we are talking about rows. What is rows? Let's go for it. Whether RBI directions have been followed or not, whether rules framed have been followed or not, whether company has complied with section number 73 to 76 or. If RBI direction, rules framed, section 73 to 76, if anything is not followed, in that case, what can happen is the company may have received an order from any company law board, national company law tribunal, court, or any other tribunal or RBI. Then the auditor has to check whether those orders have been complied with or not. Complied with or? Simple. Okay. Next. We go to CARO clause 6, that is called cost records. Cost records, very simple. Whether company is maintaining cost records under section number 148, subsection number 1. Simplest clause, CARO clause 6. CARO clause 7, let's do stat reduce. Very nice clause. Stat reduce 2 parts. First is undisputed, second is disputed. Undisputed stat reduce means there is no dispute regarding the amount. No dispute regarding the amount. Company knows it has to pay, government knows it has to collect. But the company is still not paying, then in that case, the auditor is only required to mention the undisputed amount in the CARO report if 2 conditions are fulfilled. That amount should be outstanding on 31st of March. It should be outstanding. And it should be outstanding for more than 6 months. These 2 conditions have to be fulfilled. Only then the amount will come in the CARO report of the auditor. Second, the amount is disputed. Then the auditor will mention the amount of dispute and the forum where the dispute is pending. Where is the dispute exactly pending, in with which authority? In this case, we had taken the example of income tax authority. So we had done ITO or AO, CIT, that is Commissioner of Income Tax Appellate Tribunal, High Court, Supreme Court. Where the matter is pending of income tax, if income tax matter is pending, that the auditor can mention here. He has to mention the amount and the forum where the dispute is pending. Comfortable? This completes your 7 clauses of CARO. 8th one, unrecorded income now recorded. If some past income we are recording now, in that case, we have to ensure that whether it is properly dealt in the books of accounts. Of course, in the class, we did the suitcase exam. We have done that. Let's go further. Let's go to CARO clauses 9 to 21. Last part of CARO. Let's do it. CARO clause 9 is about repayment of loan. In that we see, we did a code called DP JASU. Very simple. Default. Then it was purpose, and then it was JASU. These were default. Default had whether lender-wise details. I mean, auditor has to provide lender-wise details, and whether company is a willful default or not, auditor has to mention. Purpose, whether loan is used for the right purpose, whether the company has taken short-term loan but used for long-term purpose. JASU had 2 points: caring parent, careless parent. Caring parent is which parent? Tell me. From any entity or person, the company has taken a loan to pay the JASU's obligation. So the parent is taking care of the child. What is careless parenting? The company has taken loan from any entity or person and pledged the securities of JASU. In that case, if the company does any default of the loan, then the company's bacha, company's child, company's JASU will become the JASU of the entity or person. JASU, of course, means joint ventures, associates, and subsidiaries. Okay, we have done this area. CARO clause 10, nice one. Tell me, 10. You're asking for money. So 10, turn your hand, asking for money. This is what IPO, FPO, debt security, convertible security, private placement, preferential allotment. Regarding this, whether the money has been used for the purpose or not. 2 specific sections have also been mentioned in the textbook regarding this: 42 and 62. I'll just tell you what that is. 42 is regarding further issue of shares. FPO gets covered in that. And 62 is further issue of shares. FPO gets covered in that. 42 is private placement. Whether these sections have been complied with or not. That when you do the reading of the textbook, you will find those sections there. CARO clause 11 is fraud. Fraud is A and C square. Amount of fraud, nature of fraud, CG reporting of fraud under 143.12, and complaints by the whistleblower. Okay. Nidhi company, go for it. You know it very well. Go for it. Tell me. Nidhi company. In this case, what will you check? You will check whether net owned funds to deposit in the ratio of 1:20, 10% is unencumbered term deposits, and whether there is any default of deposit or interest, deposit repayment or interest. Any one of these issues there, the auditor will mention in the CARO report. Easy. Let's go ahead. CARO clause 13 is tere relatives, related party transactions. Very nice. This one. Tell me, related party transaction, if they are there, then the auditor has to see whether section number 177 and 188 have been complied with or not. The CARO clause 14, that is internal audit. If the company has an internal auditor, the statutory auditor will mention in the CARO report whether the internal auditor is commensurate of the same level as the client, as the company. That is what the auditor, statutory auditor will mention. He will also mention, the statutory auditor will mention whether he has considered the report of the internal auditor, whether he has gone through the report of the internal auditor. Okay. CARO clause 15 is non-cash transaction. Non-cash transaction. Whether non-cash transaction, section 192 is complied with or not. Okay. Simple clause. CARO clause 16 is NBFC. NBFC, 4 areas: registration, certificate of registration, CIC, number of CIC. Whether registration is taken as per section 45IA of RBI Act 1934. Whether the company is, whether the NBFC is working without a valid certificate of registration or not. Whether it is a CIC, then we'll mention. And if it is a CIC and in that group, if there are other CICs also, we'll mention the total number of CICs. We'll mention the total number of. Next, CARO clause 17, you know very well, Satra Khatra loss. So cash loss if the company is doing in the previous year and in the current year. The auditor will mention that in the CARO report. CARO clause 18, resignation of statutory auditor. If a statutory auditor has resigned, in that case, there will be a casual vacancy that another auditor must have filled. That other auditor who has filled the casual vacancy must have completed the audit and must have given the CARO report. Now, when the other auditor who has filled the casual vacancy is giving the CARO report, he has to mention whether he has considered the issues and concerns raised by the outgoing auditor. The reason because of which the earlier auditor resigned, he has to check whether he has read those reasons or not, considered those reasons or Next, CARO clause 19. Before in CARO clause 19, when the auditor is making the CARO report, he'll go through 5 documents: financial ratios, financial assets, financial liabilities, financial statements, board auditors and management plans. After going through these 5 documents, the auditor will mention whether the company is capable of meeting its liabilities for a period of 1 year. Suppose this balance sheet date, then period of 1 year from the balance sheet date. From the balance sheet date. This is CARO clause 19. CARO clause 20, very nice. That is your CSR. Let's go into CSR a little bit. This is section 135 of the Companies Act. Let's start. If there is unspent CSR amount is there, in that case we have to see that amount was allocated for an ongoing project or other than ongoing project. If it was for an other than ongoing project, then the company should transfer this amount to a fund under schedule 7 within 6 months from the end of the financial year. If that unspent CSR amount is there and it was allocated earlier for an ongoing project, then the company has to transfer this to a special account called as unspent CSR account, and they have to transfer this within 30 days from the end of the financial year. This money can be used for the next 3 years. After that 3 years, still if balance is there, then you have to transfer it to a fund under schedule 7 within 30 days. This is covered in section number 135, specifically subsection number 6. That is where it is covered. Yeah? Let's go further. You have CFS. CFS, explain to me, tell me. In a CFS, whenever there is a company and it has subsidiaries and associates, the individual holding company also and the individual company will have their auditors, and that auditor must have made the CARO report. When these individual auditors make the CARO report, they will cover all clauses from 1 to 20. But is it possible that they write something negative about the company? The answer is yes. The auditor of the consolidated financial statements will make the CARO report with only one clause, and that is CARO clause 21, where he'll make a list of all the negative or adverse remarks given by the individual company's auditor. That is what is CARO clause 21. This is what we have done in the class. Are we there together, yes or no? That completes your chapter number 8, part 1 revision. Are you there? Which contains how many areas? Joint audit or branch audit, joint audit, CARO. Branch audit, how many areas? 2. Who can be the branch auditor? Using the work of another auditor. Joint audit, 4 plus 1. Advantages, disadvantages, a jointly and severally liable, special consideration, plus 1 is joint audit plan. CARO, 2 areas, applicability and 21 clauses. 21 clauses we have just completed. Okay, easy.
Okay, we are starting with chapter number 8, part 2. Part 1 already covered joint audit, branch audit, CARO. Now we are doing part 2. Part 2 has the following areas. Let's see this. All the standards, that is SA 700, 701, 705, 706, 710. These are the standards we are going to cover in this part of the chapter. Okay. Let's start with SA 700. Very, very simple area. Let's go for the basic understanding. What is the objective of the auditor? Sir, the objective of the auditor is to form an opinion and through a written report. That is what the auditor's goal is. Okay. Now, in the next part, we see that the auditor's main goal is to form an opinion on the financial statements that are prepared and whether they are prepared in all material respects as per the AFRF, Applicable Financial Reporting Framework. What are the evaluations that the auditor will keep in mind? First, whether they are prepared as per AFRF, the basic one, whether qualitative aspects of the entity's accounting practices are kept in mind, done without any management bias in the management's judgments. That is what we are looking at here. Okay. Next area, let's see this. Sir, what are the specific evaluations that the auditor should do? Very important question according to me. We did a code called paid term. Paid term, the first area is in relation to, sir, whether the information is presented as per CURE. CURE is what? So it is comparable, understandable, relevant, reliable. Point number 2, whether accounting policies are disclosed properly, whether accounting policies are consistent with the previous years. Next is whether accounting estimates are reasonable or not. After that, we did whether adequate disclosures have been given regarding various matters. Example, fire in the factory building, proper disclosures have been given or not. Next is whether terminologies used are proper or not. You cannot use any some random fancy words that you want to use. You cannot use. Debtors cannot be called as people from whom we have to receive money. You cannot call that. You have to call debtors as debtors or accounts receivable. Whatever terminology is allowed by the AFR for the financial statements. Next area we go to is in relation to the definition. Very good area. What is a fair presentation framework, compliance framework? Any presentation framework that allows you flexibility. If you are not able to follow that, you can give disclosure and follow another version of it, or you can make some changes in that. That is called fair presentation framework. any presentation framework which tells you, no, this is exactly how you have to report. Example, CARO report is an example. That you cannot, let's say a company is not a needy company. CARO clause 12 is needy company. You cannot say, oh, this company CARO clause 12 is not applicable, so let me insert something else in place of CARO clause 12. You cannot do that because it is very fixed. It is compliance framework. You have to do justice to the compliance that it is coming up with. Okay. Let's go to the next one. Sir, forming an opinion. The auditor can form an unmodified opinion or a modified opinion. Unmodified opinion, you know very well, also called as clean report, also called as unqualified report. Okay. Here there is absolutely no qualification. Auditor says that we have obtained sufficient appropriate audit evidence, and we can say that there is no material misstatement in the financial statements. Okay, that is what the auditor says. Everything is as per AFRF. Qualified opinion can be two. First is when you have obtained SAE, and the second is you have not obtained SAE. If you have obtained SAE, and if you feel material misstatement is there, then it is you are giving a modified opinion. You know very well. If you have obtained SAE, material misstatement is there. If it is not pervasive, qualified opinion. If it is pervasive, then adverse opinion. Both get covered under modified opinion. Similarly, if you have not received SAE, in that case, that big blue circle will be formed. It means there is a possibility of material misstatement. If that is not pervasive, qualified. If it is pervasive, then disclaimer of opinion. Again, here also, qualified or disclaimer are again examples of what? Modified opinion. Are you there? In this case, we will modify the opinion as per 705. This is what we saw. Okay. Let's go further in this category. Let's do more. Sir, what does the audit report look like? Very simple. Title will be independent auditor's report. In addressee, you normally write to the members of the company, or in some unique cases, you may write the TCWG also. Normally, many times it can happen that there is a private company. The members themselves are the TCWG. In that case, you can also address it to the TCWG. Okay. Next area we saw is auditor's opinion. Auditor's opinion, in that case, will mention the following. Identify the entity, a mention that the financial statements have been audited, title of each statement, P&L, balance sheet, cash flow statements, explanatory notes, and statement of changes in equity. You will mention, refer to the notes where significant accounting policies have been summarized. And finally, the date of and the period covered by each of the financial statements you will mention here. Okay. That is what get covered in auditor's opinion. Let's go to basis for opinion. In that, what will you cover? We'll mention that all the audit is done with keeping in mind standards on auditing. Auditor's report. We will mention there the auditor's responsibilities under the essays. We'll also mention that we complied with the ethical requirements and that the evidence that we obtained, whether it was sufficient and appropriate or not. Simple to understand this. If you go to going concern matter will only come in case where the company may not be a going concern, then the auditor has to put this as a separate heading. Okay, so this is an optional part. Let's go to the next area, that is your key audit matters area. This will separately cover when we do SA 701. Let's go to the next one. We now do the responsibility of the management, responsibility of the auditor. Let's keep it simple. Don't overload this with too much information. You can just read through it. You can see it is too lengthy. Just read through it. What is the management responsibility? Three things. We'll call it as FIC, that is financial statements, whether accounting policies are properly disclosed, internal controls, whether they are there as necessary, and whether assessment of going concern has been made by the management or not. What is the responsibility of the auditor? Responsibility is FIC RUS, that is financial statements, accounting policies disclose whether they are appropriate, internal controls that is set up by the management whether they are appropriate, going concern assessment of the management whether it is appropriate. Thus is what RMM line goes up. To deal with line goes up, you have to bring the line down. That is called respond to risk. This is nothing but SA 315. This is nothing but SA 330. And finally, the auditor's main job is to gather sufficient and appropriate audit evidence. Are you there with me, yes or no? Simple area. Okay. Let's go to the next part. Please here. Sir, in this, what is the location of the auditor's report? Where does the auditor mention his detailed responsibilities in the auditor's report? Sir, it can be mentioned in the body of the auditor's report. It can be mentioned as an appendix, basically documents attached behind the audit report, or you can give a description of the website and you can mention it on the website itself. This is the best method according to me, saves the page, and it's a very theoretical matter which hardly anybody reads. So why do unnecessarily print? Okay. So we'll put it on the website. Are you there with me, yes or no? Next area, this was a very nice point. Other reporting responsibilities, sir. In the auditor's report, there are two areas. Reporting as per standards, reporting as per other legal and regulatory requirements. Sir, in this case, if there is a matter which is conflicting, should come in standard also, should come in other reporting responsibilities also, then what do we do? That matter, you mention it as a separate heading and show differently for standards what is the issue and for other reporting responsibilities what is the issue. Example, inventory is having a problem and it is affecting CARO also. It is affecting 501 also, that is standard for inventory, and is affecting CARO also. So what do you mention? You mention inventory in the report as per standards, that category only, the first area, but there you mentioned with two headings, as per standards, as per CARO, so that the shareholders can easily understand the matter, but it is given at one place in a neat manner. Okay, that completes this point. Next area, very simple, easiest thing, signature of the auditor, auditor's address, and the date of the auditor's report. In this case, I had shown you Reliance Industries Limited audit report, and I had shown you that joint audit was done by DSR and Associates, a firm in Mumbai, and of course by SRBC, which is basically EY India. And they did the joint audit. I showed you the partners' details and everything in that. Okay, we completed this part here. That is your SA 700 details. We move to SA 705. Will do. Chalo. 705 is what? Modified opinion. Circumstances. First, when will you give modified opinion? Start. When you reach the RA level, material misstatement is there. In that, or when you obtained SAE, material misstatement is there, then you give a modified opinion. It can be not pervasive or pervasive. In the end, you are giving a modified opinion only. When you don't reach the RA level, in that case, you will try to do alternate audit procedures. If that also fails, then in our example, that big blue circle will get formed. In that case, we'll ask ourselves, is there a possibility of material misstatement? If it is not pervasive or pervasive, doesn't matter. In the end, you are giving a modified opinion. Okay. Now, types of modified opinion: 3, qualified, adverse, disclaimer. Qualified, as I told you, can come in two situations. Tell me, when you have obtained SAE, material misstatement is there, but not pervasive. Second, when you have not obtained SAE and alternate audit procedures have also failed, then there's a possibility of material misstatement and it is not pervasive. In that case, you give a qualified opinion. Tell me, adverse will come in which case? Please tell me. You have obtained SAE, material misstatement is there, and it is pervasive. You give adverse report, also called as negative report. Next, last one. You have not obtained SAE, and in that case, alternate audit procedures have also failed, and there's a big blue circle. It means there is a possibility of material misstatement, and it is pervasive. In that case, you give a disclaimer of opinion, also called as no opinion report. Are you there with me? Yes or no? Excellent. Next, sir, pervasive. Sir, when do we say it is pervasive? We have a code called DINS. Do it very well. See this? When disclosures which are fundamental to the user's understanding have not been given. Sir, it is not confined to any specific element, account, item of the financial statement. And last, even if it is so confined, it represents a very big area of the financial statement, substantial proportion of the financial statement. That is the S DINS. Okay. Next, let's go to the next area. That is in relation to which opinion will you give? It depends on which factors, depends on two things only. Sir, whether it is materially misstated and whether it is pervasive. And of course, we know this table very, very well. We have done it zillions of times. Right from the base diagrams, we have been doing this only. Correct? No. Next is, sir, how do you amend the basis for opinion? If you're giving a modified opinion, your name can change to basis for qualified opinion, basis for adverse opinion, basis for disclaimer of opinion. Within this section, we have to include a description of the matter. Whenever you are saying something negative or bad or some accounting treatment is not proper, you have to give a description also in the basis for opinion. Okay. Let's go further. We are now doing very nice area, EOMOM paragraph. Okay. Super nice area. Let's do this part. First of all, what is EOM paragraph? I think we have done a chart in the class. I'll just help you out with that. Yes, here we have it. First of all, there should be no material misstatement in the account. So accounting, no problem is there. But we feel it is important for us to notify this matter to the shareholders or highlight this matter to the shareholders because it is fundamental to the user's understanding. And finally, it is in relation to the financial statements. When these three conditions get satisfied, accounting treatment is appropriate, it is fundamental to the user's understanding, and it is related to FS, we can give an emphasis of matter paragraph. If we are giving a paragraph which is nothing to do with the financial statements, it has everything to do with the auditor's responsibilities, auditor's report, or audit work. In that case, the auditor will give a other matter paragraph. Are you there with me, yes or no? Okay. Let's go to the answers one by one. Let's deal with it one by one. Let's start. Please here. This is our dear essay 706. Let's start. Let's see. Management accounting disclosures, no mistake they have made. Auditor thinks the fundamental users understanding. And if it is FS related, the auditor will mention EUM paragraph, mention the EUM paragraph, refer to the notes to account where the disclosure is given, and the auditor will help the shareholders to relax because the auditor has asked them, because the auditor has referred some notes to account in the EUM paragraph, shareholders should not get worried. So auditor will add a line there at the end. See, even though we are asking you to go and read a notes to account, please ensure that, please be rest assured that our opinion is not modified. Our opinion is not modified. Simple. That is your EOM paragraph. Okay. Let's go to the other areas. Please see here. That is the definition. EOM paragraph will only come if regarding that same matter 705 is not there. And EOM paragraph will only come if regarding that matter 701 is not there. So if 705, 701 are not coming regarding a certain matter, only then EOM paragraph can come. OM paragraph can only come if that matter is, sorry, OM paragraph is here. 1 minute, please wait. OM paragraph can only come if that matter, it is here, if it is not prohibited by law or regulation. And second, OM paragraph will only come if that matter is not a key audit matter. Matter is not a key audit matter. Okay. I just skipped to the OM paragraph area. Okay. Let's go back to EOM paragraph. Let's see here. Next, more areas. Let's start. 1 second. Is here. Let's start first. Separate section of EOM paragraph, I already told you, we'll include a separate section with the appropriate heading as emphasis of matter. Clear reference of the notes to accounts where the matter is fully described can be given. And finally, we have to clearly mention that our opinion is not modified. This is how you present the EOM paragraph. There is a way of presentation. You can do these circumstances later. These are just the examples where EOM paragraph can be given. Just remember the basic fundamentals while giving the examples. What are the basic fundamentals? Simple. Accounting is done properly by the company, but auditor feels it is fundamental to the user's understanding, and it is in relation to the financial statements. Okay. Let's go to the next one, please here. Let's go to key audit matter. Very nice area. What are key audit matters, sir? Any matter that the auditor has discussed with the management or may not have discussed with the management, but auditor thinks that this matter I need to communicate with the TCWG. Throughout the year, the auditor will do that. Out of those matters, whichever are the most significant matters, those should be collected at one place and given. Those are called as the significant, those are called as the key audit matters, And that area where we mention all these things are called key audit matter paragraph. Okay, let's start. The purpose is to basically enhance the communicative value of the auditor's report for greater transparency about the audit that was performed. Next, come to this part. Sir, how do we determine key audit matters? We can determine the key audit matters in this manner. We did a code called REST. Sir, if it is a higher risk of material misstatement area, we should communicate with the TCWG. And out of that matter, it may be one of the key audit matters. Best example can be fraud. Second, sir, if it involves high estimation uncertainty, company has taken an estimation, a judgment, which can genuinely go very, very wrong. Those matters are the matters that the auditor will mention in the key audit matter paragraph. And third, any kind of significant event or transaction that the auditor feels necessary, he can mention in the key audit matter paragraph. Easy, simple. So our code was REST. Okay. Let's go to the next area. This was a very nice one. So this was, sir, if any matter is mentioned in the key audit matter paragraph, it does not act as a substitute for Modi ji was a code. You know, the Modi ji, what was the area? Sir, modified opinion has to be given, and modified opinion will be mentioned as per 705. Key audit matter paragraph will not affect the modified opinion. So, giving the key audit matter paragraph does not have any effect, does not act as a substitute for modified opinion. Next, key audit matter paragraph, second point, does not act as a disclosure, by itself. The management has to give their own disclosure in the notes to accounts. Auditor will separately can mention in the key audit matter paragraph. Just because the auditor has given key audit matter paragraph, it cannot substitute the disclosures. Next one. Sir, individual matters like CARO reporting is an individual matter. Sir, CARO reporting cannot get replaced by key audit matter paragraph. Key audit matter paragraph cannot act as a substitute for individual matter reporting. Okay. And finally, going concern matters has to be mentioned in the going concern paragraph only and not in the key audit matter paragraph. So key audit matter paragraph cannot act as a substitute for going concern paragraph matters. Are you there with me, yes or no? Simple. We go to the last standard in this chapter. This is called as SA 710. Name is very nice. Comparative information, corresponding figures, comparative financial statements. We will do it the way we did in class. In the class, I first explained to you corresponding figures. Then we went to comparative financial statements. Then finally we did comparative information. We'll do it in the exact same order. Okay. Let's go to corresponding figures first. Start. The corresponding figure means what? So along with the current year's figure, previous figure should also be given. That previous year's figure is basically called as corresponding figures. Auditor just has to see the corresponding figures have been given. Remember, as a normal rule, auditor does not check the corresponding figures. He only checks the current period figures. That is the general rule. However, there are 3 exceptions where the auditor has to also check the corresponding figures. And for that, my dear students, if you remember, we had done this chart in the class. What was this? Sir, in the prior period, if modified opinion is given, in the current year, the auditor will tell the management to resolve the matter at least in the current year. If the matter remains unresolved, then its effect in the current year, we'll see whether it is material or other case means not material. With material, we'll mention the prior period figures along with the current period figures with the description of the matter. If it is other case, then only the prior period figures along with the current period figures we'll mention. Exception number 2. If last year unmodified opinion was given, but we realized this year that modified opinion was actually required, so we go to the management and openly tell them, see, last year maybe we should have given a modified opinion, but we gave given an unmodified opinion. Please at least correct that error in this year. Companies should deal with a misstatement. They should ideally do if they are a good-hearted company. But if they don't do it, then in the current period auditor's report, the auditor will express a qualified opinion or an adverse opinion. If last year the audit was not done at all, then auditor can mention this fact and mention his trouble to the shareholders in the other matter paragraph. So auditor shall mention in the other matter paragraph that prior period financial statements are not audited, but that does not relieve the auditor from his responsibilities. Auditor also has to do the duties as per SA 510, which we see in chapter number 4. Correct. Auditor should check whether opening balances contain any kind of material misstatement or not. He has to check it. Easy. We have done this regarding corresponding figures. Let's go to comparative financial statements. Come to this area. So comparative financial statement means auditor has been given more than 1 year's financial statements. He has to check. So in that case, if that is the situation, it can happen in unique cases, which I had explained. In this case, what do we see? Sir, in this case, the auditor has to refer each period. Remember, in corresponding figures, we normally refer to the current period only. The corresponding year's figures, we only check in those 3 exceptional cases. In this case, in corresponding comparative financial statements, we refer to each period. Okay, sir. But if we are doing the audit of this year, but previous year, if we are doing the audit of several periods data in this year, but previously some other person had done the audit, then their opinion and our opinion may be different. True, because we'll have different materiality benchmarks. If that is the case, we have to mention those difference of opinion in the report that we give. So that is what they have said here. If my opinion differs from the opinion the company statutory auditor had previously expressed, the auditor shall disclose the substantive reasons for a different opinion in the other matter paragraph as per SA 706. Okay, we go to the last part of chapter number 8, part 2, and this is in relation to comparative information. Simplest area, easy to score. Wrap it up, please tell me. As I told you, this covers comparative information, corresponding figures, comparative financial statements. In this case, I told you corresponding figures, we focus on the current period figures only, except in those 3 exceptions. And in comparative financial statements, we focus on each period's financial statements. This is what we do. Okay. Next, sir, what are the audit procedures regarding comparative information? Very simple. You have to simply check whether the comparative information agrees with the amount and other disclosures presented in the prior period, and whether accounting policies reflected in the comparative information are consistent with those of the current period. If changes have been made, whether changes are disclosed properly or not. I gave you a simple trick in the class also. I told you, anytime you write about accounting policies, always write this line income. Accounting policies, auditor will check whether it is consistent or not. And if there is any changes have been disclosed or not. You have to always write that area. Simple completion. This completes, my dear students, our chapter number 8, part 2. Entire chapter number 8, we have completed now. Okay. Okay, we are doing chapter number 9 revision. This is audit of different entities. Very, very simple chapter to score. Language is not heavy in this chapter. But yes, there is one problem. This chapter is lengthy. So you have to ensure that this chapter is broken down into different parts. Let's do it in a very smooth flow, in a simple manner. Let's start. We are first going for government audit. Government audit, we have 4 charts. You master those 4 charts and simply read the textbook for government audit part. You will be sorted for government audit. Just do these 4 charts very well. Chart number 1 is here. First question is, Kartik Sir, what are the duties and the powers of Comptroller and Auditor General of India? The first duty is to compile and submit the accounts of union and states in relation to their treasuries, their offices, or their departments. Second duty is general provisions which are provided where they have said to see whether legally disbursed expenditure conforms to the authority which governs it. So proper authority has given the permission for spending the money or not. Next is contingency fund and public accounts are being used properly for the right purpose. Contingency means emergency has been used properly or not. Example, I'll give you an example that Prime Minister's National Relief Fund is there in India. When any natural calamity happens for the natural calamity from PMNRF, Prime Minister's National Relief Fund, we give the money for that purpose. Okay. Last is trading, manufacturing, P&L balance sheet. You take the example, best example you should take is of Indian Railways. So you understand Indian Railways, that trading, manufacturing, P&L account, what is there, that whether it is maintained properly or not. They have made it properly or not. That is what the CAG will check. Simple. Can you go ahead now? Next is receipts and expenditure. Mainly it is talking about the grants given in the first part. So they have said from the Consolidated Fund of India, CFI, if any grant or loan is given to any body or authority, we can call it substantially financed and it is material for checking only if the grant amount is minimum 25 lakhs and it is 75% of the total expenditure of the body or authority. So let's take an example. If suppose the government has given a grant of, let's say, 32 lakhs to the body or authority, and the total expenditure of the body or authority is 40 lakhs. So 40 lakhs into 75% will give you 30 lakhs. The amount given was 32 lakhs. So first question, is the amount minimum 25 lakhs? The answer is yes. And is it minimum 75% of the total expenditure of the body or authority? The answer is yes. Then such body or authority is called as substantially financed. Substantially financed. Okay. Next is you check the receipts. Receipts means, sir, whatever taxpayers' money is being received. So any receipt into the Consolidated Fund of India, you will first of all check whether money has come in as per the rules and procedures, whether money is collected properly and allocated properly. Allocated means in the budget allocated to different departments. Example, defense for road transportation, for railways, where the proper division is done, allocation is done. And finally, after it is allocated, how it is being used. That is basically examination of the accounts. Examination of the accounts. Next is grants and loans. Let's go for this. Whether grants and loans have been used for the specific purpose for which they have been given. Second, we will scrutinize the procedure whether the sanctioning authority is satisfied or not. It satisfies his criteria. And finally, right of access only after giving a reasonable prior notice. So only after a reasonable prior notice, the sanctioning authority, after reasonable prior notice, the CAG can ensure that the checking is done. Simple. You have to give a reasonable prior notice. Next, this you must have seen in our dear law subject, that is audit and auditor chapter. You have 139 subsection number 5, that is appointment of subsequent auditor in a government company, and 139 subsection number 7, that is appointment of first auditor in government company. Both these appointments are done by the Comptroller and Auditor General of India. Plus, they will direct such auditor and submit the copy, and the auditor will submit the copy of the report to the Comptroller and Auditor General of India. Okay. Next point is audit of stores and inventory. Example, simplest example is, let's say there are government schools and school bags, stationery are distributed. So school bag stationery come under inventory category. So the CNDG will check, ensure that it is kept in any office or department of any union or state, and whether the verification is done properly. Okay. What are the powers of CNDG regarding the government accounts? First is they can send the accounts of one department or one branch of the government to another office of the CNDG. Next is they can inspect the office of accounts, because accounts whether they're kept properly or not. Third, they can go there and question and observe. We have done a code in the class, and code was SIQO, SIQO, SIQO. Okay, this was there. Let's go to the next one. This completes your first area. Second area, let's see this. That is in relation to the audit of expenditure. Let's start with this. In that first, you have audit against rules and orders. In that, what are the categories which are there? 4 are there. Power to incur and sanction. So I'll just highlight it for you. Power to incur and sanction, whether the right authority has incurred the expenditure and given the permission. Second, mode of claim presentation if it goes to the court. Third, contingency fund, whether emergency fund was used properly. And fourth is condition of pay of government employees. whether it is done as per the rules or not. Example, pension payment done as per the rules or not. Then examination to see that we have a code called Chorkar. Very simple. First is whether competent authority has given the approval or not. Whether is higher authority has also the same point of view or not. If this level authority gives a decision, but a higher level authority has a contradictory opinion, then this authority is doing the wrong action. So you understand here, all of them should be in line with the same action. So higher authority, order, and rules we'll check. Next, we'll check whether everything is as per the constitution or any law. And finally, requirements of C&AG in respect with accounts and audit are being complied with or not. That is what we check in this part. Easy. Next is audit of sanctions. Very simple. Sanction means any kind of permission for expenditure. Sanction. Sanction will normally be given, I hope you know, by the bureaucrat, that is the IAS officer. So you understand here, any general or special order of competent authority, whether it is received or not, whether it is received properly, and whether that authority is competent or not, in the right position or not. Next one. Audit against provision of funds. The whatever provision you make, tell me what should be the right thing to do. Your provision should be higher or your expenditure should be higher. Correct. Provision should be higher. If provision is higher, it means you have kept proper amount aside so that the expenditure can be done. But if you keep less provision and then if the expenditure is exceeding that, then basically that disturbs your entire budget. Basically, so you understand here, the audit against provision of funds, we have to ensure that it does not exceed the appropriation made. Next, very important. I love this part. This is called propriety audit. What are the principles of propriety audit? Mark it as star. Message me if it comes in the examination. That's sir. One area you marked it as star. It came in the examination. My intuition works a lot. So do it. Okay, see. First, the auditor should ensure that more than the occasion demands, the government officers should not spend the money. Second, they should use the money as if it is their own money. How you're careful about your own money? They should treat the shareholders, the taxpayers' money as their own money. They should not use it for their own advantage. So because it is not for own advantage, I put a cross on the screen. It should not be for a particular person or particular section of the community. It should not be that. Just check in your notes whether I've given the code as Siaping or must have given the code called Pikachu. Both are okay. So two exceptions are there. That a particular person or particular section of the community, it should not favor. It can either, the code can either be Siaping or it can be Pikachu. Both are the same things. Okay. What is this Siaping and Pikachu? So I'll show you that also. But there is no doubt in your mind. Absolutely no doubt. So please see here. First is, look at this part. First is policy, or this for Pikachu, this is 1, this is 2, this is 3, and this is 4. And for Siaping, it is 2143. For Pikachu, it is 2314. Okay, let's see the point. I'm going with the Pikachu code because it is a new one. So please see here. Whether policy or custom is if it is required to be followed, then it can be for a particular person or section of the community. It can be. So we are looking at the exceptions here. Second, if the amount is insignificant, then if it is for favoring any person, it's okay, or community, it's okay. If court of law has ordered, then it is okay. And it is part of any allowances, such as traveling allowances, which are required to be made as per the regulations and the rules, then such an amount is okay. So this is your Pikachu or Siaping, whichever you feel like using, you can use. Okay. Let's go further. Please here, do it with me. Let's go to the next area. Performance audit focuses on 3 nice E's. First is work should be done with quality. That is called effectiveness. Work should be done within cost. That is called economy. Work should be done within time. That is called efficiency. That is what they have said. Plus, we should examine financial and operational performance. We should check this area. Easy, simple. I made a mistake. I forgot the A and W of proprietary audit. That is, the authority should ensure that there is no wasteful expenditure. Okay, that is the part. Easy to understand this area. Okay. This completes chart number 2 of government audit. Let's move on to chart number 3. Let's do this. This is your audit of receipts. Let's start. First, receipt means the revenue coming in. First of all, is there any law for revenue to come in? Is there any tax law so that revenue can come in? That is called regulation and procedures are there or not. Second, if regulation procedures are there, are they actually applied or not? That is called actually carried out. If they are actually carried out, then is the value of the assessee correctly assessed? So value that the assessee has to pay in tax, is it correctly assessed? If there is any mistake, are we able to conduct detections and investigations? And if we conduct investigations, what are the loopholes in the government machinery? Because obviously the money could not come. That is called as internal procedures, whether they are adequate or not, we'll check. That is what we are doing. Okay. So every point is connected to the one before that. Okay. Let's go to the next one. audit of stores and inventory, whether properly it is sanctioned regarding inventory. Contract should be there, and we should ensure quality and quantity properly there. Okay. Next, it should be economical, that is, it should be reasonable, and you understand it will become uneconomical if the goods are defective or of inferior quality, because then we have to go for reproduction or we have to go for repurchase from the supplier. That will increase our cost. Okay. Last is audit of commercial accounts. 3 areas I have given: departmental enterprises, any department of the government, you can take railway department. Second, any government company, ONGC, Steel Authority of India Limited are the examples. Last is any statutory body and corporation. So ICI, RBI come under this category. Are you there? So C&AG will cover all these factors. This is chart number 3. Chart number 4 is purely regarding C&AG audit. Let's start with this area. Please here. Come to this part. In this is there in your textbook. This is 143 subsection number 5, which clearly mentions that appointment of auditor by C&AG as per 139.5 or 139.7. That is, I told you, auditor appointed by C&AG and who is the first auditor, that is 139 subsection number 7, and subsequent auditor in the case of government company, that is 139 subsection number 5. Okay. C&AG will give the directions regarding the way the audit should be done. The directions will be issued, actions will be taken thereon, and it will have an impact on accounts. Basically, the corrections will be made. C&DG can do an extra audit also, that is called as supplementary audit can be done, and he has to comment upon or supplement such audit report. And finally, there's another small audit that C&DG can conduct regarding any area, that is called a test audit. This is covered in 143 subsection number 7. These are the 4 big charts in relation to government audit, which help you to cover this part pretty quickly. Okay. Let's go on to the next one. Let's start with the next area. Very nice area called audit of local bodies. Local bodies has 4 questions. 4 questions. Let's do. Question number 1 for us is question number 1. Let's start. Question number 1 is, sir, what are the various categories of grants? Very simple. General purpose grant, specific purpose grant, statutory and compensatory grant. That is question number 1. Question number 2. Question number 2 is in relation to, sir, financial administration of local body. Very simple. Covers 3 areas. Look here, see, we had done a hand action in the class. We did this. Budgetary procedure, expenditure control, accounting system should be there. Budgetary procedure, expenditure control, accounting system. Okay, so you have budgetary procedure, expenditure control, accounting system in this case. Okay, let's go on to the next one. We did the audit program in relation to local bodies. Look here, for bigger municipal corporations, they can afford to appoint external auditors. For smaller municipal corporation, every state government has a local fund audit wing. So local fund audit wing of the state government will get the audit done. Okay. What is the main purpose of the auditor? After the appointment of the auditor, he has to check whether laws, rules, regulations have been complied with respect to the expenditure of the government, whether scheme program projects are done after proper sanction, whether proper provision is made and it is authorized by the competent authority. He has to mainly check that any scheme, project, program. I had given the example in the class in regarding this of the midday meal scheme, and I told about the midday meal scheme of the government of India. So in that case, I told you that expected results should be achieved and it should be within the budget. That is called financial control. This is what we had seen. Okay. Last but not the least, auditor should report on something called as flavor. This flavor code helps us in one of the points in question number 3 and entire answer, which is question number 4. What is the flavor code? So flavor code you see here. I'll just show you here. First is fairness of the contents and presentation of financial statements. So financial statements F. Then strength and weakness of the financial control F. So it is F square. You can see here F square. Then after that, you have legal and administrative requirements. Have we adhered to that? That is basically L and A. So you will have L and A. Whether value is being fully received or not, that is basically V. E is errors and fraud should be detected. That is E. And resources misuse is happening or not. That is R. Flavor. And the next answer, that is objective of local body audit, also has the same code only. You can see here financial statements, financial controls, legal administrative requirements, values being fully received, and error or fraud detection and prevention, and resources misuse. Similar points. You can go through it. Simple. That completes your question number 4 of local bodies. Let's move on to the next one. That is NGO. Let's start. NGO, we have planning of the NGO audit, program or what audit program you will make, and receipt of income. We have 3 parts in this. Let's do it one by one. Planning of NGO audit, we had done the village road story. You must have written the village road story. Let's do it one by one area. Okay, NGO. Let's start. First, you go to a village and you see 2 walls there. There you see that NGO being there, NGO gate you can see, and the two walls. First wall has mission and vision. Second wall has all the laws written that are applicable to the NGO. We have FCRA, Foreign Contribution Regulation Act, Income Tax Act, Societies Registration Act, or any rules framed there under. Okay. In our story, what happens is you read this, then you knock at the gate, and at the gate when you knock, um, there's a watchman who opens the gate, and you ask that person that I want to check the NGO. He says no, because NGO is a private organization. So he says it tells you about the legal form of the NGO. Then he tells you, sorry, I cannot ask you to go inside because, and he quotes the entire MOA, AOA rules and regulations. This is what we had done. After that, you build a bond with him because you are my student. He was also a student, so you build a bond by singing the songs. So he gives you the permission to go and meet the person at the reception, and you go to the reception and ask for something called as, see this, Om Pro Fubu, the top right corner, Om Pro Fubu. What was this? Organization charts, manuals, project and program guidelines, funding agencies, budgetary policies. This is Om Pro Fubu. When you check these areas, what happens is after that the lady to whom you tell, she does 1 minute and she gets the report. So there is 1 minute means minutes of meeting, and she gets the report. So that is basically reports and other communications. After that, you have the next area that is in relation to, after she gets the reports, she doubts whether you know all these things or not. So you tell her, don't worry, I am a CA Inter student. I know the accounting system, procedures, internal control, internal checks. And after that, you do your checking work. While checking work, you see that there are a lot of things that have crossed the materiality benchmark and it is risky. So in that case, you go and inform her that these problems are there. Because you inform her about the problem, she calls you an expert, because of which you get wings. Wings in Hindi is called par. That is, we call it as previous audit report. This is basically what we had done. Easy. Next is, what is the audit program of NGOs? Very simple. We had done this pairing. 6 pairs are there. So I hope you remember. It was like this. Please here. Corpus fund, earmark fund. You will check. You will check the reserve balance, project or agency balance. You will check the loans. You will check the fixed assets. You will check the in investment inventories, cash, bank, establishment expenses, program and project expenses. These are the things you are checking basically. Last area was a very simple one. That is, sir, what is the receipt of income of an NGO? So we did this area. If you remember, in this we saw receipt of income. First is the NGO can get contribution and grants. It can conduct fundraising programs and get money from very rich people who give donations. So that is receipts from fundraising programs. Next, membership fees. People who want to become member of NGO, they can pay membership fees on a regular basis. It can be annual or lifetime membership fees. Next is, NGO can release its own magazines, circulars, periodicals, some booklet they can release. With that, they will earn some money, that is subscription. Or they can invest their money in FD or shares, and they can earn. If they're invested in FD, interest. If they have invested in shares, then they will earn dividends. This is what we had done in the class. Okay. The 3 questions regarding NGO, which are very, very important. Other things in the NGO are also there, but I told you just to read through. I think you have written there, read only. Okay. Let's go further. We had done the next area. Next area was in relation to, let's start audit of partnership firm and LLP. This is good fun. Let's start. This full memorizing game. Okay, let's start. Now in this, what is the audit of partnership firm? What all will you check? Very simple. Look here, see. Before doing the audit of partnership firm, what will you check? Question number 1. Advantage of doing the audit of a partnership firm and what are the special considerations you will keep in mind? This is what the area covers. First, before doing the audit, you will keep in mind the name and style. You will look at the partnership agreement, duration, account maintenance, accounting period, capital brought in as partners, borrowing from banks, interest on capital, interest on borrowing, duties of partners, salaries of partners. I told you to include drawings also. Then which partners operates the bank account, and any restriction or limitations that have been imposed on that particular partner for running the partnership firm. This is what we see. Okay. If they ask you in the examination, we go to an LLP answer. Now, if you're my student, you will understand the way we did it was we took one diagram but merged 2 answers, correct? We do what are the duties of an auditor regarding LLP. So there we just did small modification to the same diagram. We saw engagement letter, we'll check the instructions. Minutes book, we'll check the resolutions. Now we go to diagram. In diagram, what do we do? The nature of the LLP, agreement, duration, accounts settlement, accounts profit distribution as per PSR. Very good that you are saying the answer. Very good thing, encouraging thing. Next, you have capital brought in by the partners, borrowing from banks, loan from partners, interest on capital, interest on borrowing, interest on loan, duties of partners, salaries of partners, drawings, and finally the records, whether they are reliable or not, whether information explanation was properly received or not, and have the partners put any kind of restriction on the auditor. That will come in this part here. Okay, we have done this part. Next, we have advantages of audit of partnership firm, advantages of audit of LLP. Similar code, Dr. DAC, Dr. REC. First, Dr. D is dispute resolution. R is that accounts are reliable, so the banks can give loans easily. D is it helps in the time of dissolution, admission of a partner, and better controls are there in place. If you go for advantage of audit of LLP, we'll say dispute resolution, we'll say it is more reliable, hence bank can give loan easily. This will combine and say reconstitution, error, fraud detection, and finally with this we'll say compliance. Compliance will come here. Are you there with me, yes or no? Next, special consideration in the audit of partnership firm. Let's do it. Very simple. Letter of appointment should be there in place. Partnership firm objects, we look at the business. Partnership firm documents, we look at the minutes book. We look at the books of accounts and financial statements. In that, we'll check the profit division is done properly as per PSR or not. Next, we'll look at the provision for tax matter, and we'll see whether all the partners are working in the mutual interest of each other. Are you there? This completes the audit of partnership firm. Let's head to audit of LLP. Let's see whether we are able to recollect the points properly. Let's start with this. Please here. Let's go for it. Please here. First, sir, in the audit of in the case of LLP, we have done this part here. I'll keep this here, but we'll do the revision one by one. Let's start. Sir, when is the audit? First of all, look, go to your notes. You'll go from there. Sir, how many minimum partners should be there in LLP? Two. How many designated partners should be there? Two. So only two partners are there, then both will be designated partners. First is that. Second, which LLP is a small LLP? Any LLP having contribution up to 25 lakhs and turnover up to 40 lakhs. That is called as a small LLP. When is the audit of LLP compulsory? Audit of LLP is compulsory if the turnover is up to, sorry, when is the audit of LLP not compulsory? We'll do that first. Turnover is up to 40 lakhs, or if the contribution is up to 25 lakhs, then auditing is not required. So in a way, what they're trying to say is, if turnover exceeds 40 lakhs and the contribution exceeds 25 lakhs, then audit becomes compulsory. Are you there with me, yes or no? Let's go to the next area. Then we did the area which we completed, that is the auditor's duty regarding LLP, which was there with the partnership firm area only. We have also done the advantages of audit of LLP, which is again there with the Dr. Rec code. Are you there with me, yes or no? Next, we did the next area, that is this area, appointment of the auditor. Sir, in the first financial year, the auditor can be appointed any time in the first financial year. But in the second or subsequent financial year, what they have said is, you have to appoint the auditor at least 30 days before the end of the year. If 31st March is the year end, 31st of March becomes 30 days before. You can appoint the auditor any time from the year beginning to 1st of March in our example. Okay. So can you appoint the auditor here? The answer is yes. Okay. Let's go to the next one. Then we did something called as, sir, what are the forms in relation to LLP? So in that we had seen this area, if you remember. The form 11 is there. That is annual return they have to file within 60 days after the year end. And form 8, that is statements of accounts and solvency, which should be filed 30 days after 6 months from the year end. This is what we completed. Easy. This is audit of partnership firm and LLP. Let's start with audit of trust. Audit of trust, we have in the chart 4 questions, and of course we have our legendary song of Tari Gin Gin. Okay, so that will go ahead. Let's start with this. Please here. First is we have something called a legal framework. Second, we have books of accounts. Third, working papers. And fourth, what evidence should working papers provide? Okay. Legal framework, let's start. I told you in the class you have to do it in FFT. FFT is Formation Foreign Tax. In formation, you will see if there is any Public Trust Act of the state. If not there, then you will go for the Indian Trust Act 1882. You don't want to go with these laws, then there's another option to go for Societies Registration Act 1860. You don't want that also, you want corporate status, go for it. You can go for Section 8 of the Companies Act 2013. That is what you will do. Simple. Next one. Foreign, if the trust is involved with foreign contribution, the money is coming from a foreign country, in that case you have to look into FCRA, Foreign Contribution Regulation Act 2010, and of course Income Tax Act. You can only get the exemption if you're registered under Income Tax Act 1961. That is what we did. Okay. What gets covered in the books of accounts of the trust? Let's start. First, we look at the original bills and the copies of bills. We look at that. Then, very simple, we check the journal, ledger, other book, cash book. We check these areas. Financial statement should be made with AS in mind and checked by the auditor, keeping SAs in mind. Very simple, too easy. Working papers, we had done a code called wind juice. Wind juice. Wind juice is what? Whether work done is properly documented in the working papers. Second, proper information explanation, whether it has been received or not, we'll document. D is decisions that you have taken regarding, let's say, materiality benchmark, number of people to do the audit, what work, who will check, all these things, what areas who will check, that will get covered. Judicial pronouncements that you are following, any court decision that you are complying with, and any certificates that we have received from the management regarding any matter, confirmation of any matter, that will get covered in this matter. Okay. What evidence should the working papers provide? Let's go with this. Working papers should provide that whether information is full and complete or not, reasonable tests, whether they are complete and accurate or not, cognizance of information. Basically, the auditor should be very well aware. That should be very clear looking at the working papers. And last is, only after doing everything properly, the working papers should be maintained in such a manner that auditor's opinion expressed makes sense. Only then the auditor should express his opinion. That is what we see here. Okay. After that, we sing our song. Let's start. Audit of trust, the main song, it is there till point number R. And we don't leave a single point aside. We do all the points. That's the rule. Let's start. First, 1, 2, 3, start. Accounts are maintained regularly, receipts and disbursements, cash balance and vouchers in the custody of the manager, books, deeds, accounts, vouchers, register of properties. Manager furnishes necessary info. O for object, O for outstanding, pro for provisions, irregular, illegal, improper expenditure, maximum number of trustees maintained, meeting minutes, interest in the investments, debtor or creditor, anonymous donations, irregularities in accounts, deputy or assistant, charity commissioner. Oh, ho, ho, ho. Oh, ho, ho, ho. Oh, ho, 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 ho. Hey, ishq tera tadpaave. Easy. Simple. Imagine on the exam day, if you wrap up this entire page with a song, what satisfaction you get. Let's go to audit of societies. Okay. So it is again one more song. So we'll do it in this flow only. Washing powder Nirma. Okay, so we have that tune. Washing powder Nirma, washing powder Nirma, दूध सी सफेदी Nirma से आई, रंगीन कपड़ा भी खिल खिल जाए, सबकी पसंद Nirma, washing powder Nirma, Nirma. So with this tune, we start legislation of society, object of society, whether society has obtained registration, whether it is registered under income tax provisions, control accounting policies, reimbursed expenses, inquiry by registrar, improper expenditure, wasteful expenditure, सबकी पसंद Nirma, washing powder Nirma, Nirma. I hope Nirma detergent gives me some royalty for this. Okay, we are now doing the audit of charitable institutions. Let's go for it. In this, let's do the points. First is, sir, when we are done in the class, we are done with a charitable institution in mind called child care. So in that we will see whether constitutional documents are there in place or not. We'll check the internal checks in the charitable institution, law under which it is set up, and whether the amount is deposited in the bank. That is what we check. Any donation that we receive from the donors, whether official receipt is given against that or not. So that is official receipts. Official receipts will come from the receipt book. Receipt book, if it is getting used, then we will have to check the counterfoil. If it is unused, then the receipt books have to be kept safely with adequate control. Basically, in a drawer with a lock, we should keep it. Okay. Next is, whenever a person gives us the amount, of course, we'll check the counterfoil and a list of donations will be prepared. List of donations at the end of the year, we'll check with the reports or any printed list of donations which are there to verify whether the donations are genuine or not. Whatever money we have received in the form of donation and whatever is mentioned in the list of donations should match. And that is what is called as internal control. We'll check the internal control regarding the money received in the form of donation. Which for income, you'll remember a code called girls. I told you here girls. This was a code. So in that we had grants received maybe from the government or local body. You'll have investment income, income tax refund, rental income, legacies, and special function. Suppose a person has given some money to conduct a singing competition, dance competition among children during Independence Day celebration. That comes under special function. Expenditure will be what? Very, very simple. We have a code here called cash grass, whether cash and bank balance is there so that we can do the expenditure. grants given. This, remember, charitable institution is giving the grant to some other charitable institution. Grants given. Then S is securities invested in, and S is special purpose. For the special function, the amount which you have received should be used for that special purpose. This is what we see. Okay. Let's go to the next area. Let's start. Then after that, we go to the next part, which is audit of educational institutions. I hope you remember this diagram. Very nice one, very simple one. Let's go for it one by one. Let's start. First is general area. Auditor will check the trust deed, regulations, legislations with which the education institution is attached with. So we'll check whether these are complied with or not. Second, for the day-to-day decisions, whether the minutes of meetings have been as properly prepared and what decisions they have taken, the auditor will check. Next is regarding fees received from students, we'll check the following points. First point is whether fee register is properly maintained. The various columns like name of the student, fees charged are properly there in place. We'll then check with A, we remember admission fees with admission slips. We also check the counter file, that is the counter file is the copy of the receipt with the school, which the auditor will check. Next is B is brilliant student. For such students, we'll have scholarships. So auditor will check for in scholarship how much benefit has been given. But you will not write scholarship in the examination. I told you, you will write in the examination free studentship and concession. Free studentship and concession. With C, you have confirmed fine for late payment, and with D, you have dues for hostel. This covers your fees from students. Next is other receipts. You have something called as GREL. GREL, very simple code. Grants received by the school or hospital or any kind of education institution like college, rental income, and your endowment and legacies. These are the other receipts. For expenditure, we connected it with other receipts, but of course, you will write it separately. We connected in this manner that imagine that a government has given grant when the school is using it for establishment expenditure, capital expenditure. Imagine rental income has come in and we are using it for paying salary of staff and transferring to the provident fund money of staff. And any endowment and legacies, if it is given, we are using it for the specific purpose. So, of course, you don't have to write uh, the above area, is separate, but we are connecting the above area to the lower one so that you are able to remember. Okay, let's go to the next one. Assets and liabilities. Let's start with this area. First, in liabilities, you have caution money deposit. This was caution money deposit basically means I told you in boys' hostel, some money will be taken beforehand. If any breaking is done, something breaks, then money will be deducted from the caution money deposit. And at the year end, it will be refunded also. So caution money will be received, caution money deposit will be received at the beginning of the year. And after deducting any of the damages done by the boys, normally, caution money deposit will be refunded at the end of the year. Fees due in arrears, any debtors of the school, that is basically the students' fees, is not received yet. That will come in the asset side. Investments made by the school. Inventories, in that we saw PFCES, provision, foodstuff, clothing, or here we'll say provision, furniture, clothing, equipment, stationery. So you have provision, furniture, clothing, equipment, stationery, and receipts and issue of PFCE. You remember this as provision, foodstuff, clothing, equipment. Easy. Finally, compliance will have two things, that is the tax refund compliance, and for accounts, they have to prepare a annual statement. Okay, this completes your this part here. Okay, let's go further. Let's go to the next area. Let's go to the next part. This completes in relation to audit of hospitals. Let's do this area, audit of hospitals. Let's start one by one. This was a nice story. Let's go into the story mode first. First, four boys meet and they think of starting a hospital because they are doctors and CAs. I'll give you the example. The person who is owning the tea stall, he turns around and gives the key. So giving the key is called authorization and sanction. We connected that in the story. The boys here, what they do, so they call all their relatives and friends and take donations from them. That is our donations. That is donations and legacies is how we'll connect. After that, one of the boys puts the money in that donation money received and goes to purchase the basic needs of the hospital. So he goes to purchase what? He goes to purchase inventories. He goes to purchase inventory. When he goes to purchase inventory, another person comes into the hospital. I told you in the class to imagine a person with a white shirt, white pant like that, and with holding his heart, he's not able to breathe, and he's coming into the hospital, and he says that he is having some heart trouble. So the one of the persons in your class, I told him he's a doctor, and he's there, and this patient who is coming, he tells him go and lie in that one of the rooms. So there, this doctor then goes with a knife. Knife is what? It's your equipment. So knife becomes your depreciable equipment. So you understand here that is your depreciation. Easy to understand this area. Then after that, what happens is the person becomes all right, and after that, while leaving, he appreciates that The hospital did not even make him fill any form. So with that, you'll remember register of patients. Register of patients. Next day, this person who had come as a patient, that white pant, white shirt guy, he turned out to be a big politician. And this politician next day gives a speech. In the speech, he says, "See, I'm giving a government grant of so much amount for this hospital. As government grants and TDS will remember." And after that, you will have. He says that I'm also encouraging you all to also please go and give some money to the hospital in case of any help that you can do to the hospital. That is called cash collection. Simple. Now, what do the four boys do? What do? They do this. They form a management committee. With this, we'll remember management representation and certificates, which you can see is this point, certificate, this area. When they meet, they form the budget. They come up with the internal check. What work will happen? What is the internal check procedures? They come up with their two registers, that is subscription register, you can see here, and then you come up with something called as investment register here. And finally, because they had made investments, they will earn income from investment. So we had done this flow. If you remember, management representation and certificate, budget, internal check. Then they come up with subscription register for the money which is coming in, and for the money which is going out, they will have investment register. Because they have invested the money, they will earn income from investment. This is how we had learned this area. Comfortable till here? Okay, very simple. This is a hospital area. Simple. Let's go to the next one. Let's see the next area. Audit of clubs. Let's start first. Sir, membership fees in the form of member subscription. We'll check the entrance fees here. Both are the revenue for the club. Next, some members register whether it is maintained properly, keeping in mind the advance and the arrears received from or to be received from our members. See, in case of arrears, if any amount is irrecoverable, and see if any member is maintaining that monthly account. I'll pay later, I'll pay at the end of the month. If somebody is doing that, we have to trace the debits to ensure that the money has actually been received or not. Regarding furniture, sports material, other assets, we'll check two things, that is purchase and inventory. And regarding food, cigars, wines, and any other thing similar to this, we'll check the purchase and the price. Lastly, we'll check the financial powers of the secretary, and we'll see whether investments have been made and proper investment income has been received or not. That is what we'll check in this regard. Okay. There's audit of clubs. Let's go to a beautiful one. This is called audit of cinema halls. Let's start. Cinema halls, great story. And let's do it with me one by one. Simple story. Okay, let's start with me in a simple manner. Super easy. I think if this comes in the examination, our students are killing it. Okay, killing it. Now, this is basically first is you go to the cinema hall, or one of the students in your batch. I told that he goes with his family. I think it was Harshvardhan. No, I think it was Jawahar. Was it in your batch, Jawahar? Javagar. Yeah, I think it was him. Right? It was him. Yeah. So Javagar goes with his family towards the cinema. So there, in that case, I had told you that Javagar, when he goes there, the person at the ticket counter is the responsible official. He's the person who is responsible. He has the tickets in his custody. So with this, you remember 2 points. Inventory of tickets is kept in the custody of the responsible official, and tickets are serial numbered and bound into books. So serial numbered and bound into books. Jawaharlal was very curious regarding what were those red colored tickets. So it was the advance bookings. So then the tickets were given to him. He counts the tickets 1, 2, 3, 4. That is your number of tickets issued, and he gets the entry only based on the printed tickets. So entrance to cinema hall only based on the printed tickets. Scene 1 done. So in the exam, if they ask you internal control mechanism, in that case, you will write there scene 1. Okay. Scene 2 now. The person who is a responsible official that at the ticket counter, he will first look at the statement of tickets issued and ensure that that much cash has been collected. Whatever cash is collected, he'll make the entry in the cash book. So that is 6 and 7C. Statement of tickets issued, sold, and cash collected is agreed. And 7th one is also entries in the cash book. We'll check. Okay. And after that, what will happen is everything will keep in the drawer. Knock, knock. Who is there? The chief minister of the state. So in Karnataka, we had taken the example of Siddaram. Correct. No. So now, if he is the chief minister, in that case, he will ask for the entertainment tax collected. Simple. And then after that, then again we close the window. Again, somebody knocks at the window. This is the distributor. If the movie is a hit, then distributor will give you the bill, and you will make the payments. And if the movie is a flop, in that case, you will ask the distributor to give back the unadjusted advance balance. If the distributor runs away, it means the amount is irrecoverable. So we'll create a provision. That is how we did it. Simple. Scene 3. Jawaharlal and his family go and first purchase samosa, popcorn, and all these things. With that, we kept in mind the share in the restaurant income. Next point, they go inside and they sit to watch a movie. He does not recline back. He's sitting normally without reclining, and he sees first that Vico turmeric ad comes. So you think that this Vico turmeric, Vico company must have given the cinema hall owner advertisement income. After the Vico turmeric ad gets over, the cinema hall owner himself comes on the screen and says, "Please come send your family to see more and more cinemas. We suffered a lot of losses during COVID time, all these things." That is your advertisement expenses. So we have these points here. See here, Vico turmeric ad, charges collected for advertisement slides, and the cinema hall owner himself coming on the screen, expenditure incurred on advertisement. Are you there with me? Yes or no? Last but not the least, then Javagal he reclines back on his seat, falls down because seat is completely depreciated. So we had the point in this class called that depreciation on furniture and machinery. And last, because he fell down and the service from the cinema hall owner was not proper, he gets free passes. This is how we connected. Will entire area recap properly. This completes this part here. Okay, that completes audit of cinema halls. Okay, let's go to the next one. Let's not break the flow. Let's continue. We'll do audit of hire, purchase, and leasing companies. Let's start. Superb area. Okay, very nice area. Very scoring, super scoring. Okay, let's start first. Regarding hire purchase transactions, what should the auditor examine? First of all, look here. See, hire purchase agreement should be in writing and it should be signed. So writing and signed, we did this. Next, it should have the proper date. It should have the hire purchase price, the cash price, and the goods to which the transaction relates. Regarding the details, we saw number of installments, the amount of installment, and the date when the installment is required to be paid, the place where we have to pay, and the person to whom we have to pay. We saw this area. Finally, whether the payment is received regularly and as per the agreement. This is what we saw. Are you there with me? Yes or no? This completes hire purchase agreement. Next, the second question was, sir, what are the modalities of a finance lease transaction? Modalities. What are the modalities? Let's see one by one. The lessee wants to acquire the right to use the asset. He will select the equipment with the fitness and specification. He will approach the lessor directly or through the lease broking agency. If the lessor and lessee agree, then they will enter into a lease agreement where details of terms of contract will be entered. The lessor will, of course, pay the amount and place the order with the manufacturer. Manufacturer will deliver the equipment at the lessee's site. Lessee has to do REAR, pay the rental regularly. Equipment should be kept in good condition. After sale service from the manufacturer he can take, and the asset will either retrieve back to the lessor after the period is over, or the lessor will be interested in a renewal of the lease agreement. Are you there with me? Yes or no? Simple. That completes your question number 2. Question number 3 in lease was this amazing question called as, in relation to any lease transaction, what all should the auditor check? Remember, it has a +1. If they ask you lease agreement, you'll only write point number 2 in that answer. If they ask you about lease transaction, you'll write the entire answer. Okay. So let's go ahead in our flow. How does it flow? Let's see this. Okay. First, we are doing this from the perspective that you are the auditor of the lessor. So we'll first check the object clause of the lessor, whether leasing transactions can take place. Second, whether lessor is giving the asset on lease to the lessee after doing the credit analysis, background check of the lessee or not. Third, now we enter the agreement. This is your point number 2 in your notes. So in your notes, you will see point number 2, which covers in our chart. It is nothing but point number 3, 4, 5, and 6. But it's point number 2 in your notes. In this case, we cover 4 things. If they ask you, what will you audit in case, what will you check in case of lease agreement, not lease transaction, lease agreement, you will write point number 3, 4, 5, 6 in the examination on the screen. Okay, let's start. First is details of lessor, lessee, equipment location. What is written regarding the return policy? Regarding amount, we are concerned with DELA, date, deposit, late charges, advance. And does the lease agreement prohibit any kind of subletting? That is what we are looking at. Okay. Next, sir, the lessee, if he is interested, he will send the lease proposal form. The lessor, if he is also interested, then he must have given the approval. So we'll check the invoice, whether invoice is there in place or not. Next, if the lessor and lessee agree with each other, they'll accept the offer and hence an agreement will be there in place. Remember, the asset is still of the lessor, so lessor's auditor will be worried whether insurance policy is taken or not on the asset. And finally, whether the person from the lessee side who we are dealing with, the director from the lessee side who we are dealing with, whether that director is properly authorized by the lessee or not, authorized by the lessee or not. Simple. Last question, I told given a code for you in this. This is connected to AS 19 in a very big manner. That is your difference between finance lease and operating lease. Let's start. First is your common examples. Code pot is the code common examples. O is ownership. AT is accounting treatment. You will see it here, accounting treatment. P is purchase option. O is, you will see here, that is in relation to, take this out, that is your operating or running expenses. Then finally, you have T, that has 2 points, that is term of the lease and tax benefit. That is how we completed the hire, purchase, and leasing transactions. Okay. Then we went to the next area, that is audit of hotels. So let's enter audit of hotels now. Hotels, we did an area which was a pretty big area part. Let's start with hotels. Hotels, let's go to the story. Let's do the story one by one. First, we covered fixed assets. Fixed assets. First, you arrive at the hotel. You first admire the big building, 5-star hotel. You say, "Oh, what a fixed asset!" For the fixed asset. When you're walking with your luggage inside, a trolley with gold and silver cutlery is going across. That is quasi fixed asset. Quasi fixed asset. After that, you see that there is a lot of the pillar. There is a lot of what do you call, the paint has come off. So you think, oh, the hotel requires some kind of renovation and redecoration. After that, you come to the next point, that is called room sales. When you go to the counter, you ask about the room sales details. You ask about two things. First is, can I get the standard room rate, and do you guys give guest bills or not? They say they agree to it. Okay, so these are the key points. When you ask for this, at that time, you see that when you're filling the form for entering into the hotel, you see a person snoring at the back. That person is the night auditor. Remember night auditor? Then after that, the housekeeper comes and he gives the housekeeper's daily report, which rooms he has cleaned and kept properly. All those things he gives. You are able to hear some sound from some of the room. You ask the person at the reception, where is this sound coming from? He says, sir, there is a wedding function going on. Somebody has booked a hall. From there, the sound is coming. So you ask, oh, so the hotel must be full. He says, yes, sir, the hotel is fully occupied. That is occupation in progress. Easy. That is what we did. Okay. Then the casual labor comes, the bellboy comes, he takes your luggage. You ask him two questions. Do you have a proper, do you get the casual labor charges properly paid, wages properly paid? He says, yes, I get paid. The hotel has a good internal control in place. So these completes are 2 points here. Then you are hungry, you ask the casual labor that where is the restaurant, you go to the restaurant, when in the restaurant, when you enter, you see that a lot of hustle and bustle in the restaurant, lot of food and beverages are being served, lot of movements and transfers are happening. You sit at your seat, you go to the menu card is your documentation, you go through that. When you go through that, you ask, you see that you are very curious because next to you there is a door which says no entry allowed. So you are very curious what is inside that. You want to see what is there inside. So, but you see that the departmental manager is walking with the key and is doing the key is doing like this. Okay, that is the department manager is walking with the key. So when the department manager goes, passes you, you open the door and see inside, and you see inside. When you go in, now you change the point to internal control. When you go to internal control, you see that the waiter is stealing some vegetables from the hotel. We'll call it as pilferage. Pilferage means small theft. But when you see that waiter, you are shocked. But then the manager also comes and he also sees that, oh, something is stealing. The manager shouts, asks for explanation. And because the way he shouts, what happens is there is complete leakage. So with that, we had a point called minimize the leakage. You again go back to your seat. You give your order. You have ordered pasta. The waiter takes that to the chef. The chef the chef sees the kitchen order ticket, and based on which he makes the pasta. This is KOT point, kitchen order ticket. When the food comes, you eat the food, you pay the bill along with the taxes. That reaches this point. After that, you want to go for a half-day city tour. So for that, you remember 2 points. The hotel, if it is getting the customer from the travel agent, then in that case, the hotel will pay commission to the travel agent. So it is an expenditure for the hotel. But if the hotel is giving the customer to the travel agent, so in that case, you understand here the travel agent will pay a commission to the hotel. That is an income for the hotel. So we had 2 points, that is commission earned and commission spent, commission amount, commission expense. Are you there with me, yes or no? That completes audit of hotels. Okay. Last but not the least, as I told you, audit of cooperative society. I'll be putting the summary notes in the as a link below. I'll give a Google Drive link. You can just download it from there. It'll be easier for you to go to cooperative society. Cooperative society, I'm not doing it in this session. You can just simply download the notes and go through it. Nice compressed version covering all the points of cooperative society will be there. Are you there with me, yes or no? Comfortable? That completes chapter number 9 recap.
Okay, everyone, we start with the revision of audit of banks. Audit of banks, as you know, is divided into 4 parts. Part A, Part B, Part C, Part D. Part A is nothing but in relation to advances. Part B was expenses. Part C is in relation to revenue. And Part D is in relation to other areas, okay? we'll be doing in a part by part manner. Let's go to part A first. We are entering now advances. What are the areas that the auditor should check in relation to advances? Let's see it one by one. Hear me out. Question number 1 is, what are the various natures of security? Security can be either primary security or it can be collateral security. Primary security is the main security of the bank that the bank takes from the borrower, and anything over and above that, so to ensure that adequate margin is there, that is called collateral security. Collateral security is also called as additional security. Question number 2 for us was examples of most common type of securities. In that, I had told in the class that out of these points, you can add any of the 6 points that you like. Okay, so ensure that you're learning 6 of these. Very basic example, like your gold ornaments, bullion is one very common example. People can take loan, give gold as security. Life insurance policies is there, plantations are there. You can add any 6 of these. Okay, is question number 2. Question number 3 that we had done, everyone, was in relation to what are the modes of creation of security. We had done something called as formulas: pledge, hypothecation, mortgage, lien, assignment, set off. Pledge is when the bank is giving loan and accepting movable asset as security, and the movable asset will be in the bank's possession till the time the loan gets over, loan period is over. What is hypothecation? Hypothecation is when the bank is giving loan, accepting any movable property as security, but the movable property will be in the possession of the borrower and not the bank, and this is called as hypothecation. Mortgage means whenever the bank gives a loan and takes immovable property as security, that is called mortgage. It can either be registered mortgage or equitable mortgage. What is a registered mortgage? Whenever there is a mortgage in which the party which is taking the loan and party which is mortgaging the asset, it transfers the asset in the bank's name first, and that is called mortgage. That is called registered mortgage because the property is getting registered in the bank's name. What is equitable mortgage? Equitable mortgage is when there is simply mere delivery of title deeds. There is no change in the ownership name. The borrower simply, the mortgager simply gives the property papers to the bank. That's it. There is no change in the name there. Okay, that is called equitable mortgage. So that is basically mortgage, pledge, and hypothecation, which we had done. Then we had done something called as formulas. Last is nothing but lien. Lien is when you give a person the right to retain control over the asset. That is called lien. You have something called as assignment. Assignment means, we had done this example in the class, if you remember. We had done this where C had told A to pay for him. So A paid for C. Next day, A had told B to pay for him. So in this case, C has to now pay 30 to A. A has to now pay 30 to B. So C is A's debtor. C is A's debtor. A will transfer C as a debtor from A to B. So A is transferring his debtor to B. So B becomes the assignee. B becomes the assignee. Now B can go and recover 30 rupees from C. Okay, that is basically how this works. This is called assignment. When one debtor, your debtor is transferred to some other person. Okay. Then after that, we have done something called as set off. Set off is basically when a person has taken a loan from the bank, let's say of 6 lakh rupees, and he already has a fixed deposit with the bank of 10 lakh rupees. The bank will love such kind of transactions because even if the bank gives a loan of 6 lakh rupees, in this case, the bank can easily set it off if the person doesn't pay this amount. This is called set off. This is called set off. Okay. So pledge, hypothecation, mortgage, lien, assignment, set off. These are the modes of creation of security. This area, modes of creation of security. Yeah. Get to the next area that is called as, very nice area called prudential norms. Prudential norms, I'll take you directly to the chart. We have done this. That is note ag plus 4 areas. 4 areas was also rags. Okay, so let's see it one by one. Prudential norms, very important area for your examination. Let's do it one by one. Please see here. When is an asset called as a non-performing asset? When the principal or interest is overdue for more than 90 days, or if the bill is discounted and on the due date, the bank goes to the drawee to collect the bill. The drawee also doesn't pay the amount and it is due for more than 90 days from that day. Again, that can be called as a non-performing asset. Or if any asset which is out of order is called non-performing asset. When is the asset out of order? For that, we had done this example, if you remember. Sir, whenever an asset, the sanction limit is, let's say, 5 lakhs, but the person has taken more than, sanction limit is 5 crores. The person takes more than 5 crores as the amount, and it stays that way for a long time. In that case, we say that it is out of order, hence it becomes an NPA. Or if a person has taken less than the sanction limit, 5 crores is the sanction limit, person takes 3 crores worth of drawing he has done. and there is no credit in the principal operating account. There is absolutely no credit in the principal operating account, no credit in the current account. Then we call it as out of order. Or if the person has taken less than the sanction limit and credit is there, but the credit is so less, you can see the values here, the credit is so less in value, it is not even covering the interest part. In that case, we call it as what? Out of order. Any out of order item automatically becomes an NPA. This is what we had done. Okay. So in no tag, we did N, that is called NPA. Now we are entering O. O is called overdue. For that, we had done this chart, if you remember. In this, we had seen, sir, in this, whenever there is a due date, the person has to pay the amount within 90 days. If the person doesn't pay the amount, we call that asset as an NPA. NPA, as I told you, is a category. Inside that, there are various subcategories. The first subcategory is called substandard asset. It is for 1 year from the date it became an NPA. It is for 12 months, that is 1 year from date it became an NPA. During this period, we create a provision of 15% on the asset. So if the loan amount is 1 crore and if the entire loan is not paid, we'll create 15% provision on this 1 crore basically. Okay. Second, after 12 months are over, so this big red line I'm drawing here, now all the calculations will be from the big red line only. So after the substandard period is over, what is that D1 period? D1 period is 1 year from that big red line. So for a period of 1 year, that asset is called as doubtful category 1 asset. In the doubtful category 1, we have to see whether it is secured or unsecured. If it is secured, then we have to increase the provision to 25%. So basically, we had already created provision of 15%. We are increasing it to 25%. And in the case of unsecured, we are increasing the provision to 100%. Yeah. Next, if it is D2 category, that is basically again from the big red line. If it is 1 to 3 years, that is basically year to year 3. In that case, if it is secured, then the provision will increase to 40%. So you understand here it was 15% earlier, it became 25%. Now it becomes 40% in this case. And in this, and this 100% provision will remain as 100% in the case of unsecured asset. If it is more than 3 years from the big red line, in that case, what they are saying is we have to see whether it is secured or unsecured. If it is secured, in that case, this 40% will increase to 100%. If it is unsecured, it will stay at 100%. This is what we had seen. Yeah. In that duration, which I've shown in the dark blue line, suddenly anytime if SIR, that is statutory auditor, internal auditor, or in RBI inspection, or the bank itself feels that this money is not going to come, in that case they should treat it as a loss asset and immediately create 100% provision there and then itself. Are you there with me, yes or no? This is called overdue. Then after that, my dear student, we had done something called as tickling matters. T was tickling matters. I'll just show you the basic. We had done tickling matters. I told you this tickling matters are the best kind of security for the bank because these will never become an NPA because bank can easily recover the amount from the borrower. Tickling matters are what? Term deposit, Indira Vikas Patra, Kisan Vikas Patra, life policies, national saving certificates are your tickling matters. These are supremely safe. If tickling matters are given as security, banks feels very, very comfortable because the bank can recover not only the asset, but also if there is any interest income on that, in that case, okay? That completes your T. That is basically tickling areas. Then we have done erosion. Erosion, if you remember, we have done this diagram. Let's see erosion now. Let's see this. Sir, if a person gives his property papers here and the bank assesses the value to be 1.2 crores and bank gives a loan of 1 crore in this case. But if some situation happens in such a manner that the value of the property drops to, let's say, 40 lakhs, so 1.2 crores into 50% is 60 lakhs. Value of the property has fallen below that 50% mark. Again, 1.2 crores, 50% is 60 lakhs. Value of the property has gone down to 40 lakhs, so below 60% mark. In this case, this loan that we had given or whatever asset is there, we have to treat it as a doubtful asset. We have to treat it as a doubtful asset. Next, if a person has given the bank his property papers and he wants a loan from the bank, and the bank has assessed the property at 1.2 crores, so you can see that enough margin is there. But in this situation, suppose if a problem happens in such a manner that the value of the property drops down to 6 lakhs, and suppose this person has already paid 20 lakhs till now, so 80 lakhs is remaining outstanding in his account. So this is the outstanding in the borrower account. So what we have to do is we have to take 10% of this. 10% of this will come to 8 lakhs. And the property value has dropped down to 6 lakhs. So the question is, has the property value gone down even below 10% of the outstanding value? The answer is yes. In that case, RBI said in the prudential norms that this 80 lakhs, which is an asset for the bank, it should immediately be treated as a loss asset and we should create 100% provision. 100% provision. Going in the mind, yes or no? Simple. Comfortable? Use this for quick revision, okay? Use it for your benefit. Next is then we did something called as agricultural advances. What is agricultural advances? Very simple. So in note ag, we are right now at AG, agricultural advances. In every state, you will have a state level bankers committee, which will decide which crops are long duration crop, which crops are short duration crops. Crops which take more than 1 year between seeding to harvesting, they take more than 1 year. They are called as long duration crop because their crop duration is more than 1 year. And crops which are not long duration crops are called short duration crops. So those are not long duration crops are called short duration crops. If a farmer takes a loan for growing a short duration crop, he has taken a loan here, he'll put the seeds here, he'll harvest here. This is one crop season. Next time regarding the same crop, seeding, harvesting will be here. As you know, it will be as per the Kharif season, Rabi season, as I taught you. You understand here, the farmer for short duration crop will get 2 crop seasons to pay the loan amount. That is this crop season and this crop season. So he has this much period to pay the amount. But if he still doesn't pay the amount, in that case, it will become an NPA. In the case of long duration crop, when the farmer takes a loan, the farmer will get 1 crop duration to pay the loan amount, 1 crop season to pay the loan amount. If he doesn't pay the loan amount in that 1 crop season for the long duration crop, in that case, it will become an NPA. Are you there with me, yes or no? This completes your note ag. What are the 4 areas? Let's go for it one by one. Let's discuss it quickly. Let's see this. Accounts regularized near the balance sheet date. What does it mean? It means, sir, any asset turning NPA just before the year end is not a good news for the bank, because it means bank has already recognized interest income, and if that asset becomes an NPA just before the year end, bank will have to pass reverse entries, and that income which they are showing on interest income credit side, it will have to be debited. So bank will now have to show lower income which they will not like. They will also want to impress the shareholders. So the bank in this case will do a trick. What it will do is, it will do some manipulation in the accounts in such a way that the asset becomes an NPA or the loan becomes an NPA not before the year end, but after the year end. So in that case, what happens is that reversal is not required in the previous year. It is required only in the next year. So at least in the previous year, you need not reverse the transactions. And because you need not reverse the transaction, your income will show inflated income will be there. Hence, your profit will be shown at a higher figure than what you should show. Banks can do this manipulation. Hence, it is very important for the auditor to ensure to check the year, near the year end transaction, the entries which are there. The auditor should check them very, very closely. Are you there with me? That is what we saw when we did accounts regularized near the balance sheet date. Okay. I'm telling you again, in class, we had done good extensive diagrams in this case. We are just doing quick recap now so that you get the points. It is assumed that you must have studied and then you're sitting for a revision purpose. Next. A is called agricultural advances, but in the case of natural calamities, if you know, I told you yesterday that there can be natural calamities because of which a farmer will not be able to grow the crops. In that case, and if he has taken a loan, he'll not be able to pay the loan to the bank. The banks in this case have to give renewal, extension, fresh loan for existing loans so that farmers are getting some kind of benefit in this situation. Next, government guaranteed advances, go for it. You guys are already champions at it, go for it than me. Government guaranteed advances can be given either by the central government or the state government. Central government guaranteed advances can either be non-repudiated, repudiated. If it is not repudiated, then the asset, the principal has to be, will be treated as a standard asset, but the income will be treated as an NPA. But if it is repudiated, in that case, you understand that the asset will be NPA and the income also we'll have to reverse it. So it is because it is also an NPA. In the case of state government guaranteed advances, it will be NPA and NPA for asset and income. Simple, very simple table. Finally, we did staff loan. Yesterday, we understood this matter. Tell me what is the complexity in this. Staff loans, especially for housing loan, they get some benefit. What is the benefit? When they pay the installment, that installment can be taken entirely as principal, So their principal amount will get down faster. So in the end, in the staff loan, the staff will pay lower interest overall. So that is what the auditor should be very careful. If staff loan is given, first of all, we should check whether what is the benefit that the staff is getting. And second, whether it is disclosed properly under other assets by the bank. That is what the auditor needs to check. Okay, that is what we saw in RAGs. This completes our question number 4. That is prudential norms. Okay, so 4 questions done till now. That is prudential norms. Let's go to question number 5. This was in relation to computation of drawing power. In that we did 2 parts here. First is the theoretical part, second was the computation part. Let's do the theoretical part first. Hear me out. Look here, see. First of all, whenever the bank decides the drawing power or the sanction limit, the bank has to ensure it is within the limit. If it exceeds the limit, in that case, the person in the bank has to report to the head office or the management. Normally, whenever a businessman comes to ask for drawing power, in that case, we should check the current assets very, very carefully, especially the current stock statement. Especially for large borrowing, we should check the current stock statement within the last 3 months only. Any current stock statement checked which is before 3 months, that will be considered to be as irregular. Okay. Next, the bank will check the stock statement, quarterly reports, annual report, and monthly stock statements to decide the drawing power limit. We have to check the extant guidelines, which are nothing but the policies made by the directors in relation to the drawing power and the sanction limit. And finally, stock audit is compulsory if the exposure, that is the risk taken by the bank, loan given by the bank, is more than 5 crores. And also in other cases, when the auditor recommends, non-lead banks should take the stock audit report from lead bank in the case of syndicate or consortium loans. Consortium basically means when group of banks come together to give a loan for a common purpose. Yesterday, we had done this area where we saw that India Infrastructure Limited wanted loan of 1,000 crores and it was divided between 3 different banks. Okay, in that SBI was the lead bank and Axis Bank and HDFC were the non-lead banks. The non-lead banks will take the stock audit report from the lead bank. We should also carefully look at the comments given by the borrower, comments given by the auditor, comments given by the auditor. This also we should check it very, very carefully. Easy. This was the theoretical part of computation of drawing power. Now we do the calculation part. So look here, see, please here. Try to remember what we had done. Let's go for it one by one. See whether it is clear or not. Let's go for it. Tell me. We'll take raw material stock. Raw material stock less the creditors. Tell me, why are we separating the creditors? Because we have to pay them later only. So not required. So we'll subtract it. So now we look at the paid stock. But in paid stock, the supplier's margin is there. So we have to subtract the supplier's margin and you get A. That is the value that you get. For the B computation, what do? We take the debtors. But insincere debtors, I don't want my client to produce good for insincere debtors because then he may not pay to me also if the debtors don't pay him. You understand in this case, we'll take total debtors, less debtors which exceed the credit period, that is insincere debtors. And debtors which are sincere, we'll get them here. But to sell the debtors, our margin is included. So we have to reduce our margin. So margin has to be included in this case. And then after that, we'll get the B. A plus B becomes your drawing power limit. It becomes your drawing power limit. This is what we did. Okay. This completes your this area till this point. Okay. Let's go further. This is computation of drawing power. Then we did the next area. This was question number 6, 7, 8. This was all in a flow. So we did this area 6, 7, 8. Let's do it one by one. Let's understand it properly. Let's see this. First is question number 6, evaluation of internal control. In that case, what all will the auditor check? Auditor will check the creditworthiness of the borrower. He will check whether all documents are there in place or not. He will check the terms and purpose of the loan. He will check whether security is given or not. If security is given, whether value-wise it is sufficient or not. And if share securities or any other debentures are given as security, in that case, whether it is in the name of the bank and whether it is registered with the bank or not, this is what the auditor will check. If a businessman comes for a loan, the bank will normally take goods, that is inventory, as security. Entry should be made in the drawing power register. It should be within the limit. It should not be in excess of the limit. For large borrowings, we will check more frequently. And for others, the checking should be done by the bank at least once a year. Okay, this is the flow that we did. Then we went to our dear answer. What is this? What evidences will we gather regarding advances? Let's go for it. Balance sheet. We did that bald man story. Let's go for it. First is balance sheet. As you know, that is hair. So let's do the story first. First, bald man goes to the haircutting salon, and then he says that I'm here for your services. The barber says, please sit, have a seat. The man reads through some documents. After that, the customer was sitting, he leaves. So the man now is going to sit on the chair. And in that case, what happens is the barber now says, I'll now do my duty. The barber removes the cap. There is no hair. After that, the bald man in this case says, don't worry, take this oil and appropriately, and V&A, valuation of advances, should be appropriately and properly applied. And after that, the barber experiences that hair is touching his fingers, so there's recoverability. After 10 minutes, the hair grows like you and me. So the man discloses himself as a star. When he's about to leave, the barber gives him the cap. Cap is acting as a provision. So the story connected like this. The man goes to the barber shop. It was balance sheet. So in barber shop, you cut your balance sheet. Next is he sits on the sofa, reads the documents, so loan documents. Barber says, I'll now do my duty. Amount due. Then he removes the cap. He sees no hair is there, so unrecorded advances. Then the barber valuation of advances should be appropriately and properly applied. So we have appropriately and properly applied. Small hair grows, recoverability. The man classifies, discloses himself as a star. statutory requirements, accounting policies, regulatory requirements, and finally, the cap acts as a provision. Whether provisions as per RBI prudential norms are complied with or not, that is what the auditor should check. Okay. Next is what audit procedure should be done to obtain evidences. Let's go for it. First is validity. Validity, if you remember validity, then that is basically your validity of the loan. Then Aadhaar card the man shows, that is called loan documents. Then apart, did you do any kind of operation? There's operation here. A wife comes, wife does what? Tell me. Existence, enforcement, valuation of security. So your existence, enforcement, valuation of security. And then the husband says no. No means no. No means norms. Then the wife says thank you Anna. Anna means analytical procedures. And after that the hair has grown large. So large account we should check. Problem account also we should check unless they are insignificant. And the rickshawalas pass adverse comments. RBI inspection, internal inspection of the bank, or concurrent auditors, they pass adverse comments. These accounts the auditor should definitely check. Okay. This completes our audit of advances part. First 8 questions we have done. Okay. Let's go further. Let's do audit of expenses. Let's do it. Please here. Let's go to this part. See. We are now heading to audit of expense items. Let's do it one by one. Hear me out. 3 questions only. Very, very simple. Easiest area. Okay. Small part. Let's quickly complete it. Please here. The auditor should first of all check whether expenses are reasonable or not, and whether the bank is complying with the CBS system. So CBS system, whether the entries are being made properly or not. Second, the auditor should obtain an analysis of various type of deposits. As you know, fixed deposit, recurring deposit, saving deposit, all these deposits at the end of each quarter. And also the auditor may compare this rate with the actual average rate of interest paid on the relevant deposits as per the annual accounts. Mainly the checking we are doing as per weighted average interest rate. Yesterday I gave you the example of weighted average interest rate basically. And after that we go into this part. We should check the corresponding figures of the previous years regarding expenses. We should also do month-on-month interest analysis. And also we should check all the expenses on sample basis, because yesterday we saw the quantity of SBI's interest transactions, 135 crores, we got the rough number. To understand here, that much quantity we cannot check. We can only check on which basis here? Sample basis. Okay? After that, we went into this area that was basically in relation to test check basis. This was a +1, if you remember. In that we saw in this manner, I'll just show you from the chart, this area, please here. First, we check whether RBI directives have been followed on test check basis, whether rate of interest is checked on a test check basis. We cannot check everything. Internal regulations the bank may be having, but auditor will not get the time to check everything. Auditor will check on test check basis. Inter-branch balances, as you know, is if one branch is giving money to another branch on continuous basis, the branch which is giving the money will feel, unfair on itself. So the bank branch which is giving the money will request the head office to finalize the inter-branch interest rate. If one branch is giving the loan to another or giving money to another branch, the other branch has to pay the money to the first mentioned branch. Okay, that is called inter-branch balances. Last is interest on all deposit. We should check interest on fixed deposit and interest on saving deposit separately. Fixed deposit as per fixed deposit receipt or certificate. Saving deposit as per the bank's internal policies. We should check. Okay, this completes your question number 1. That is audit of expense items. Let's go to the question number 2. That is audit of operating expenses. Very nice area. This was Dadi operates car. Very, very simple code. Let's locate it in a quick manner. Let's see this. Let's start, please here. First is the auditor will check whether all the documents are there in place or not regarding all the expenses. Auditor will also do an analytical review. He'll do the ratios and trends checking. He will see whether trends are steady or not, or whether trends are going up and down. That is called divergent trends. Auditor will look at all the internal control, that is the procedures in relation to expenses. This is Dadi. Operates, we are doing it so that you remember the code is operating expenses. The code is operating. Okay. Next is what is CAR. Please look here. Auditor will check whether calculation is done properly or not. Whether the corresponding figures for the previous years will check whether is there any sudden increase or sudden fall. Auditor will also check whether all the expenses are reasonable or not. Auditor will check the ratio to the total operating expenses. These operating expenses are the monthly expenditure for the bank, as you know, like salary, electricity, rent, all these expenses, Wi-Fi cost, all these will come under this category. Okay, let's go further. We did audit of provisions and contingencies, which was this diagram. Let's do it one by one. Let's see, first of all, whether RBI's compliance is made in relation to provisions, whether provisions for standard assets and NPAs have been taken. NPA, if you're taking it, they should classify it properly between substandard, doubtful, loss. Normally, standard assets will be much more in quantity than your NPAs. Hence, it will be too much in number. Hence, the auditor can only do it the checking on which basis here? Sample basis. This is what we studied. Also, auditor can check the recomputation regarding all these matters. Auditor can also check the detailed breakup. Example, if the auditor needs regarding substandard asset, he needs, individual breakup of every person who is into substandard asset, then the auditor should ask that from the bank. Auditor should also ensure that the bank is keeping proper tax provision. If not, the auditor should note that down. And finally, whether all the provisions which have been taken are sufficient, that is adequate or not, this is what the auditor will check. This completes our audit of expense areas. Okay, expense area. Okay, now we are doing the next part of audit of banks, that is audit of revenue items. This is part C. Let's go for it, please here, one by one. Let's start, please here. First is, in relation to revenue items, what are normal revenues? Interest income, investment income, bill discounted, penalty charges, account maintenance charges, broker facility, ATM transaction, and many more are the income for the bank, revenue for the bank. What all should the auditor check in this regard? Let's do one by one. Let's start with this procedure. We had done 6 concepts in this. In the main answer, audit of revenue items, concept 1, 2, 3, 4, 5, 6. Concept 1 was before NPA, after NPA. The main area in this was, if just before the NPA or basically regarding the previous year, it can be an issue that income is taken into account, but the money has not come. In this case, there's accounting mistake. So the bank's accounting is not proper. So auditor should check whether after NPA is declared, whether they have reversed it or they have provided for it. This is what the auditor should check. Second, after it is an NPA, there is a significant uncertainty that the bank may not receive the income. In that case, the bank will not receive the income, And of course, they should not take it in accounts also. And this should be the right accounting treatment for it. This is what we saw basically in concept 1. Concept number 2 was what? Concept number 2 was in relation to discount charges earned and discount charges spent should not be netted off. If Axis Bank has earned some discount fees and if they re-discount the bill with HDFC Bank and if the discount charges spent, that discount charges earned and discount charges spent should be shown separately in the profit and loss account. It should not be shown one below the other. You cannot show discount charges earned 10,000, discount charges spent 3,000, outer column 7,000. You cannot show in that manner. You have to show it separately. That is our concept number 2. Concept number 3. Discount fees which is earned. Look at this, discount fees which is earned. And if the discounting period is such that the year end is coming in the middle, then the discount fees should be apportioned, divided between the 2 years. That's what discounting charges should be apportioned between the 2 years. This is what we had seen. Okay, this is concept number 3. Concept number 4, again a very simple one, that was bills for collection. Very simple. When the drawer gives the bill to the bank and tells, please collect the money from the drawee, then when the bank can only charge commission only after the money is collected from the drawee. Only when the drawee gives the money, the bank can charge its commission charges for bills for collection charges. This is concept number 4. Concept number 5, that is in relation to bank guarantee letter. If a person requests the bank to give the bank guarantee letter so that the person can enable some transaction, in the class I had explained to you, the supplier is giving goods and Mr. A is giving the bank guarantee letter to the supplier, bank will not give this bank guarantee letter for free. It will charge some fees for that. Okay, so bank guarantee charges will be there. That is another income for the bank which the auditor needs to check. And your last point was in relation to letter of credit. As you remember, letter of credit, one very simple area. The importer in India will take the letter of credit, give it to the exporter in UK. Exporter in UK will give to the UK bank. UK bank will debit HDFC Bank in India. In this case, HDFC Bank will recover the money from the importer. That is the main amount along with the charges for letter of credit. That is 1 lakh. At 1 lakh of letter of credit charges is the income for HDFC Bank. That is what we had done. Okay. Next, we had come to this main answer here. Okay. In this main answer, we put a lot of effort in terms of understanding how the concepts work. Let's go with it one by one. Please here. The code was ABC's tickling video was uploaded by Rema on Facebook in the previous year and current year. We have taken that small baby example ABC. Let's start this year. But A and B is the bank should show the income on accrual basis. And nowadays all the income is recorded by the bank's core banking software. Tickling matters are the best kind of security because if the bank has taken security of tickling matters and given loan, not just the asset, but also the income gets assured. So you understand here, tickling matters, if they are given a security, the income is very, very assured from the bank side. Okay, let's go further. All income should be recorded, no income should be unrecorded. That is this point. And what is MA? Let's go for it. Tell me. The auditor will decide by his own judgment what should be the materiality benchmark. If the auditor is unable to decide, the RBI has advised that we have to see whether auditor reckons the income on gross basis or net basis. If they take it on gross basis, we should take 1% of the total income. If it is on net basis, we should take 1% of the net profit before tax. Okay. If the amount, my dear students, is not material at all, we should recognize the income on a receipt basis, and we should never call it, sorry, if the bank recognizes the income on receipt basis, it is not a big problem because the amount is not material itself, but the auditor will not qualify it because the amount is not material itself. Amount is not material. Let's go further. Now this area is what we did in our concepts. Let's go it one by one. Fees and commission, I told you to remember RCLGR. Bank will earn renegotiation and rescheduling of outstanding debts. Bills for collection charges, which was for us, I think it was concept number 4. And after that, we had letter of credit, that was concept number 6, and bank guarantee was concept number 5. Yeah. Let's go further. Bills, in that also we had seen bills purchased, and if the discounting period is coming in the year, and the year end is coming between the discounting period, then the discounting fee should be apportioned between the 2 years. This was concept number 3, and discount charges earned and discount charges spent should not be netted off. This was the next point. Next is bills for collection. See, we have to only recognize the income only after the drawee has collected the bill. Finally, we have previous year, current year. Previous year represents before NPA. This was after NPA. Before NPA, income recorded in previous year. In that case, you should reverse it or provide for it. And if it is after NPA, in that case, you understand here, because there is significant uncertainty regarding collection, no income from NPA should be taken. No income from NPA should be taken. This is what we had done. Yeah. This was your main answer of audit of revenue items. We did furthermore, we went to the next area called reversal of income, and we did question number 2, 3, 4 here. This was for us question number 2, this area, which was reversal of income. This was finance charge component of finance lease, and of course this, the 4th one, was takeout finance. This was question number 3 for us, question number 4, sorry, question number 2, 3, 4, question number 2 for us, question number 3 for us, and question number 4 for us. Let's go for it one by one. Next. If any advance is there and which the bank has taken it as the income, but the money has not come, they should reverse it or provide for it. Similarly, bills purchased and discounted, in that case, the drawee has not paid us the amount. In that case, we expect the drawee to pay, so we had already taken the credit and the money has not come, so we should reverse it or provide for it. And in case of commission, fees, similar income, if we have already taken it as an income but the money has not come, we should reverse it or provide for it. If the income is wrongly recognized in the past, you understand here, reversing it doesn't make sense. We have to do what? We have to create a provision. Make a provision. Next is come to this part here. If interest income is there and we see large debits in the interest income account, we should first of all ask the bank to provide proof, that is communication with borrowers. If the communication is available, then great. If it is not available, in that case, it is very much possible that the bank is involved in some fraud, because they are trying to reverse more transactions so that they can show lesser income, and with lesser income, they'll be paying lesser taxes. Okay, let's go further. Question number 3 was finance charge component of finance lease. I told you, in finance lease transaction, the person who is the lessee will be paying the installments on monthly basis. Installment will have the principal and interest. Interest is called as the finance charge component. If the bank expected that the interest, that is finance charge component, will be, if they are taking it as an income already, but if the lessee doesn't pay that monthly rent, you understand here, it means we have recorded the income, but the money has not come. We have to do again what? Reverse it or provide for it. And finally, last point, we have take out finance. I told you, in construction business, loans can be given in various phases. But if the person has cheated us once, then for the further installment that we recover from him, we will record only on receipt basis, because the trust is broken. Are you there with me? Yes or no? Simple. That completes our takeout finance part. This also we had done. Okay. Good. So we had done question number 2, 3, and 4. Now let's go ahead with question number 5. This was very simple. This was in relation to partial recovery. Partial recovery, I told you, 4 lakhs suddenly a person comes and brings. So we did a small exercise in the class. I asked you, tell me, how should you treat it as? And every answer is correct. So first of all, what we'll do is, we'll first look at whether there is an agreement with the borrower or not. If agreement is there, great. If agreement is absent, agreement is there, we'll follow the agreement. Agreement is absent. In that means we have to follow a uniform and consistent policy. But normally what will the banks do? Practically, I taught you, interest partially or fully realized in NPAs can be taken to income. However, it should be ensured that the credit towards interest in the relevant account are not out of fresh or additional credit facilities sanctioned to the borrowers concerned. So new interest should be taken into account later. We should take the earlier interest into account first and cover that first. Okay, we have done this area. This was in relation to your partial recovery. Let's go to the next area, everyone. Let's start with this, please. Here we have done something called as memorandum account. I told you it is a rough work account. Bank uses this only for rough work purpose. Just for, see, they have written their control purpose. See, control purpose, just to ensure that to keep a track of if this person would have paid the installments on time, how much he would have paid. For that, we just note it down. This is the should not be part of your main accounts. Should not be taken into account. Okay. This was question number 6. Last question number 7 was a nice one. This was income from investment. Let's do it. First of all, profit on sale of investments, P&L credit. Loss on sale of investment, P&L debit. Profit on appreciation on revaluation of investments, P&L credit. Depreciation on revaluation of investment, P&L debit. So this was the last 2 points which we did in a very simple manner. Challenge was not this point. Challenge was the first one. Interest income on investments. In that case, I taught you this table. I told you take interest or dividend on investment for all income that you have earned in this manner. Interest or dividend we should take first. That goes in our big red tick mark there. Okay, so that big red tick mark is here. Okay, that is basically here. Now you will subtract 3 things. Dividend earned from joint ventures or subsidiaries abroad or in India. You will take that. You will subtract broken period interest, and you will subtract any premium that you have earned on SLR investments. That is what you will do. You will subtract these 3 items and you will get this item. This is the value here. This completes our audit of revenue items. Are you there with me, yes or no? Comfortable to understand this part here? Now we're entering part 4 of audit of banks. Let's do it one by one. And this is a simpler part. Let's do it one by one. Please here. We are doing the responsibilities and functions of RBI. This was our question number 1 in other areas. Let's do it. Please here. What is the first responsibility of the RBI for seeing the development and supervision of the constituents, that is the banks, to work with the central government for finalizing the monetary and credit policies to ensure that they are regulating the activities of commercial and other banks. Basic things that you have seen in economics also. Very, very simple area. RBI has more functions. Please see here. It has issuance of currency, regulation of currency, issue, a banker to the government, banker to the bank. All these things you must have done in your 12th standard or in economics you must have seen in your life. Next, you cannot open the bank whenever you want, wherever you want. If you want to open a bank or start a branch also, you have to obtain permission or license from RBI. Okay? This was our question number 1. Let's go to question number 2. Question number 2 is the biggest question in our syllabus. No, it is the smallest one. Very simple area. Peculiarities involved in banks. Okay, tricky answer. You think it is easy, so you don't study. In the exam, if it comes, you don't know how to write. So ensure you are doing these small questions also with equal importance and finesse. Let's do it. Please here. Huge volumes and complexity of transactions involved in banks. Wide geographical spread. We know banks are spread across in various locations. A large range of products the banks sell. Extensive use of technology using core banking software. Lot of encryption systems also in their working. And finally, we have strict vigilance, that is checking is done by RBI, which is the banking regulator. All these are the peculiarities in the bank. This is question number 2. Question number 3, very simple. We did different types of banking institutions in India. I gave you a small code. We read this answer. Remember the examples. Huh? See, examples are given. Examples are given. Examples are given. Do these examples very, very well. Anything can turn up in the examination. Examples are given in this. Yeah. In this case, we did a code called Core Co-ops Work for Development. Let's go for it. Tell me. First is commercial banks, regional rural banks, cooperative banks, payments banks, small finance banks, and finally you have the development bank. Okay, Core Co-ops Work for Development. Then we did our favorite answer, Ghosh Jilani story. Tell me this. This was basically in relation to, sir, the statutory central auditor, other than the main audit report, has to make which other reports? So there were 8 other points. He has to report on the recommendations given by the Ghosh Committee, Jilani Committee. Ghosh Committee has given recommendation on frauds, malpractices. Jilani Committee has given recommendation on internal control and or credit or inspections of the bank. Inspection of credit system of the bank. Whether there is any serious irregularity in the bank, that is what the auditor will report on. If there is any adverse credit to deposit ratio in the rural areas, auditor will comment on that. If auditor will also comment as per section number 143, subsection number 3, clause I, on internal controls in the bank. He'll comment on that. This you will also see in audit and auditors chapter. It is there. Next is, if any guidelines have been given by RBI, that is basically prudential norms, guidelines given by RBI in relation to income recognition, asset classification, and provisioning auditor has to report on that. On a statutory liquidity ratio, whether bank is following that or not, auditor will comment. Auditor will check the treasury. Treasury means the investment functions of the bank. The bank is investing as per the RBI requirements. And finally, we have long form audit report. Auditor will give a long form audit report. Remember, for except 8 BOSIP companies, you have CARO report. But for banks, you have a specific report called as LFAR, long form audit report. Okay. This for us, my dear students, was question number. Please tell me. This was question number 4. Okay. Let's go for it. Question number 5 now. Let's do it. 5, I think, is a very nice question, important one. This was basically in relation to, sir, what are the common questions or steps which have to be kept in mind while undertaking or performing the control activities? In this, we had seen these areas. Please see here. First is, sir, who performs the controls? Whether that particular person has requisite knowledge or authority. Next, what are the areas that he checks and what is the evidence that he generates? That is question number 3. Question number 4, that is the frequency of checking. And next is the frequency enough? So what is the frequency of checking? Is the frequency enough? In the content, it is here just to show you once. You can see it here. When and with what frequency, and is the frequency enough? When and with what frequency, is the frequency enough? So you will get all the points in order. Okay, so don't worry. After that, we have the next point, that is basically, where is the evidence retained? How long is it retained for? Is it available for audit? Again, you will find it here. See, where is the evidence retained? How long it is retained? Sorry, I'll use some other color. 1 minute, wait. Where is the evidence retained? For how long is it retained? And is it available for audit? This is basically this area. And after that, we saw why is the control performed? What errors are prevented and or detected? So that is exactly what we saw here. Why is the control performed and what errors are prevented, detected, and corrected? How is the control performed? What are the control activities we saw? Then can these controls be bypassed? And if bypassed, can it be detected? What kind of exceptions or deviations are we resolving? How are they resolved? And what is the time frame for resolving? Time frame for resolving. So you have to just follow the chart, simple flow. And if you with practice, you will easily understand how to write this answer. I feel this question number 5, is a very good question to ask in the examination. So be ready. Okay. Let's go further. Let's go to the next areas. Very simple areas now. For the bank, for nationalized bank, State Bank of India, subsidiaries of SBI, RRBs, for most of the banks, the Banking Regulation Act, 3rd schedule of that provides a format. Form A is a format for balance sheet. Form B is a format for P&L. That is what they have said. All companies doing business in India have to comply with accounting standards for making their accounts. And that is recommended by NFRA and the section number 133. Okay. Let's go further. Please here. Who can be the auditor of the bank, my dear students? Auditor of the bank has to be a CA, and that to a CA in practice. And you understand that the CA, if he's appointed, he has to be eligible, qualified, and not disqualified under section number 141. This can come in MCQs. Very, very important area. Do it carefully, please here. In the case of banking companies, my dear students, shareholders in AGM appoint the auditor along with RBI approval. In the case of nationalized banks, board of directors appoint the auditor along with RBI approval. In the case of regional rural banks, bank appoints the auditor along with CG approval. So be careful in MCQs who appoints the auditor for which bank. Okay, be careful here. Let's go further here. Let's do the next part. Further is remuneration of auditor. Very simple. Remuneration of the auditor is paid as per 142. You know very well. 142 is remuneration. Okay, very simple. Powers of the auditor also you know very well. Powers of the auditor is nothing but, see, they have given here as those of the company's auditor. So as those means power is given in section number 143. As you know very well, it is powers and duties. So same duties will come in this. Same powers will come in this. Let's go to this question. This is a simple question which says, in the case of nationalized bank and State Bank of India, I'll highlight it again. Please here, everyone look here carefully. In the case of in the case of nationalized bank and the case of State Bank of India, what all matters should be reported? So you should look at the screen here, please here. In the case of nationalized bank or State Bank of India, the auditor shall make a report and he shall submit the report to the central government, and the following matters will be covered in the report. First is whether balance sheet and P&L give a true and fair view, whether returns received from the branches are adequate or not. Returns simply means information from the branches is available or not. Next, transactions are within the powers of the bank or not. And finally, any other matters, the auditor will report to the central government. Yeah. Let's go to the next part here. Please here. Very simple, small areas remaining. Long form audit report. They have just given a hint here. This mainly will come in CA final. But in this case, they have said long form audit report has to be submitted before 30th June every year. 30th June every year. Okay. And last but not the least, we are doing something called as reporting to RBI. In RBI has told people of accounting and auditing profession that if you find any susceptibility of fraud or fraudulent activity or act of excess power, anything which is there, you have to report to RBI. See, refer the matter to the regulator. If there is any deliberate failure, if they don't do it, in that case, the auditor should render liable himself for action. Auditor should, other than this, satisfy two standards: SA 250, consideration of laws and regulations, and SA 240, that is auditor responsibilities in relation to fraud. This is what you have to do. There is a separate video which I have given in relation to conduct of bank audit, which is this chart. There is a 45 minutes video on YouTube. I will recommend you all to see that video and ensure that this matter is set in place. In the video also I tell the same thing. Here also I'm telling the same thing. There are in total 18 points here. You will see point number 1 here. You can see point number 1 and point number 18 here. So you will see all the numbers there. 1, 2, 3, 4, 5 like that. You will see 18 there. The point which I have circled are the important ones. Only this you have to study properly for answer writing in the examination. Other points you have to simply read for MCQ's purpose. So point number 1, point number 5, point number 6A, point number 6B, point number 9 and point number 18 are the ones which are very important for answer writing in the examination. Okay, that completes our revision for audit of banks. 4 parts, remember. Part A, advances. Part B, expenses. Part C, revenue. Part D, other area. Comfortable till here? Okay. Okay, everyone, let's start. We are now starting with chapter number 11, revision. This is called as ethics and terms of audit engagement. Very easy chapter. Again, I always put this in the easier category. Always remember chapter number 1, 2, 6, 11 are marks grabbing chapters. Okay. Question on this, if it comes in the examination, the marks should be in your pocket. These are the easy scoring ones. If these chapters are weak, then God will also not help you. Okay. You understand here that these chapters should be very, very strong. Okay. Let's start with this. Everyone, please hear. In this, we have 3 areas, as you know very, very well. We know part A. Part A is in relation to ethics. We have part B. Part B is in relation to SA 210, that is agreeing the terms of audit engagement. And we have part C, I should say. Part C is in relation to SA 220 and it also has SQC1. This is basically the coverage of this chapter. Part A, Part B, Part C. How is the question lined up here? Part A, they can ask you any one of the 7 questions in the examination. Part B, 5 are there, and part C, 8 are there. So in total, this chapter has 20 potential questions that can come in the examination. Okay. Let's start with one by one. Let's get it going. Please here. First is meaning of ethics. Very simple. Meaning and need of ethics will complete first. Very simple area. Let's wrap these small ones first. Ethics means moral principles which govern a person's behavior. It deals with moral principles. Science of morals in human conduct is covered in ethics. Okay. What is the need of ethics? Human nature being what it is, a man often places his personal gain above service. So who are known to be the so-called great people who put public good over their personal gain. We had done the example of Ratan Tata sir here. That was a person enjoys respect and honor when they think about the public good here. Okay? CA should also abide with ethical behaviors. They have to follow fundamental principles of ethics, which we'll see in the coming answer. Okay. Copy is the code. We'll see that. That is your question number 1. Question number 2, we had done a nice concept called principle-based approach versus rules-based approach. In this, we did some intense discussion regarding, is following the law enough or should we follow common sense? Following the law only is not enough. We have to follow common sense also. We had done a discussion between rules-based approach, that is law, and principle-based approach, which is based on common sense. I had given the example of that scooter that uncle is riding. And uncle's scooter falls off and you just will not say, oh, red signal has turned green, let me go ahead with my scooter or bike. You will not do that. You will follow the law, of course, but because your uncle needs help, you will apply your common sense, stop your bike or scooter, help that uncle get up so that he recovers from his injury. You applied common sense because you normally, of course, have to follow the law, but sometimes you have to apply common sense and ask yourself what I'm doing is the right thing or not. Okay? That is principle-based approach versus rules-based approach. Now, let's see this. Principle-based approach is that it requires compliance with spirit of ethics. It requires to exercise the auditor's brain he should use, professional judgment he should use in every situation based on the professional knowledge, skill, and expertise that the auditor has. What is the rules-based approach? It is strictly following clearly established rules, strictly following that. It may lead to a narrow outlook and spirit of ethics may be overlooked. It is somewhat rigid and as it may not be possible to deal with every practical situation if you just keep following the law. Hence, they have given a conclusion that it is necessary that spirit of code is followed. That is basically principle-based approach is better than the rules-based approach. Are you there with me? Yes or no? This is our question number 2. Okay. Let's go to question number 3. Then what is question number 3 here? What are the fundamental principles of ethics? We have done a code called copy. Simple. Confidentiality, objectivity, professional competence, professional behavior, integrity. What is confidentiality? To keep information secret. Don't let the information go out unless the client has permitted to give the information, then you can give, or it is required as per law. Okay. Objectivity basically means unbiased approach. Whoever is there in the company, even if you know that person very well, still if that person is involved in fraud, you should report the fraud. There should be no biasness here. Third, professional competence. Auditor should always keep himself updated with the latest knowledge regarding his field. Professional behavior, the auditor should first of all himself comply with the laws and regulations which are there. And last is integrity. Auditor should have a sense of truthfulness and straightforward and honest approach when he does the work. Okay? That is basically fundamental principles of professional ethics is our question number 3. Let's do, my dear student, question number 4. That is independence of auditor. Superb area. Independence basically means nobody should be able to influence my decision making. If I want to give a clean report, I should be able to give a clean report. If I want to give an adverse report, I should be able to give an adverse report. If I get influenced by others, in that case, I am not an auditor who is having independence as a quality. Auditor should always be independent. So let's see this. Independence implies that a judgment of a person is not subordinate to the wishes or direction of another person. So my judgment, my opinion is not subordinate to someone else. I am my own ruler. That is basically what is independence. Who might have engaged him or to his own self-interest. We did 2 things: independence of mind, independence of appearance. Independence of mind basically means the auditor should not allow his decision to get influenced by any situation. I had given that boy and the girl example, they fall in love. That example I had given. The boy could not report the fraud against the girl because he loves the girl. So he'll not be able to report it because he's in the accounting department, he's in the audit department, and now she's having a soft corner in his heart, which is he has become too sympathetic towards her. So now even if she's involved in fraud, he will not report the fraud, which is the wrong thing. That is called as independence of mind. So any situation because of which your brain has got influenced, because of which you are not able to give any opinion that you should ideally give, that is called as independence of mind is not there. Okay, so you should have independence of mind. Please here. The state of mind that permits the provision of an opinion without being affected by influences. That professional judgment, allowing an auditor, individual, to act with integrity, that is honesty. Objectivity means unbiased approach, and professional skepticism is, you know very well, quack. Quack means what? Tell me. Questioning mind, alert to condition, critical assessment of audit evidence. Auditor should always be able to do work with questioning mind, alert to conditions, and do in-depth checking of audit evidence, critical assessment. Easy to understand this part here, okay? Let's do independence of appearance. Superb discussion area. This is one of the best. Independence of appearance basically means what? In the eyes of the third party, the auditor should always appear to be independent. I should never be seen that I'm on management side. I should always be seen that I'm on auditor's side. Always. I give you the example of my best friend Kunal. If I'm doing the audit of his company, can I take up the audit work legally? The answer is yes. But if I take up the audit work, the problem is that because he's my best friend, in the eyes of the shareholder, even though I'm doing the audit sincerely, if there is any fraud, I'll report the fraud against him. Still, because I've taken the work in my best friend's company, you, in your eyes, you feel that I am now on the management side, not on the auditor's side. You understand here, auditor should always appear to be independent in the eyes of the third party. That is called independence in appearance. Are you there with me, yes or no? The third party shareholder should never feel that auditor's integrity, objectivity, professional skepticism has been compromised. It has gone low. That they should never feel. Are you there with me, yes or no? Okay. This completes our question number 4. That is basically, question 4, independence of mind, independence in appearance. Okay. Let's go to question number 5. That is your professional skepticism. Let's do this. What is professional skepticism? Let's start. It is quack. Tell me. It is an attitude of questioning mind, alert to conditions, and critical assessment of the audit evidence. Okay. We had done a song. Professional skepticism will help in relation to which matters. We had done a song. Very simple song. दिल है छोटा सा छोटी सी आशा दिल है छोटा सा Choti si aasha, hasti bhare man ki, na 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 na. That was the tune. Okay. We fit our lyrics into it. Let's see this. Unusual circumstances, specific conclusions, appropriate assumptions, includes being alert to documents reliability, evidence contradictory, fraud possibility. Circumstances for AAP. Dil chota sa, choti si aasha. It goes in that tune. Simple. What had we seen in this? We had seen that auditor, if he maintains a questioning mind, he can identify things which are not in sync with the company properly. Circumstances are suggesting something, and he feels that something else is being shown. That is called unusual circumstances. Specific conclusions. Auditor will give more specific conclusions, not generic conclusions. He will give the conclusions with more clarity. It will be more specific. Example, he will not say accounting department, entire accounting department is not working properly. He'll say accounts maintained by Mr. A and account maintained by Mr. B. There is a difference. Mr. B, as he's making a lot of mistakes. Because he's working with alertness, he can point out the specific conclusions, specific mistakes. Appropriate assumptions. Auditor can take right assumptions because he has a lot of clarity regarding how the client's documents are given because he's having alertness. Auditor, we can easily question the document's reliability because he's paying attention. So auditor will come to know what is fake, what is real. He's not supposed to know, but he can easily identify that, okay, this is proper or not proper. Auditor will easily check evidence which are contradictory. One evidence showing something, second evidence showing something. Auditor can easily pick that out. Then fraud possibility. Fraud possibility. If you're alert, you can find more frauds. And finally, circumstances for AAP means auditor will come to know when the line goes up because he's alert. Hence, he can do more audit work to bring the line down. People understand this area? This is question number 5, professional skepticism. Next one, excellent question, which is one of the expected things in the examination always, that is threats to independence. Let's start. Threat to independence is any situation that does not allow the auditor to give the opinion that he should ideally give. That is basically covered in this. Let's start with this. In this, we see theft, self-interest threats, self-review threats, advocacy threats, intimidation threat, familiarity threat. Steph is the code. Steph Ali Khan's Steph. Okay. S square AIF. That is the code. Okay. Let's start. S is self-interest threat. Let's go for it. We had done a code inside this also. This was B, C, D, E, F, G. B, C, D, E, F, G. Very simple code. B is business relationship. C is contingent fees. D is dependence on client's fees too much. Then E is employment with the client. F is financial interest, that is holding shares in a company. And G is guarantee or loan. But I told you in the class while teaching that B, F, and G are already covered in law. Threat was there, but lawmakers have made the law in such a way that the threat is covered now. So B is covered by section number 141, subsection number 3, clause E, which says that auditor will be disqualified if he has any business relationship. This you see in audit and auditor chapter in law. Similarly, financial interest, auditor cannot be a shareholder in the company, given in 141, subsection number 3, clause D, subclause 1. And auditor cannot give any guarantee exceeding 1 lakh or he should not be indebted to the company of exceeding 5 lakhs. This is covered in 141 subsection number 3 clause D, subclause 2 and 3. 2 covers loan and 3 covers guarantee. 2 covers indebtedness, 3 covers guarantee. Easy, simple. Let's go further. Now we are now doing self review threats. In this case, I told you that this part is covered in section number 144 of law. So it means that if the situation arises in such a way that auditor only is doing the activity, auditor is only checking the activity. The person who is doing it is only checking it. It is called as self-review. It is called as self-review. That is called as self-review threat. Self-review. Okay. This you mainly see in law section number 144, the area which I marked in bracket. Second situation of self-review can be this, which I give you an explanation in this manner. See this. Mr. D is the finance director of the company from this period to this period. Here he resigns from the company and joins ABCD and ABC as the fourth partner as D. If in the company's AGM and they are ABCD is appointed as the new auditor, and suppose Mr. D or any ABCD also comes to do the audit, you will understand. Mr. D was checking has made the accounts for this period. He's a finance director, so he's in charge of the accounts. And now he'll check the accounts for this period. So you understand here, there is overlapping. The person who is making it is only checking it. Person who is making it is only checking it. That is called as self-review. It is called as what? Self-review. Self-review threat. Yeah. Let's go further. Then we did advocacy threat. Advocacy is similar to independence and appearance only. the client, the shareholder should never feel that auditor is on the management side. They should never feel. If they feel that the auditor is on the management side, in that case, gone. Then the shareholders will not be able to trust the auditor. So the shareholders should always feel that the auditor is advocating for them and not advocating for the management. That was this. I had given you the example of there are three partners. That is myself, there is Manoj, and there is, let's say, Adarsh. We are the three partners in this case. I handle audit, they handle tax matters. The client has appointed us to handle a tax case in which if we win the case, the client is going to pay us 50 crore rupees. Audit work, client is paying us 5 lakh rupees. For tax case, they'll pay us 50 crore rupees. In that case, if we take up that case work, the shareholders will feel, oh, Kartik Sir's audit team will never ever report honestly. They'll always give a clean report, because if they report any fraud regarding the client will take away the tax case from them and give it to some other CA firm. So in the shareholders' mind, the switch has happened. The shareholders feel Kartik Sir's CA firm is not working on our side. They are working for the management side. That should not happen. The shareholder should always feel that the auditor is advocating for the shareholders and not for the management. Okay? That is basically this area. See, shareholders may believe that the auditor's objectivity, unbiased approach is getting compromised. Next, intimidation threat. I give you that dhamki. Dhamki means threat. You give a adverse report, you kidnap your daughter. Okay, all those examples. This was your intimidation threat. The auditor is stopped, deterred from acting objectively. Okay, that is basically this example. Next, we did something called a familiarity threat. We discussed this in great depth. I told you again, these two are covered in law itself. Auditor's close relative working in a senior position in the client company is a threat of familiarity. Threat is there, but it is covered in section number 141, subsection number 3, clause F says that your relative, if they are working in higher position in the company, especially in the position of director or KMP, you cannot be the auditor of that company. Okay. Next is long association between auditor and the client. This is broken by the Companies Act by giving a concept called rotation of auditor, which applies to certain companies. If you're doing the audit of certain companies, rotation of auditor will become applicable. Next, any acceptance of gift or hospitality. If the client pampers you with gift, it means they are creating a environment where eventually you'll become too sympathetic to the client's interest. They're creating a soft corner in your heart by pampering you with gift. Never accept the gifts, because later on, remember, whatever gifts you accept, if you find a fraud, you will not be able to report the fraud against the persons who give you the gifts. And last is partner becoming a director or senior employee of the client. This example we have done here. Please look here. PQRS was a firm in which R leaves this partnership firm and he joins the company as the new finance director here. So he joins the company here as the new finance director. These four partners who were there earlier, they were college friends. They were very close with each other. S has gone and joined the company. Now, in the AGM, what happens is PQR is appointed as the new auditor. Do the partners of the CA firm know the director of the company very, very well? The answer is yes. Can they do fraud together? The answer is yes, because they are too familiar with each other. This is called familiarity threat. It's called familiarity threat. That is basically this. That is, you can see here, partner becomes a director. Partner becomes a director. Remember, in this example which I gave you, in this self-review threat example, director is becoming a partner. Director becoming a partner. In this case, my dear student, partner is becoming a director. That is how it works. Okay, this threat to independence. Then we did the last one in ethics part, that is a part A. In that we did something called as you know, that is safeguards to independence, in which we did a code called TCCKD. Just a second. Let's see. What are the safeguards to independence the auditor can take? He should consciously consider whether he is doing the right thing or the wrong thing. He should have credible and adequate safeguards in place. For the auditor, it is most important that the public should have confidence in the quality of audit. The auditor should always have key fundamental principles in mind, that is integrity, objectivity, and of course questioning mind, that is professional skepticism. And auditor should either not accept the work or accept the work with safeguards, that is C, desist from the task, don't do the task, or you put in place safeguards, So we had this code called CCCKD. Are we there here, yes or no? This completes 7 questions of ethics. We now move to SA 210. Let's do it quickly. Let's start. As a 210, we have 5 questions. Question number 1 is preconditions. Question number 2 is contents in the engagement letter. Question number 3 is revision in the engagement letter. Question number 4 is on the screen. Here we are done. Before the auditor's appointment, please here, before the auditor's appointment, what should be, if the management imposes a limitation on scope, then what should the auditor do? And after the auditor's appointment, if the management imposes a limitation on scope, then what should the auditor do? Yeah, we have done this very well. Let's do it one by one and do a quick recap of this area. Let's start. What are preconditions to auditing? Very, very simple. Let's go for it. Please here. First, precondition number 1, we should first check whether FRF is applicable or not. Second point, we should obtain management agreement whether FS is as per AFRF, whether internal control is as the management considers necessary. And this point, management shall provide the auditor with all information, additional information on request, and unrestricted access to any person. Okay, I told you this has come in my CA final exam, so you can understand how old this question is. It has come multiple times in exams. Okay, CA inter as well as final. There is preconditions to an audit. And preconditions to an audit. Question number 1. Okay, question number 2. What are the contents of the engagement letter? We had done this. We had done a code called ORI ID form. ORI ID form. Objective and scope of the auditor will be covered here. Responsibility of the auditor, responsibility of the management, identification of AFRF, basically what the management will give to the auditor, and expected form and content of report, basically what the auditor will give to the management, and of course to the shareholders. In which format will he report? Simple. ORI ID form. Same code you will see here. ORI ID form. Comfortable till here? Okay. This question number 2. Contents of engagement letter. Question number 3. Normally the engagement letter will stay the same. For the period of 5 years for which the auditor is appointed. But however, there can be situation where the auditor may go for a revised engagement letter. And that can be because of situations, because of most changes in flow and so, because of misunderstanding of the objective, because of special terms or revised term, because of changes in financial reporting framework, legal and regulatory requirement, ownership, nature and size of the company's business, senior management, or other reporting requirements. This is what we had seen. Yeah. This question number 3, that is, revision of engagement letter is normally not required, but it is required if it is a situation of most changes in console. Yeah, so this you should know very, very well. This also has come several times in the examination. Let's do question number 4, my dear students. Very simple. If there is a limitation of scope in the limitation of scope that the management imposes before the auditor starts the work, even before I've signed the engagement letter, they are saying, don't check this, don't check this, don't check that, you're not allowed to check this, that, this, start putting headache. In that case, if limitation of scope is there, then auditor shall not accept the work, not accept, unless it is required by law or regulation to do so. Law or regulation to, yeah, so if the law or regulation requires, then the auditor will have to go ahead with the work. If not, auditor will not accept the work. Now, the main important one, let's start. If after the auditor has been appointed, the management imposes the limitation of scope. They say, sir, you have to sign a new engagement letter, change in the engagement letter they are requesting. So they will give some excuse. They will give the excuse like there is some circumstances, misunderstanding, restriction on scope. We saw it as CMR. I get affected if I am not able to reach the R level. But suppose if I am able to reach the R level and there is no case of lower assurance, then in that case I will tell the management, okay, let's sign the new engagement letter, no problem. But if the management, what information management is not giving me, if that is leading to lower assurance and not R level, it means I am doing a compromise, then it is my duty to check the implication on the audit and ask for them justification. If they are able to give the justification, good. If they are not able to justification, then that is not good. So let's see this. If they're able to give a justification, then in that case, I had told the German government example in this case to you all, that we have made investment in Germany, and suppose the government has got a law to confiscate those investments if some disclosures are made. Suppose if such a law comes, in that case, we will understand the management's issue. In that case, we will record the new engagement letter and we will perform our audit work and issue the report. When we issue the report, we will ensure that we don't make any reference to the original engagement or procedures performed under original engagement. Because if we do that, it will create unnecessary confusion in shareholders' mind. Okay. Second, if the justification is not proper, you remember the justification example which I gave? Which one? Assam, rainfall, football, Brazil, Argentina, Messi, Ronaldo, greatest country, India, from their USA, Trump, Putin, put out, all those things. You understand here, if reasonable justification is not given. If it is not given, in that case, we should not agree with the change in the EL. If management doesn't agree, in that case, management is insisting on change in the EL. In that case, we should withdraw from the engagement. Sorry, boss, I don't want to work with such people only. And I'll of course fill the resignation form, that is ADT3. Because if you fill 3, you become free. So I'll fill resignation form 3 and leave happily. In that case, I'll determine my legal obligation. That includes, of course, filling the ADT3 form. Are you there with me, yes or no? This completes 5 questions regarding 210. 210, 5 questions, let's go for it. First is preconditions. Second, contents of engagement letter. 3, normally engagement letter will be the same for 5 years. However, there can be situations because of which we have to go for a revised engagement letter, that is most changes in FLONSO. Question number 4, limitation of scope imposed on the auditor before the audit work starts, and limitation of scope imposed on the auditor after the audit work starts. But in the class, I had told you that question number 5, which is there, it has 5A, 5B, 5C, which is there in the book, which you have to read. But that is very simple. If you understood this example, that you'll be able to easily understand. Okay, this completes your 5 questions of this standard 210. Last area. This is fairly simple for us. So now we are doing SA 220 and SQC1. But because it is covered in our song, so it is very simple. First, now 8 questions breakup is what? First, we have question number 1, then we have question number 2 to question number 7, and then we have question number 8. Question number 1, let's do it first. It is, what are the elements of assurance, elements of quality control? Let's see this. First is what? Your farmer story. Let's start. Let's go to the story first, then we'll do the points. Tell me. Farmer's wife puts a turban on his head, puts a tilak on his forehead. He goes for the harvesting day. On the harvesting day, he roams around his mango farms. A big limousine car comes from there. Who comes out? Mukesh Ambani ji. Mukesh Ambani ji and the farmer shake each other's hand. They know each other from the past. Mukesh Ambani gives an order for 10 lakh mangoes. The farmer says it can be arranged. He whistles. A small boy comes running. He tells the boy, go climb the tree, get the mango. Climb the tree, get the mango. And after that, he gets the mango and the farmer checks the mango. That was the story. Quick version of the story that we did. Okay, tell me. Turban on the head, leadership responsibilities. Tilak on the forehead, ethical requirements. Mukesh Ambani is shaking hand, acceptance and continuance of client relationship. A farmer whistle, boy comes running, human resources. Chintu comes running. Chintu climbs the tree, gets the mango, engagement, performance. Engagement, performance. He gives the mango to the farmer. Farmer first checks the mango, that is monitoring, and then only gives it to the Mukesh Ambani ji. Easy, simple. These are the elements of quality control, PCR, elements of system of quality control, PCR. First is leadership responsibilities, ethical requirements, acceptance and continuance of client relationship, human resources, Chintu, engagement performance, Chintu climbs the tree, gets the mango. And finally, we have monitoring. Easy to understand this area? This for us, my dear students, is question number 1. Question number 2 to 7 is very simple. It is our dear song. Song covers entire area. 2 to 7 covered. Big song. Let's start singing it first, then we'll take the marking. Song is a combination of 2 songs, that is Koi Keh Kehta Rahe and We Will Rock You. So let's do both. Okay, let's start. 1, 2, 3, start. Leadership responsibilities, partners actions messages, shall emphasize on subtle policies, apt reports, raise concerns without fear, quality essential. Ethical requirements, a threat to independence, appropriate action, acceptance and continuance, obtain info, new engagement, continue or existing clients in TR, gap, ethics, matters, assignment of engagement team, CC Saral. Then we start our favorite thing, we bang. Engagement performance as per Saral documentation, consult on difficult matters, listed companies, EQCR, discuss significant matters. Don't date the report, tell EQCR. Monitoring document issues, identified how they were resolved, conclusions on compliance, relevant discussions, conclusions from acceptance, conclusions from consultations. We have done this. Song is beautifully covered in the content. This is SA 220. I told you always SA 220, if you do, SQC1 gets covered, except that question number 8. So that will cover. But first SA 220, let's see this, please here. How does the song play a role in our answer? Very simple. Leadership responsibilities, partners actions messages, shall emphasize on thorough policies, apt reports, raise concerns without fear, quality essential. Yeah. Ethical requirements, threat to independence, appropriate action, acceptance and continuance, obtain info. When do you obtain the info? New engagement continue or existing clients. What will you check? Clients integrity, R capability, ethics, sig matters. Clients inti, R cap, ethic, sig matters. Assignment of engagement team, CCs. We want our team to be competent and capable, and we should also tell them to comply with standards and regulatory and legal requirements. Okay? Engagement performance as per SIRL documentation. Documentation means everything you should note down. That is not written here, but you should note down all the issues. Documentation. Consult on difficult matters. Listed companies will consult with EQCR. Discuss significant matters. Don't date the report till EQCR. It means audit report should not be given until the EQCR report we have received. Okay. We should respect the EQCR, take their report, work on the weaknesses, and only then give the audit report. Okay. Then monitoring document issues. When you monitor, you should document which issues. Monitoring document issues identified, how they were resolved. So what issues you have identified, what issues, how did you resolve those issues, you will document. Conclusions on compliance with independence requirement. How did you comply with independence requirement? Which declaration you made the team member sign? Conclusions on compliance, relevant discussion sanctions, conclusions from acceptance. When you accept the client after the work got over, what is your conclusion? When you accept the work, was it the right work to accept or not? That you're writing in your documentation. Conclusions from consultations. What is consultations? Consultations means EQCR, when we consulted him, his consultation, did it benefit us or not? That will what you will monitor and you will document that matter. Easy. But entire song covers a big chunk. Song, if you know, such a big area, it's quickly covered on the exam day. Yeah. Last question number 8 is what we do. That is in relation to integrity. Please see here, understand with me. Integrity. Let's see this. Just a second. Read this. Sir, how do we come to know about the integrity of the client? So with regard to integrity of a client, matters the firm considers include, for example, what should you keep in mind? Let's see one by one. We have a code here called blame. How do you come to know about integrity of a certain person? You will look at the business reputation of that person. What kind of reputation this person? Business reputation. In the market, if the reputation of the person is good, then you feel that integrity is good. If not, it is not good. You look at the business practices. This person always does delay in paying the amount, always does delay in paying the amount. For some people, he has not paid also. So with his business practices, how he runs the business, we come to know that, oh, this person is not having integrity. But suppose if there is a person who will take loan in his name, but ensure that the supplier is paid on time. So then we say, oh, this person has good business practice. He has good integrity. Okay. The first 2 points in the code called blame, we have business reputation and business practice. L. If I'm doing the audit of Mr. A and Mr. A keeps telling me, Kartik sir, fees you charge less, no. Fees you charge less, no. Full time, low fees only, full time. I told, see, fees is 5 lakhs, you have to pay me that because that much work we are doing. I know, sir, some discount, you give some discount. I'll say, see, maximum I'll take from you is 4.7 lakhs. I cannot go below that. That much only maximum I can do less. Sir, please do audit in 10,000 rupees. No, sir, 10,000 rupees, please do no. 5 lakhs, 4.7 I have done, 10,000 he wants the audit. I'll just, sorry boss, I cannot do so low. You understand here, if a client is insisting for fees as low as possible, that is low fees, in that case, I hope you understand, my dear students, in that case, you will have low integrity for the client. You will feel the client is giving low fees because he wants the audit work should not cover many areas. See, if the client gives high fees, we'll get more manpower to do good audit. Client pays low fees, we'll put lesser people to do the audit. In that case, the audit will not be done properly. So I'll wonder, why does the client not want the audit to be done properly? Because maybe he is doing some fraud. Okay. Next. L, second point is limitation in the scope of work. If the client puts inappropriate limitation, don't check this, don't check that. In that case, I'll feel the client has lower integrity. Okay. So L square is done here. Then we'll go to A. We look at the attitude of the client. Attitude basically means what? Do they take the audit work seriously, or is audit work random work for them? So when we ask for them for documents are not sent immediately to the auditor. Immediately means at least within a week you should submit. They are giving it after 2 months, 3 months. I ask for debtors ledger. After 2 months, they are sending it. I ask for sales invoices. After 3 months, they are sending it. It means I'll feel that their attitude is not correct. Okay. After that, we have M. Client is involved in money laundering. Client is involved in criminal activities. In the company, there are 4 directors against 2 money laundering cases going on. One has done some 7 murders. One has done some 8 banks he has looted. Like that, people like such people are there. You understand here that is indication that the client may be involved in money laundering and criminal activities. That is M, money laundering. And E is I will evaluate. See, nice point. I will evaluate the reasons for appointing my firm and non-reappointment of the previous firm. Example: I am doing the audit of A Limited. Before me, Mr. Manoj was the auditor of A Limited. I will think, why is A Limited appointing me? Why are they not reappointing Manoj? I'll find that reason. That reason, if it is genuine, then I'll have integrity for the client. If the reason is such that Manoj was not being paid fees only, in that case, I'll lose the integrity for the client. So we have a code called blame. We have a code called. This completes our 8 questions regarding ethical requirements. Quick recap. Also, sorry, 8 questions regarding SA 220. Quick recap. Question number 1, elements of quality control. That is basically your farmer story. Question number 2 to 7 is covered in the song. Question number 8 is this integrity. What will you check of the client? You will check the blame area. Comfortable till here? Okay. 7 plus 5 plus 8 in total 20 questions are there in chapter number 11.